Everyone, good morning to all of you. Welcome once again to this live session. Market already open. कल के ही लेवल है, कोई खास चेंज हुआ नहीं है. सेलिंग का ट्रेड था क्रूड ऑयल में, साइडवे चला गया था रेजिस्टेंस एरिया पे, हल्का सा गैप डाउन ओपन हुआ है. लेट्स सी टारगेट देता है तो ज़्यादा बड़ा टारगेट एक्सपेक्ट नहीं है. मुझे लग रहा है यहाँ तक नीचे तक आएगा, यहाँ से बाइंग ही करेंगे वापस. ट्रम्प चाइना पहुँच गए हैं, देखते हैं वहाँ मीटिंग से क्या निकल के आता है. एंड 30 लंदन सेशन ओपन हो जाएगा, इवनिंग 5:30 न्यूयॉर्क सेशन. टाइम पे पीपीआई का डेटा और कोर पीपीआई का डेटा है. 7 बजे यूएस मार्केट ओपन, 8 बजे क्रूड ऑयल की इन्वेंट्री. कल फेड चेयरमैन नॉमिनेशन का वोट होना था, नहीं हुआ. आज भी हो सकता है, देखना पड़ेगा कब होता है. एग्जैक्ट टाइमिंग नहीं आ रही है. क्रूड ऑयल की इन्वेंट्री है, इंपॉर्टेंट रहेगी. कोई और न्यूज़ आती है तो विल सी दैट. फिलहाल के लिए और कोई न्यूज़ भी नहीं है. इंडियन मार्केट की बात करें तो दोनों ही निफ्टी बैंक निफ्टी स्पॉट में फ्लैट ओपन हुए थे, हल्का सा ऊपर आके वापस सेलिंग आ रही है. कल तो मार्केट बिल्कुल एक तरफा था. ट्रेंडिंग, 100% ट्रेंडिंग मार्केट. नॉट, मैंने कल ही बताया था, एक सिंगल कैंडल भी प्रीवियस 15 मिनट की कैंडल के ऊपर क्लोज नहीं हुई थी चार्ट में. ऑलमोस्ट फ्लैट ही ओपन हुआ है. थोड़ा सा बाइंग आई है, फिर से सेलिंग का ही प्रेशर दिख रहा है. कुछ खास तो है नहीं, मुझे लग नहीं रहा मोमेंटम हो रहा है. देखना पड़ेगा. कल ट्रेंडिंग था मार्केट. कल तो आई क्लोजिंग होते होते काफ़ी ज़्यादा हाई चले गए थे. फिलहाल अगर आप चेक करोगे अभी करंटली मार्केट, एक बार पहली कैंडल सेटल हो जाने देते हैं. इंडिया विक्स को अगर चेकआउट करोगे तो 19 काफ़ी हाई वॉलेटिलिटी है. 19 पहुंच चुका है. 20 पे ओपन हुआ था, 20 के अप्रॉक्सीमेटली ओपन हुआ था, करंटली एट 19. एंड निफ्टी में अगर देखोगे, कल वैसे एक्सपायरी है सेंसेक्स की. निफ्टी में अगर अभी देखोगे तो एट दी मनी में कॉल और पुट जो भी बने हुए हैं उनकी आई भी हाई ही है, 18 के आसपास बनी हुई है अभी भी. तो वॉलेटिलिटी काफ़ी हाई है. ठीक है, कहीं से भी नहीं लग रहा वॉलेटिलिटी कम बनी है. वॉलेटिलिटी इज टू मच हाई. नेक्स्ट वीक काफ़ी इंपॉर्टेंट हो सकता है. एक बार यूएस प्रेसिडेंट चाइना से वापस आ जाए, मुझे लग रहा है शायद उसके बाद फिर यूएस वापस मिलिट्री एक्शन स्टार्ट कर सकता है ईरान के अगेंस्ट, अगर कुछ खास तरक्की नहीं होती है बिटवीन यूएस एंड ईरान कॉन्फ्लिक्ट इनके बीच में. तो ध्यान रखना थोड़ा सा मार्केट का. दीज टू लेवल्स आर वेरी इंपॉर्टेंट. लास्ट वीक मार्केट ने निफ्टी में वीकली टाइम फ्रेम पे भी एक बड़ा ब्रेकडाउन किया है। 2 दिन बचे हुए हैं ब्रेकडाउन पे। कैंडल क्लोजिंग पे मुझे लग रहा है नीचे ही क्लोज होगी, बिलो 23,800। उस केस में एक्सपेक्ट करेंगे प्राइस 22,900 और फिर 22,000 के आसपास भी चला जाए वापस, जिस तरह से ब्रेकडाउन हुआ है, अगर रिकवरी नहीं आती अगले 2 दिनों में। बाकी वापस क्रूड ऑयल आएगा रेजिस्टेंस पे, वहाँ वापस सेलिंग करेंगे। पहली कैंडल क्लोज हो गई है निफ्टी में, वाह कंप्लीट रिजेक्शन कैंडल है स्पॉट में। तो फ्यूचर में भी सेलिंग का ही प्रेशर दिख रहा है। बिटकॉइन को देखते हैं अभी थोड़ी देर में, लेट मी चेक।
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. President Trump has set off for China for the first U.S. presidential visit in almost a decade. He faces an emboldened Xi Jinping as the Iran war clips American leverage. Traders renew bearish bets on U.S. Treasuries. Expectations grow that the Fed will raise interest rates as oil and inflation push higher. And crude shipments from Iran's main export terminal appear to have stopped as Bloomberg learns the UAE is said to have hit the country earlier in the war. It's just gone 8 a.m. across the Emirates. I'm Joanna Bersachi in Dubai. Well, the ceasefire is still holding up in this part of the world, but at the same time, the focus is very much going to be on that Trump-Xi summit that's taking place in the coming days. We understand that President Trump is on his way there. He should be landing around 7:45, 8 a.m. Eastern time, which is evening Beijing time. So we'll expect more fireworks in the next coming days, and we're going to give you a preview throughout the show on what to expect. And certainly the markets are on tenterhooks to see whether there can be any economic breakthroughs, and even on the diplomatic front as well, whether China can exercise a bit of leverage on Iran. So all being watched out for the next couple of days. As for markets, S&P futures leaning towards the green. Yesterday, we had much hotter than expected inflation data. The biggest jump in the last 3 years, a CPI headline rising at 3.8%. No surprise, the catalyst is coming from higher energy costs. We speak about the price of oil, the fact that we have jumped so much this year. Brent this morning sitting at around $106. But I also want to point out, and this is something that sort of tallies up with the chart that I was showing earlier in the week, real wages have started to drop, i.e., nominal wages are not rising as fast as inflation. And why is that an issue? Because it's hitting consumer sentiment and consumers' perception about the state of the U.S. economy. That is why the sequencing is important here. Higher inflation, higher gasoline prices, lower real wages, it's all going to hit consumer sentiment as we think about those midterms later in the year. 10-year yields also moving higher, 4.46. We have covered 10 basis points in the last couple of days. Again, an inflation story, but not just in the U.S. Of course, one of the other big catalysts is the U.K. I'll get to U.K. gilts in just a moment. But interestingly enough, not sure here why it switched around, but pound hasn't done a whole lot versus the USD. Which tells you that, at least as far as the currency is concerned, somewhat being a bit immune to some of the political pressure that's being piled on the UK Prime Minister now. And actually, the markets there are focusing more on perhaps the Bank of England's hiking outlook as opposed to public finances. So let's switch over. And you will see very clearly from this chart that UK gilts have massively underperformed all other fixed income markets. So yes, there is an inflation story. But what this chart is telling you, and this is the 30-year UK yield, going back to the beginning of the year, we're up 56 basis points. We have massively underperformed, and that is because markets are accounting for perhaps a leadership change, a replacement of Keir Starmer with somebody from the harder left, with more perhaps market-unfriendly proposals. And there is a risk here of further fiscal slippage. So that is being priced into the UK long end, and not just 30-year, but 10-year as well. Over the last couple of days, UK 10-year gilts have moved up 15 basis points. So a big focus for markets. But let's go back to Asian markets now. Avril Hong is standing by for us in Singapore. Avril, what are you watching out for today?
Yeah, we were expecting a bit of a down day, midweek session, right? Given how the US CPI print prompted the sell-off in the Wall Street stocks, the chips, that was where the drag really was. But take a look at what you're seeing today. Of course, on the Kospi yesterday, we were talking about that citizen dividend and how that was later clarified as not being a windfall tax. The idea of Jensen Huang, as we've learned, being in China for this trip along with the US president has really lifted the mood in equities at least, and we're seeing that reversal today. The Kospi was 3% down at one point. The stock of Samsung was down about 6%. You're still seeing that green thanks to that lifting of the mood from Jensen Huang being in the region. I would say, though, that for the likes of Samsung, you're still seeing the underperformance versus SK Hynix, and this has to do with the labor union woes that the chip company is facing that's raising some concerns about supply disruptions for memory chips. But overall, you are seeing a bit of a better day for the moment. Jumana?
April, thank you so much. I've got to say, Kospi has to be one of the most volatile indices out there based on the day-to-day performance. All right, President Trump is on his way to Beijing for his highly anticipated meeting with Chinese leader Xi Jinping. He'll arrive facing an emboldened Xi, just as his own hand is constrained by the conflict in Iran. Let's go live to Beijing and our chief North Asia correspondent, Stephen Engel, who is very much in China, as you can see from the background there. Stephen, you know, how big are hopes of some form of either a diplomatic breakthrough or an economic breakthrough? And the fact that President Trump is going all the way to China signals that there must be something on the table to look forward to in terms of an agreement.
Sure. I think the expectations have vacillated quite a bit in the last few days. Leading up to this, the speculation was really that the war in the Middle East and Iran was going to overshadow just about everything. And you think about it, what would be the hypothetical deliverables for the White House if indeed China sort of stands its ground and demands that the war end or the blockade in the Strait of Hormuz ends, and all of a sudden they dominate their very short time together, really only about 36 hours from the time that they have their first meeting in the Great Hall of the People just down the moat here from the northeast corner of the Forbidden City, until they have that Friday lunch and he gets on a plane early afternoon and heads back Friday to Washington, D.C. There's not a lot of time, and if they spend it all on Iran, they might not get the deliverables both sides kind of want. And that list of U.S. executives that's on the plane and also will be meeting the U.S. entourage here later tonight really tells the story. Jensen Huang now being added to that Air Force One itinerary. That really opens up a lot of speculation as to whether indeed the most advanced AI accelerators from NVIDIA could be a part of the negotiation. Maybe it's already a done deal.
Yeah.
The CEO of Micron also going to be here. The CEO of Qualcomm going to be here. A lot of big names, including Kelly Ortberg of Boeing. A Boeing deal is expected to be announced.
Yeah, it's interesting that when it was confirmed that Jensen Huang was flying to China, you actually saw a pop in NVIDIA share prices and after-hours trading. So certainly some optimism around what we can expect on those chip sales. Stephen, this is also the first time the two leaders are going to be meeting since the tariff showdown of 2025. And I just wonder whether China's hand has been strengthened from that, and that they've identified that they have a key point of economic leverage, which is their hold over critical resources, over those rare earth minerals.
Absolutely, they've gained confidence and they've gained leverage. Throughout the tariff barrage from Washington last year, China, by most accounts, weathered that pretty well. In fact, took over some of the levers and put it back onto the United States, in particular in rare earths. You mentioned it. In the industry, they call them the golden screws, if you will, rare earths, the batteries that are needed for the global manufacturing sector. China has the lion's share of those critical minerals, and they found great leverage. And also, if you look at the energy space as well, China has been spending the last couple of decades investing heavily in renewables. So they've diversified and, put resilience into their energy mix. Sure, a lot of their power generation is still from coal. They still are the world's biggest importer of crude. but they have diversified to wind, solar, hydro, nuclear, and the like. So Xi Jinping can also stand up there with Donald Trump and essentially feel confident, fairly confident. I mean, keep in mind, they don't want the war to go that much longer in the Middle East, but they can stand fairly confident that they are resilient. But really, it's that lever on the tech front, on the rare earths, that does give China a lot more bargaining power, if you will. That's why I think the mix of U.S. executives who are willing to make the long trip over here for a very short amount of time, FaceTime with Xi Jinping, could be telling indeed. It's speculative right now, but there could be tech deals, there could be soybeans. Cargill is coming here, and Boeing, again, the CEO of Boeing.
Yeah, some of the biggest CEOs in the world flying over for a 36-hour trip. That does tell you a lot. Chief North Asia correspondent Stephen Engel in Beijing. Thank you. Well, satellite images show oil shipments from Iran's main export terminal appear to have come to a standstill over the past several days. Kharg Island remaining idle would increase the pressure on the country's remaining storage facilities. Bloomberg has also learned the UAE has retaliated against Iranian attacks on its territory earlier in the war. Sources say one of those was an Israeli-coordinated response to an Iranian strike on the UAE's Barouj petrochemicals facility last month. To unpack the latest, Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia. Stuart, lots to talk about here. I actually want to start with the story of the next couple of days, which is this Trump-Xi summit that's taking place. How much are we expecting Iran to feature there?
Yeah, I mean, the US, I think, is downplaying, and they're saying it's going to be more about trade. I think the reality is it has to feature. You cannot separate the Iran war from trade or from anything else right now that's having a global impact. What will be interesting is China's response. You know, at the moment or to date, it's been a little bit in the shadows, I would say. It's not really engaged too much with it. And it has a really difficult balancing act because here's the reality. Yes, it's very dependent on Iran for its oil imports, amongst other things. But if you look at the trade numbers, it's way more important in terms of the other side of the Persian Gulf and the Arab states. So it's got a difficult balancing act here where it clearly wants peace, but at the same time, it's got to try and sort of stay friendly with both sides. So we'll see.
Yeah, economic stability, always top of mind for China. There have been reports, a few reports that have emerged the last couple of days indicating that the UAE has retaliated against Iran. Our own colleagues put out an article yesterday as well. What do we know about UAE's participation militarily in this war?
So I think it sort of underlines two things. One is sort of a theme that's been going through this and, you know, that we've seen since the beginning, which is that the UAE is phenomenally well equipped when it comes to its military. And we've seen that on the defensive side, right? I mean, we've had 2,500, 3,000 missiles and drones thrown at the country. It's intercepted the vast majority of them, you know, and we've seen that with our own eyes. So I think this adds another leg and just underlines this fact that the UAE has a very significant military force. It's well disciplined. We know it's incredibly well equipped. And as the leadership has repeatedly said, you know, don't mistake the prosperity that you see around you for a country that has an inability to defend itself. Clearly it does.
Yeah.
And it's willing to do that on all fronts.
Yeah, as evidenced by reporting. Another interesting story up on the terminal by our energy colleagues. Kharg Island, the loadings onto tankers seem to have completely petered out in the last couple of days, based on satellite imagery. Does that suggest maybe that the U.S. naval blockade is actually working insofar as it's cutting off Iran's ability to export its oil?
Yeah, possibly. It's based on a few days of satellite images, you know, and I give a shout out to Julian Lee, who's done the work on this.
Yeah.
There's some phenomenal work. Looking at the satellite imagery from Kharg Island, we've had no tankers loading for 3 days. That's certainly unprecedented since the conflict began. At the same time, he's looked at the storage tanks and the shadows they're casting on Kharg Island itself. Again, incredible work, which suggests that they're probably starting to fill up. So those two combined certainly suggest, and again, this is based just on the images we can see, that potentially they are running out of storage space, they're running out of tankers to put oil on. We'll see over the next couple of weeks whether that trend persists. But yes, that is the implication.
But it is relevant in the context of how this impasse might be broken, especially if Iran starts to feel the heat there. Stuart, thank you so much. Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia. Well, up next, chief economist and head of OCBC's Group Research, Selena Ling, unpacks the divergence between financial markets and the real economy. More details next.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
तो गाइस निफ्टी को देखोगे, लुक एट द निफ्टी इज लुक्स लाइक फ्यूचर में सपोर्ट पे पहुंच गया है। ठीक है, 15 मिनट इंट्राडे के सपोर्ट पे है निफ्टी। यहाँ से मैं एक्सपेक्ट करूंगा थोड़ा बहुत पुल बैक आएगा निफ्टी में। कोई कॉल सॉर्ट करना, पुट सॉर्ट करना चाह रहा है तो एक अच्छी अपॉर्चुनिटी है। यहाँ पर कंसोलिडेशन कर सकता है या फिर थोड़ा और ऊपर जा सकता है जब तक प्राइस अब वापस क्लोजिंग नहीं देता 23,290 के नीचे। मैक्स टू मैक्स उस केस में डाउन एक्सपेक्टेड रहेगा। प्राइस कैन गो टुवर्ड्स 23,150। तो 23,300 से लेकर 23,200 से लेकर 23,300 ये एक सपोर्ट रेंज बन सकती है वापस से इन निफ्टी 50 फ्यूचर। ठीक है, यहाँ से रिवर्सल कह सकते हो, पुल बैक कह सकते हो, जो भी कहना है, एक्सपेक्टेड रहेगा प्राइस में वापस। expected, price taken the support from 23,300 फ्यूचर 23,300 के फ्यूचर के अराउंड सपोर्ट लेना शुरू कर दिया। ऊपर कहाँ तक जा सकता है अगर बात करें तो प्राइस में निफ्टी में फ्यूचर में इस ऊपर बाकी जहाँ तक बात करें तो 23,600 टू 650 तक जा सकता है फ्यूचर में, वहाँ तक का स्पेस है हमारे पास। आज इसी रेंज पे रहना चाहिए, कोई न्यूज़ नहीं आती है तो मार्केट विल होल्ड दिस रेंज फ्रॉम 23,300 फ्यूचर टू 23,600 टू 650। ये 300 पॉइंट की रेंज मुझे लग रही है आज रहनी चाहिए। ऊपर निकल गया अगर 23,650 660 के ऊपर सस्टेन किया तो फिर पॉसिबिलिटी है प्राइस और ऊपर जा सकता है, बट जिसके मुझे चांसेस कम ही लग रहे हैं अभी। यहाँ पर दो दो रेजिस्टेंस हैं तो काफ़ी स्ट्रॉन्ग है, 23,600 टू 650 इन फ्यूचर। फ्यूचर चार्ट, ठीक है, स्पॉट की चार्ट की बात नहीं कर रहा हूँ, फ्यूचर का चार्ट। वाओ, 23,300 का पुट 220 से 190 पहुंच गया है। पहले मैंने बताया था कि यहाँ पर सपोर्ट है, 30 पॉइंट मिल रहे हैं, लेट्स सी कितना और देता है। क्या कंप्लीट एक तरफा रिवर्सल आएगा या फिर थोड़ा रुकता भी है। 3,300 का पुट शॉर्ट किया था 220 पे, नाउ 185। 80 नाउ 30 पॉइंट मिल चुके हैं, अगर निकलना है तो निकलो, नहीं तो एसएल कॉस्ट पे रख के 150 का दूसरा टारगेट रख सकते हो इसमें 23,300 के पुट में। टारगेट इसका 150 रहेगा, 150 तक जाना चाहिए अगर ये पूरा रिवर्सल करता है तो। एक्सपायरी में काफ़ी टाइम है तो इतना थीटा डीके नहीं मिलेगा, बट थोड़ा सा आउट ऑफ दी मनी है तो डेल्टा उतना है नहीं, आईवी भी बड़ा हुआ है तो हो सकता है जाए, बट वॉलेटिलिटी देखने के लिए मिल सकती है, वेगा काफ़ी हाई है। ठीक है, ऊपर ये 23,600 650 फ्यूचर में काफ़ी स्ट्रांग है। कोई न्यूज़ नहीं आएगी तो इसका ब्रेक होना ऑलमोस्ट इम्पॉसिबल लग रहा है फिलहाल मुझे। ओपन इंटरेस्ट भी अगर चेक करें तो वही 23,650। कल यहाँ पर काफ़ी हैविली कॉल सॉर्ट करके गए थे। मैं कल आप लोगों से बात कर रहा था, याद होगा आप लोगों को। 23,550 650 एंड 750 काफ़ी हैवी कॉल राइटिंग हो रही है क्लोजिंग होते होते। एंड अभी देखोगे तो ऑलमोस्ट प्रीमियम ठीक ठाक गिर चुका है कल की क्लोजिंग के बाद। ठीक है, ऑप्शन बाइंग का डे मुझे नहीं लग रहा है। आईवी बड़े हुए हैं तो ऑप्शन बाइंग के लिए तो बहुत ही रिस्की हो जाएगा मार्केट। ऑप्शन बाइंग के लिए आईवी थोड़ा सा कम होनी चाहिए, बट हाँ वैसे ऑप्शन बाइंग हो भी सकती है बिकॉज आईवी बड़े हुए हैं तो वॉलेटिलिटी काफ़ी हाई रहती है नॉर्मली। अभी देखोगे एट दी मनी का आईवी ऑलमोस्ट 20 पहुंच गया, अभी थोड़ी देर पहले 18 था, नाउ इट इज़ 20। इसका मतलब काफ़ी ज़्यादा नर्वस हैं ट्रेडर्स करंटली ट्रेड करते हुए। भी आईवी अगर इंक्रीज हो जाए, नॉर्मल जो निफ्टी का आईवी रहता है दैट इज़ बिटवीन 12 टू 14। अगर एट दी मनी की आईवी बढ़ जाए, ठीक है, एट दी मनी की आईवी हर स्ट्राइक प्राइस का अलग अलग रहेगा। एट दी मनी का अगर आईवी 14 के ऊपर जितना ज़्यादा होगा, समझ जाओ ऑप्शन सेलर्स के लिए प्रीमियम उतना अच्छा है सेल करने के लिए। इवन दो वहाँ पर वॉलेटिलिटी भी हैवी रहती है, बट उस केस में जब आईवी काफ़ी हाई रहता है तो चांसेस हैं मार्केट ट्रेंडिंग होने के चांसेस, अब किस डायरेक्शन में होगा ये अलग बात है, बट मार्केट नॉर्मली ट्रेंडिंग होता है जब भी आईवी काफ़ी हाई होते हैं। नॉट ऑलवेज बट ऑलमोस्ट विन अ वेरी हाई प्रोबेबिलिटी। तो वहाँ पर प्रीमियम काफ़ी हाई मिल रहा होता है, फ्री मनी कह सकते हो एक तरह से आप। क्योंकि यहाँ पर अगर ये 20 का आईवी चल रहा है वीकली एक्सपायरी में तो 20 पॉइंट फ्री के ही हैं एक तरह से। कल क्लोजिंग होते होते निफ्टी जब जा रहा था एक्सपायरी में तो एट द मनी की आईवी ऑलमोस्ट 40 के आसपास पहुंच गई थी। बाकी जितना आप आउट ऑफ द मनी जाओगे उतना आईवी ज़्यादा होता है। जैसे अभी देखोगे आउट ऑफ द मनी में निफ्टी में तो आईवी लगभग 30 के आसपास चल रहा है, 40 के आसपास चल रहा है बिल्कुल डीप आउट ऑफ द मनी में जाओगे। वो नॉर्मली हम एटीएम ही देखते हैं बिकॉज वही प्राइस सबसे ज़्यादा इंपॉर्टेंट होता है। तो करंटली 19-20 के आसपास चल रहा है, विच मीन्स वेरी गुड फॉर ऑप्शन सेलर। काफ़ी हाई प्रीमियम पे ऑप्शन सेल करने के लिए मिलेगा। बाकी एक बड़ी इंपॉर्टेंट चीज़ देखने के लिए मिल जाएगी, निफ्टी का स्ट्रैडल देखोगे करंटली तो ऑलमोस्ट 450 पॉइंट के आसपास चल रहा है। नॉर्मली जो स्ट्रैडल होता है वो ये बताता है कि वीकली रेंज कितनी है, क्योंकि आज पहला दिन है, विच इज अप्रॉक्सीमेटली 500 पॉइंट। तो एक्सपेक्ट कर सकते हैं कि एटलीस्ट, ठीक है ये कोई फिक्स नहीं होता, बट वेरी हाई प्रोबेबिलिटी की जो भी स्ट्रैडल के पॉइंट हैं उनको आपस में आप ऐड कर दो तो वीकली उतनी रेंज बना सकता है मार्केट। तो अभी देखोगे तो विच इज अराउंड 480 पॉइंट। ठीक है, तो लगभग 500 की 450 टू 500 पॉइंट लग रहा है मार्केट इस वीक रह सकता है अभी भी। कल 23,300 का जो कॉल, सॉरी माफ करना, पुट शॉर्ट किया था 220 पे, अगेन 180 चल रहा है। देखते हैं, 180 का पहला टारगेट वैसे ही पहले भी हिट हो चुका है। 150 तक इसका फाइनल टारगेट, और उसके नीचे गया तो फिर सीधा 100 का ही रहेगा। 30 पॉइंट मिल चुके हैं, वैसे निकलना चाहें तो निकल भी सकते हैं ऑप्शन सेलिंग में, अगर होल्ड करना है तो फिर ट्रेल करना। वापस एक अपॉर्चुनिटी दी थी थोड़ी देर पहले वापस री एंट्री की। फिलहाल कमोडिटी मार्केट भी साइडवेज ही है, कुछ खास मूव चल नहीं रहा है। $23,300 का पुट नाउ ट्रेडिंग एट 170। लेट्स सी 150 तक भी जाता है नहीं जाता है। निफ्टी टेकन द गुड सपोर्ट, निफ्टी फ्यूचर बाय द वे। याद रखना जो आपका ऑप्शन का प्राइस है मैंने पहले ही बताया है, दैट इज अलाइंड विद द फ्यूचर चार्ट। ठीक है, फ्यूचर चार्ट के अकॉर्डिंग ही चलता है। थोड़ी देर साइडवेज जाए तो बेटर है मेरे क्योंकि सडन मोमेंटम आया है फ्यूचर में। एक पॉसिबिलिटी और है क्रूड में कि क्रूड एक बार और चला जाए ऊपर की ओर आज, वापस से रेजिस्टेंस जोन की ओर। कल काफ़ी देर साइडवेज चला गया था, रेजिस्टेंस पे देखोगे आया था अप्रॉक्सीमेटली इस एरिया के आसपास, शाम को 4 बजे के आसपास आया था, क्लोजिंग क्लोजिंग होते होते वहीं पर क्लोज हो गया। अभी तो देखोगे फर्स्ट 15 मिनट की कैंडल के अंदर ही है। ऑलमोस्ट हिट होने वाला है टारगेट। 23,300 का पुट शॉर्ट किया था 220, 180 पहला टारगेट। 150 दूसरा टारगेट 155 चल रहा है करंटली। इसके नीचे आया तो फिर सीधा 100 का ही फाइनल एक और टारगेट रखेंगे। आगे जो लोग निकल गए थे बीच में एंट्री मत करना। जो सेकंड टारगेट पे निकलना चाह रहे हैं वो निकल सकते हैं सेकंड टारगेट पे भी, या क्वांटिटी हाफ और कर सकते हैं। 150 के नीचे अगर जाता है तो फिर 100 का ही टारगेट रहेगा उस केस में। क्रूड ऑयल भी इंपॉर्टेंट रहेगा। 9838 40 पे क्या कर रहा है। 838 40 के ऊपर अगर ये भी निकला तो पॉसिबिलिटी है ये भी और ऊपर। ये रेजिस्टेंस है फिलहाल के लिए क्रूड ऑयल का। ऊपर अगर निकलता है तो फिर हम पॉसिबिलिटी है वापस फिर से एक बार ऑल टाइम हाई के आसपास जा सकते हैं। $23,300 का पुट 150 आ गया है सेकेंड टारगेट। अगर निकलना चाहो यहाँ पर भी फाइनल में बुक करके निकल सकते हो। ऑलमोस्ट 60 पॉइंट मिल चुके हैं इसमें। ऑप्शन सेल किया था, ठीक है, बाई नहीं किया था, ध्यान रखना। 23,300 का पुट ऑप्शन है 220। 180 फर्स्ट टारगेट, 150 सेकंड टारगेट। 150 के नीचे अगर गया तो फिर 100 का एक और फाइनल टारगेट रखेंगे। बट वो वही लोग जाना जो थोड़ा सा ज़्यादा हैवी रिस्क ले रहे हैं और क्वांटिटी है, अदरवाइज निकल गए हो फर्स्ट टारगेट में, सेकंड टारगेट में 30 पॉइंट 60 पॉइंट में, तो फिर मत लेना, फिर रुकना मत। 150 के नीचे ब्रेक ही नहीं कर रहा ये, लगता है थोड़ा साइडवेज जाएगा तभी ब्रेक आएगा। फ्यूचर देखोगे 23,500 पहुंच गया है। ये 23,300 का पुट 150 के नीचे ब्रेक ही नहीं कर रहा है। ऑलमोस्ट 23,300 से फ्यूचर में 180 पॉइंट का मोमेंटम आ गया, 23,500 पहुंच गया। हम ऊपर स्पेस है अभी भी, 23,600 टू 650 जा सकता है, बट ये 150 के नीचे ब्रेक नहीं कर रहा है, तो थोड़ा कॉशियस रहना। हल्का सा पुल बैक आया, इसका प्रीमियम इंक्रीज होगा थोड़ा, साइडवेज जाके अगर जाए ऊपर तो बढ़िया है डब्ल्यू बनाता हुआ, नहीं तो मुझे लग रहा है ये टारगेट तक भी पहुंच जाएगा, ये 100 पे नहीं आएगा। का IV 19 चल रहा है, डेल्टा 36 माइनस 0.36। ठीक है, फाइनली 23,300 ने 150 भी ब्रेक कर दिया है। देखते हैं अब 100 का फाइनल टारगेट। याद रखना 100 के लिए वही लोग जाना जो थोड़ा रिस्क ले सकते हैं, ठीक है। मार्केट ऑलरेडी मूव कर चुका है, साइडवेज गया। आज पहला दिन है, इतना थीटा डीके तो नहीं होगा कि पूरा 50 तक पहुंचा दे, 100 तक पहुंचा दे। रिवर्सल आया तो हो सकता है वापस 200 के आसपास चले जाएं। निफ्टी रोरिंग एट दैट पर्टिकुलर लेवल, फ्यूचर रुका हुआ है 23,300 प्रीमियम, ऑल्सो एट 150 कंटिन्यूसली। क्रूड ऑयल मुझे लगता नहीं 9,200 के नीचे किसी भी हालत में जाएगा। ये लेवल मुझे काफ़ी स्ट्रांग लग रहा है। अब लग रहा है शायद वॉर के सिनेरियो फिर से बन सकते हैं। ये लेवल भी आपका देखोगे 2 बार टेस्ट हो गया है, ये कल दूसरी बार टेस्ट हुआ था। अगर ये इस लेवल के नीचे नहीं जाता है 9,200 के नीचे, तो कुछ एक ऐसा प्राइस एक्शन है। तो अगर इसका ब्रेकआउट हुआ तो हम वापस आई थिंक 10,800, हाँ 10,800 के आसपास शायद वापस जा सकते हैं उस केस में। approximately all time high again possible if the breakout is happen, and mainly अगर ऐसा होता है तो मुझे लग रहा है न्यूज़ की वजह से ही होगा, बिकॉज अदरवाइज ऐसा नीचे सपोर्ट, इतना स्ट्रॉन्ग सपोर्ट बनाने का कोई रीज़न नहीं है। ठीक है, ये स्ट्रॉन्ग फिर भी हमारा रहेगा, यहाँ से एक ही बार सेलिंग आई है तो अभी भी स्ट्रॉन्ग ही है। 9,200 के नीचे नहीं जाता प्राइस, हैविली शॉर्ट मत करना। 9,200 के नीचे चला गया तब फिर हम $23,300 पुट स्टिल एट 150, अभी भी नीचे नहीं आ रहा है। इंडेक्स भी थोड़ा साइडवे जाना शुरू हो गया है फ्यूचर में, करंटली है 23,500 फ्यूचर निफ्टी। बाय द वे कल सेंसेक्स की एक्सपायरी है एज पर द न्यू रेगुलेशन। अगर आप ऑप्शन सेल करते हो तो ध्यान रखना, जो आपका मार्जिन ब्लॉक होता है नॉर्मली उससे 2% एक्स्ट्रा मार्जिन ब्लॉक होगा एज पर द न्यू रेगुलेशन सेंसेक्स की एक्सपायरी में।
Andy Burnham will want to stamp his authority over Labour's economic policy as well as over the country as a whole.
OK, well, let's see if he gets a seat in Parliament first. For now, Tim Bale, Professor of Politics at Queen Mary University of London, thank you very much for your insights. Well, coming up on Daybreak Europe, JP Morgan CEO Jamie Dimon says fixing stupid trade issues between the US and Europe would pave the way for better growth. We'll bring you more of that exclusive interview next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back to Bloomberg Daybreak Europe. Now, the JP Morgan CEO, Jamie Dimon, has warned the UK that the bank could reconsider plans to invest billions in its new London headquarters if Britain becomes hostile to banks again through higher taxes. In an exclusive interview with Bloomberg's Francine Lacroix in Paris, Dimon said he objects to what he described as roughly $10 billion in additional taxes paid by JP Morgan, adding that it is not right or fair. Meanwhile, Dimon said resolving what he called stupid trade disputes between the US and Europe would help drive stronger economic growth. He also argued that a stronger Europe is in the best interest of the United States.
I would say that Europe, including the UK, know what to do, and it's the Draghi report. There are 300 items in there about common capital markets, common regulations, allowing cross-border in the EU competition. There's huge regulatory, not tariff, but regulatory burdens. They need to do the same thing in the UK. I think Keir Starmer is a very smart guy. Politics is really tough. They're in a bind because of debts and deficits, and they inherited a lot of that. I think the world of Rachel Reeves, and they got to be tough. They got to say, we're going to do these things. In the short term, may not be great, but governments have to get the stuff done right that grows the economy and militarily. And I think they need to work close with Europe. And if you remember, Keir Starmer and President Macron, they were going to work closer. Not reversing Brexit, but military alliances, intelligence alliances, making sure the economies have economic relations good for both the continent and good for Europe, good for the UK.
You're building a big mega project in Canary Wharf that everyone is quite excited about. Does this potential political instability actually change your view on everything, or do you see costs going up? Or are you worried about taxation?
Not political instability, but if they become hostile to banks again, yes. I mean, I've always objected to the fact, we didn't damage the UK in any way, and we paid probably $10 billion of extra taxes by now. I don't think that's right or fair. If that happens too much, we will reconsider.
Look, I know you've also looked a lot at Europe and funding, and especially when it comes to security. How much time are you spending making sure that defense companies, that companies in Europe have enough funding from JP Morgan to make sure that they can, defend
a lot.
The continent?
So we have this huge effort. We deploy over the years $1.5 trillion to help. It's not just resiliency, so it's even medicines and rare earths, which would be defense, semiconductors, defense, but it's anything you need. So Europe needs LNG. So we look at that as resiliency for Europe, not LNG in America, but shipping here is resiliency. So we have professionals doing it. We've got an unbelievable advisory group. We've dedicated 30, 40 people. We're doing research now, which you might be interested in, across the shipbuilding ecosystem, across the active pharmaceutical system, the rare earth system, and then having public policy, which puts us in a better position. We, the democratic world, should never have gotten here where we're so reliant on other people, potential adversaries for rare earths. And we did. Right. So don't cry over spilled milk, but let's fix it. And we got to fix it right away.
And this is good for the U.S. Does the U.S. need stronger allies?
This is good for the U.S., and I think having strong allies is good for the U.S. So my view is we need a stronger NATO. They're doing that, by the way. So, our president pushed them a lot. Well, they're all doing it, which is a good thing. But we want to keep it together. The goal of it should be to have a stronger NATO, not a weaker NATO. The goal, in my view, if you ask me what the goal should be of our economic relations with Europe should be having a stronger Europe to get you to help you do the Draghi report. And I wrote my chair's letter, maybe a pipe dream, that if you did the Draghi report, I would give you one big, beautiful free trade bill.
JP Morgan CEO Jamie Dimon speaking exclusively to Bloomberg. Now, to some other top stories we're following for you this morning. Oil shipments from Iran's main export terminal appear to have come to a standstill over the past several days. If Kharg Island were to remain idle, it would increase the pressure on the country's remaining storage facilities, which satellite images show are filling up. It comes as semi-official Fars news agency says Iran won't join the next round of talks with the US unless confidence-building preconditions are met. Elsewhere, a US appeals court has temporarily paused a ruling that declared President Trump's latest tariffs illegal as the judges weigh the administration's request to allow officials to keep collecting the levies. And the US Senate has confirmed Kevin Warsh's nomination to the Federal Reserve Board of Governors with a 51-45 vote, granting him a 14-year term. Lawmakers also cleared a procedural hurdle for a vote on his nomination as Fed chair, which could come as soon as today. Well, coming up on the programme, UK Prime Minister Keir Starmer clings on despite calls for his resignation. More on the latest political upheaval in Westminster coming up next. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. A last-minute addition. Risk sentiment gets a boost with Nvidia CEO Jensen Huang joining President Trump on Air Force One to China. Top of the agenda, Trump says he'll ask Xi Jinping to open up China as his first request, claiming trade, not the Iran war, is his priority. And clinging on for now, UK Prime Minister Keir Starmer remains in office ahead of the King's speech later today, despite a slew of ministerial resignations. Well, a very good morning if you are just joining us. 6:30 a.m. here in London, and this is the picture in markets. The positivity you're seeing on the left side of the screen in the Asian session masking what we've seen throughout the morning. Losses earlier, but the dip buyers have since stepped in, so the MSCI Asia Pacific Index now up 0.5%. And as you can see, futures higher on both sides of the Atlantic as well, boosted by the news that Nvidia's Jensen Huang will be going to China after all with President Trump. So Euro Stoxx 50 futures up 0.9% and S&P E-minis up 0.2%. Flip the board over to the cross-asset picture, and we've got oil lower now after 3 days of gains. Brent trading down 1.4% at $106 a barrel. Iran talks at an impasse, and as I've said, Trump telling reporters that the war isn't likely to feature heavily in his talks with Chinese President Xi. We have the US 10-year yield at 4.46 there. Yields did rise after core US CPI beat yesterday, so traders wondering whether that points to a more hawkish Federal Reserve. And then, of course, one eye on the pound at $1.35 right now, weighed down by the political instability in the UK. Could that change if we see a meeting, or what, depending on the outcome of the meeting between Keir Starmer and Wes Streeting, the Health Secretary, later on today? More on that in just a moment, but first of all, let's turn to our front pages this morning, starting with Les Echos out of France, which leads on the war in the Middle East and how the French economy is facing a sharp slowdown. Of course, we think about how that will impact the European Central Bank. But let's flip over now to the Wall Street Journal. They've splashed on Wall Street getting more anxious about long-term inflation following that hotter-than-expected CPI print yesterday. And then if we go to the Financial Times as well, they're looking at President Trump's trip to China, the paper saying that his plans to discuss Taiwan arms sales with Xi Jinping are really rattling Asian allies. But you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which terminal subscribers can find by going to DAYB Go. Well, let's dive into politics again, shall we? UK Prime Minister Keir Starmer's premiership in peril, really, with more than a fifth of his MPs from his Labour Party calling for him to step down now. The escalating political drama is heaping pressure on the bond market, with yields on longer-dated gilts hitting their highest in decades. Against that backdrop, King Charles will be addressing Parliament later today, setting out the legislative agenda for the next parliamentary session. I'm joined now for analysis by our Bloomberg opinion columnist, Rosa Prince, and our Markets Today editor, Morwenna Coniam. Morning to you both. Rosa, I'm going to start with you. How safe or not is Starmer today, the day of the King's speech?
Great question. He seems a little safer than perhaps he did at times over the last couple of days. He issued a challenge, effectively, to his critics yesterday, saying, put up or shut up. And nobody came forward who was of enough seniority to really push him over the edge. I definitely don't think that danger moment has passed, though. He has that meeting with one of his main rivals, Wes Streeting, this morning. Streeting's going to say to him, how are you going to get us out of this mess? The mess being how badly Labour is doing with the public. They lost really big elections last week, very, very badly. And I think that's a question he's going to have to continue to answer to his party going forward for a while now. We'll see if Wes Streeting resigns, if he then says he has enough supporters in the parliamentary party to issue a challenge. He needs 80 to do that. Then all bets will be on. But for now, Keir Starmer is waking up in Downing Street this morning and plans to set out his legislative programme for the coming term.
Yeah, well, let's see if he manages to stick around for the legislative agenda that's read out by the King in this speech. Look, Rosa, your latest column says Starmer's likely usurpers are deeply flawed. Who's most likely to take over, in your view, then?
Well, yes. I mean, Keir Starmer has been pretty unpopular with his own troops for a while now. And the reason that he has stayed in office so long is the reason he stays there now, which is that there's nobody quite ready to be able to push him out. I think if Wes Streeting doesn't manage to do something today, his moment probably will have passed. And then I think we're looking at Andy Burnham. He's very popular both with the public and with Labour MPs. His problem till now has been that he's not actually an MP himself, and you have to be Prime Minister, you have to be an MP. So I think what critics of the Prime Minister will do now is turn to seeing how they can get Burnham back into Parliament, try and find him a nice safe seat that he can run in. Perhaps a friend might stand down in his favour. That's still not a straightforward process. Labour is so unpopular in the country that it's not entirely clear that they could win that by-election. Other big names in the cabinet who I wondered might want to step into the fray, although they don't show any signs so far. The Home Secretary, Shabana Mahmood, the Foreign Secretary, Yvette Cooper, big names who probably could mount an effective challenge to Starmer, a weakened Starmer at this point. Haven't seen any signs of that happening so far. And then there's the Deputy Prime Minister, Angela Rayner. Her problem is that she had to resign due to a scandal involving her taxes. That investigation hasn't been concluded, so this buys her a little time too to get that all sorted, and perhaps she'll go again at the next moment of crisis, which with this government we know will inevitably happen.
All right, Rosa, thank you very much. That's our Bloomberg opinion columnist, Rosa Prince. And I want to turn to the market angle now with our Markets Today editor, Morwenna Coniam. Morwenna, just put into context the current gilt moves against the backdrop of 2022, the Liz Truss moment. It feels like a reverse Liz Truss moment because, of course, the bond market's on the side of the Prime Minister this time. Is this as catastrophic as back then?
Well, on a daily basis, no. We haven't seen anywhere near the kind of moves that we saw, in the autumn of 2022. But we are seeing double-digit gains in gilt yields, and that isn't a good thing, particularly as it's cumulative. So if you actually look at where gilt yields are across the curve, they are higher than they were in 2022. And yesterday we saw the 30-year bond yield hit the highest since 1998. So the overall actual cost of servicing the government's debt is much higher than it was then. So you could say there's less room for the same kind of shock. But we haven't seen the level of panic. I think what we saw yesterday and over the past few days is uneasiness and a lot of anxiety, but it's also against the backdrop of a very unfavourable global macroeconomic environment. The last couple of days, oil prices rising, a lot of concerns about the Middle East, and the UK is also particularly exposed to an energy price shock. So I suppose there is a parallel there with 2022. But in terms of the move that we're seeing in the gilt market, it's not only down to domestic politics. We've seen bond yields moving across Europe and elsewhere as well. They've been rising, so the cost of servicing debt everywhere is going up, just going up more so in the UK because we've also got this political uncertainty as well.
And Rosa just set out the runners and riders who are most favourable, most likely when it comes to the Labour Party. But what's the best and worst case scenario in terms of those runners and riders for the bond market?
Well, the bond market tends to favour fiscal prudence, and we saw this last year when there was a brief moment of concern about Rachel Reeves. The bond market really did panic. They actually have generally quite liked her in terms of her messaging about being fiscally prudent. She's very firm on these fiscal rules that she's put in, and that was there really to reassure the bond market. It's something Andy Burnham has quite specifically said that he doesn't really appreciate. He said stop being in hock to the bond market. And anyone who is to the left of Chancellor Reeves and Keir Starmer would be seen probably unfavourably by the bond market because they are more likely to want to spend more money. That's usually comes from borrowing. If it's not going to come from borrowing, because borrowing levels are actually at the highest level since the Second World War, then you have to look at higher taxes. And higher taxes are already at the highest level since the Second World War, but the cost of servicing debt is at the highest since the 1960s. So there's really not a lot of wiggle room, and that's likely to actually make things worse in the long run as well.
Yeah, for any potential Prime Minister. Morwenna, thank you very much for that. That's Morwenna Coniam from the Bloomberg's Markets Today blog. Well, let's turn now to some breaking earnings out of Germany. This is a company right in the crosshairs of the Iran war and the shipping crisis. Hapag-Lloyd, of course, a container shipping company, reporting EBITDA margin for the first quarter that beat the average analyst estimate. So it seems to be working in their favour. They do see, though, a full-year EBIT loss of $1.5 billion to profit of $500 million. Now, we'll be speaking to the CEO, Rolf Haben-Jansen. That conversation at 9:30 a.m. London time on The Pulse. So don't miss that conversation. But coming up, we'll have an interview with the Siemens CEO, Roland Busch, as the German industrial giant delivers second quarter earnings and says it'll buy back €6 billion of shares. That conversation next. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
Now to some top corporate news. Sam Altman testified in court that he felt extremely uncomfortable when Elon Musk allegedly demanded total control over OpenAI's future for-profit arm and suggested his children could inherit that power. Musk is suing Altman for allegedly enriching himself and betraying OpenAI's original mission. OpenAI has argued that Musk's lawsuit is primarily an attempt to undermine a top competitor to his own AI company, xAI. Elsewhere, CME Group and Silicon Data are teaming up to create a futures market for computing power, a key source driving the AI boom. The contracts would aim to help traders and financial and tech firms manage volatility and compute costs. CME's CEO says that compute is the new oil of the 21st century, and creating a futures market could make the costs more transparent. And Bloomberg has learned that Google is in talks with SpaceX regarding future launches for an orbital data center project. Google has previously said it's been planning for prototype solar-powered satellites to test how machine learning works in space. It also said it was exploring deals with other launch providers. Well, so those are some of our top corporate stories this morning. At the top of the hour, of course, we brought you breaking earnings from Siemens. Just reviewing those, this, of course, is Germany's most valuable firm. They've said that they're going to repurchase as much as €6 billion after orders across the company's key divisions climbed. It's been a tough backdrop for this company, but that buyback to extend over a period of 5 years, and the move really suggesting that the company is confident in its cash generation, even as it pointed to that difficult geopolitical backdrop. Anna Edwards spoke to the Siemens CEO, Roland Busch.
There's a lot of uncertainties. We have the war. We have impacts on the supply chains, primary, secondary impacts. We see an inflation going up that can hold back also the market for a while. Germany just released a number which is 2.9% in inflation, United States 3.8%. So it's still a lot of things going on in the market, and therefore we are a little bit cautious for that.
What are the primary and secondary impacts of the war or wider geopolitical tensions on the business then, Roland?
I mean, number one is primary is that if you have a shortage on any kind of fuel, oil or gas, this is one thing. But the other one is there are derivatives which you need in the chemical industry or in other industries. If that falls short, then you might have an impact which you don't see yet. And if it comes to energy price, obviously the energy price is driving the prices, the inflation in other markets. This is now the secondary effects where you say if you apply price increase, inflation increases, this really dampens some of your markets. And the other one is talking about the war. Obviously customers, in particular in the Middle East, maybe eventually some of them hold their investments back because they don't know whether they have to use their money to repair stuff. So therefore, it's a blend of effects, and this is a reason why we have a look at the market. So far, I mean, as you saw, confirming our guidance, we believe that we can pull the rest of the year through as planned, or even better.
Okay, so no change to the overall guidance, but you have increased guidance for digital industries. So the fact you have not increased the overall guidance shouldn't be taken as any reduced expectation or lack of enthusiasm for the way that AI is driving the business.
Not really. In contrast, I mean, the reason why we are pulling up our guidance on the top line, but also on the bottom line for DI, is that we see a very strong demand from our customers. Let me start with our automation business. We are really picking up momentum, factory automation in particular. We have a very strong growth also in China from our new developed product, value for money products in China. They really pick up momentum. Remember, we launched 18 months ago, 16 of them, another 9 months, 26 of them, or recently 26 of them. They really hit the market very well. So, it comes back also in the other markets. We see a strong growth of our automation business in the United States, from a low level though, but we see a very strong growth there. So this is one piece. The other one is software. We have a very strong increase in our software revenue. It's 14%. Which is very strong, and this is across our whole portfolio. The last point is AI. We have already a couple of products in our software offerings, AI, which is received very well by the market, which drives our growth as well. And then we launched our Eigen engineering agent. This is really an agent which programs industrial computers for you, PLCs for you, and it does it really in a way that you can finally release the software because it's validated and you can release it. This increases the productivity of engineers by 50%. It makes you 2 to 5 times faster, and the quality goes up at the same time. We launched it at Hanover Fair, and it really lands very well on the market.
So that was the Siemens CEO, Roland Busch, speaking to our opening trade anchor, Anna Edwards. Key lines in that interview: rising inflation may hold back the company's investments. They're happy with the EU AI Act amendment, and the outlook is unchanged given the war, supply chain woes as well. Still keeping the outlook. So that interview from the Siemens CEO. Well, staying corporate, Bloomberg has learned that Anthropic is in early talks with investors to raise at least $30 billion in fresh financing at a valuation of over $900 billion in what could be the Claude maker's largest funding round yet. Let's get more on that scoop with our Bloomberg senior strategist, Neil Campling. Neil, good morning.
Morning.
What does this mean then for Anthropic? We're waiting for its IPO this year. Where does it leave it?
Well, this would be, I think, the third fundraising in as many as 3 or 4 months. And every time, obviously, the valuation is talked up in terms of the numbers. A lot of the big tech heavyweights are investors in Anthropic. I suppose the question is this because Anthropic need the money, because they're burning through so much cash, because there is so much need for their compute power? Or is this because there's so much appetite for investors to get exposure to kind of the hottest AI toolset that's out there that's driving? So it's difficult to know which one is driving which, but clearly Anthropic are very well set in their position in the business, and the $900 billion valuation, to give you a comparison, which I think we may be about to talk about, is the 2 Chinese tech bellwethers, Alibaba and Tencent. Their combined market cap is $860 billion. So combined, less than we're talking about here for Anthropic's current valuation, which is quite staggering.
Well, of course, they've got earnings coming out today. What are they going to tell us about the AI race then?
Well, what we're going to need to hear is that the core business for both companies are growing well and at double digits to justify the investments to pay off in the AI, because they're still early in terms of monetization for AI at both Alibaba and Tencent. Both companies are projected to grow revenues this next year at about 10 to 11%. It's very low relative to the US heavyweights. So we've got to see some payoff in terms of AI investments to be driving accelerating growth in the top line of their AI-related businesses that also underpins their core businesses, as we've seen from the likes of Google and also at Amazon.
Neil, thanks very much. That's Bloomberg senior strategist Neil Campling. And for those of you who just can't get enough AI, we've got a new Bloomberg AI Today newsletter. Do sign up at bloomberg.com/newsletters for the latest on just how this technology is disrupting businesses, workers, finance and economies around the world. Plenty more coming up on Daybreak Europe. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. This week, leaders from the world's 2 largest economies will come together in Beijing. With geopolitical stability and the future of global trade on the line. Trust Bloomberg to go beyond the headlines with on-the-ground reporting, expert analysis, and real-time market reaction. The Trump-Xi Summit. Special coverage all week right here on Bloomberg. Context changes everything.
I think inflation and rates is where my mind goes. I think it's going to prove more challenging to get inflation down in many economies around the world with rising energy prices. They affect everyone really around the world, and I think there'd been a hope that we can tame the growth of inflation that really stayed with us out of COVID. But it doesn't look like that's going to be the case. And if inflation stays high, rates are likely to stay high.
The General Atlantic CEO, Bill Ford, speaking there. So inflation top of mind for him. And worryingly, if you take a look at this chart, inflation in the US, which is the blue line, is not as high or is lagging the Bloomberg Commodity Index when it was last this high. Take a look at the gap between the 2 lines here on the right. Could this be a bad omen for Kevin Warsh as he takes over at the Fed? But take a look. Flipping the board at the reaction in equities. Actually, they took the print in their stride for the most part, but semiconductor stocks not so much. So take a look at that little dip there. Of course, semis have been outperforming the broader market more recently in this context of low volatility. That's the blue line. But there's one more chart I want to show you this morning, and of course that concerns the UK. We have had so much political uncertainty in Westminster, that pushing up long-end gilt yields. This is the 10-year, really outsized moves on the 30-year as well. 1998, the last time that we saw 30-year yields this high. But the blue line is the 10-year, and the white line is the odds of Keir Starmer being out by the end of the year. In fact, dipping overnight. So has Keir Starmer improved his situation over the past 24 hours? We'll see over the next 24. He's going to be meeting the Health Secretary, Wes Streeting, before the King's speech later on today. But to save all of these charts, to take a look at any of the charts we've used on Bloomberg TV, in fact, do go to CHRT TV Go on your terminal. In terms of the risk events on the docket for today, we've got 2 big oil reports from the IEA and OPEC. We've got earnings coming from Alibaba and Tencent, and of course we've got the PPI print for April coming out of the US at 1:30 p.m. London time. The Hapag-Lloyd CEO will be on the pulse at 9:30 a.m. and the opening trade is coming up next. Anna, Guy and Tom will take you all the way to the open. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It's Wednesday the 13th. Air Force One is over the Pacific. Jensen Huang is on board. Phew. Inflation data really starting to scare the bond market. That G10 sell-off really beginning to gather pace. We'll talk about that. And on the corporate front, Allianz earnings hit a record. Hapag-Lloyd beats. Siemens, Tom doesn't.
So those earnings stories then factoring into the futures picture, with the European futures actually pointing higher this morning after the losses of yesterday, pointing to gains of around 0.8%. The bond sell-off was part of the drag on the equity market yesterday, absolutely. Oil prices today also lower. That will be a catalyst for the upside, potentially to the equity story as well. So Brent currently down 1.3%, but still at around 106 per barrel. And the pound continues to be in focus. UK assets on the political risks around Keir Starmer, of course, currently at 135. The countdown to the opening trade starts right now.
Welcome to the opening trade, everybody. It is Wednesday morning, and Jensen Huang has secured himself a place on Air Force One, as Guy's been telling us, getting a last-minute ride to China with the president. No doubt this opens up a whole interesting court drama around why he was or was not invited in the first place, and perhaps we get into that. But what is clear is it has caught the market's attention a little bit. We've seen US futures catch a little bit of a bid on the back of this NASDAQ futures. The after-hours trading in NVIDIA was certainly affected by this. Interesting, though, our colleague Dan Curtis is pointing out to me that the Taiwanese stock market has not got a boost, and perhaps that tells us something interesting, at least about the questions that the market is asking ahead of this meeting as to what is and is not going to be on the agenda. I'm staggered that the fact that he caught a ride from Alaska seems to have moved futures. Is that where we are now?
That's the world we live in now, Guy.
That's amazing.
Jensen Huang jumping onto Air Force One in Alaska, and you suddenly move hundreds of billions of dollars worth of assets on the back of that. Because the assumption seems to be that, therefore, this signals there's going to be some kind of chip deal, and therefore we're all going to win on the back of this. There's another argument, which was there was a lot of press reporting about Jensen Huang not getting an invite. Maybe President Trump picked up the phone and said, you know what, jump on the plane, you're coming with us.
So they have to refuel in Alaska because they don't like turning up in China with empty fuel tanks. That's the reason. So that you can take off quickly if you need to, basically, is the reason why you refuel in Alaska. But it's interesting, Trump's also pushing this line that this is not about Iran, this is about trade. That's what he wants to deliver. And he's got a whole load of CEOs with him. It's clear, like Kelly Ortberg's there, Larry Culp's there from GE. There are going to be deals done. Is this going to focus on trade? And is that what the Chinese want as well?
Well, yes, indeed. He's put the focus on trade, hasn't he, overnight? That's his priority. He's talked about other themes in the days running up to this. He's certainly talked about Taiwan and a willingness to talk about Taiwan, which is certainly something that anybody in the chip sector will be paying attention to. But will we get just lots of other... I mean, that feels quite retro almost, doesn't it, if you just get a lot of trade news around Boeing and soybeans.
Soybeans are suddenly retro.
Always.
The triple
soybeans
B.
and chips, basically.
Beef,
sounds
Boeing,
delicious.
Soybeans.
Beef, Boeing, and soybeans. There you go.
Disappointingly unalliterative.
But is that okay? Is that all we want out of this? What we don't want is fireworks. What we want from a market perspective is something that doesn't shake up and scare everybody. And it looks like Trump is pointing us in that direction. So the market presumably, the Jensen Huang thing I think is interesting, but the market presumably just looks at this and goes, we're okay with this.
You made the interesting point at the beginning of this week that if President Trump was looking for any Chinese assistance in what is going on in the Middle East, no doubt he wouldn't word it that way.
Yeah.
But if he were looking for any Chinese involvement, I mean, the Chinese have put themselves in this. They've become involved, and also they do rely on some Iranian product coming through. But they were pretty well stocked going into this war, and so perhaps that reduces their need from a domestic motivation perspective.
Yeah, Scott Bessent, the US Treasury Secretary, has said in recent days that China could and should be playing a bigger role in trying to force this ceasefire and maybe even play a role in getting shipping through the Straits of Hormuz. It's just the way that the Beijing political infrastructure works. It seems unlikely, given the relationship that has been built between Tehran and Beijing over decades. It seems unlikely to me that suddenly they're going to pivot on that and support the US on this stance. They're going to be very, very cautious, you would have thought, on Iran.
OK, let's talk about Iran. Strait of Hormuz is still closed. Oil's trading at 106. It's down by a little bit on the Brent contract, not by much, though. Nothing really to see here. No movement in terms of progress that we can see, except in the bond market. The bond market's beginning to get scared. And yesterday's inflation print may have been a catalyst, but there are plenty of others around the world as well. You look at what is happening out of Australia, what is happening in terms of bond markets generally around the world. The UK is just assisting in this process, you could argue, in terms of forcing yields higher. But the bond market's beginning to signal that it's worried about this. And the bond market and the equity market are on very different pages right now.
We'll come to the UK later. It has been a bit of an outlier, but it's almost got company. You know, there are bond yields rising in lots of places. We talked yesterday about Japan and the 20-year bond yield there up at 1997 levels. Certainly in Europe, running into the gilt open yesterday, we saw quite significant moves in yields on European government bonds. Interesting that Joachim Nagel over at the ECB is talking about the probability, or there is an increasing possibility of a rate hike. He is talking about how we are not now at we're no longer at the usual scenario, or the scenario they had assumed. We're now moving towards the adverse scenario, which, if you remember, the ECB had all these different scenarios. And so, you know, the pain of what is happening in the Middle East from an economic perspective is starting to mount.
So the risk factor then to a hawkish response from the ECB and a typically hawkish member of the ECB is the economic impact on the downside. And France illustrating that. So unemployment above 8% for the first time in, 5 years. The chief economist at the Bank of France saying, quote, the French economy's resilience is starting to be put to the test. Growth is flatlining in France.
Is it? At what point do we start to see the curve really reflecting this? The fact that the front-end yields could come up in the Eurozone and then start to drop quite rapidly as you look down the duration story. And the French unemployment number is quite scary. You start seeing these, and we haven't really felt the effect yet. You start seeing that number going even higher into an election year.
Yeah, I mean, interesting, though, on that balance of inflation and growth concerns, Joachim Nagel doesn't seem, as you would expect, because he's always hawkish, but he doesn't seem very interested in that kind of conversation. He says that we have one mandate, no ifs, no buts. So there certainly will be some voices who won't be worried. And he even said there is a concern about hiking into weakness, but we have one mandate. We have one mandate to deliver.
The corporates are obviously responding to what's happening in terms of the global energy shock. You've been speaking to the CEO of Siemens, so we'll get your insight shortly, Anna. Of course, we'll be preparing that interview through this hour as well. Really, really important in terms of the litmus test and that touch across the global economy. Allianz coming out with a very strong win. They saw big inflows into PIMCO as we talk about bond trading. Hapag-Lloyd also coming in modestly above estimates, it seems. Siemens a bit softer. So it seems like a bit of a mixed picture on the earnings front. We're going to be speaking to Bill Finger as well in terms of servicing of a lot of those that gas and oil infrastructure. So that will be interesting. What did you take from the Siemens conversation?
Well, if you look back, they're telling quite a positive picture about the second quarter, even though there was one part of the business that did disappoint against analyst estimates, but the orders were better than expected, and they're saying they're pretty happy with what they did in the second quarter. It's really the looking forward stuff that is is a little bit more concerning for them and possibly for the markets as well. There's no overall increase in guidance. He even said to me, you might be surprised that I'm not increasing guidance today. And that is very much to do with the geopolitics. So they're concerned about a very demanding geopolitical backdrop. And I asked about the primary and secondary effects of that. And he cited the usual suspects, you know, oil and gas prices and availability of chemicals and that sort of thing. But he was also talking about customers in the Middle East holding back on investment because pending rebuilds, you know, this sort of thing. And also, but not being sure about where the conflict goes from here. It's not a negative around AI, though, and what AI can deliver for that business. So if we were watching this as partly as a sort of AI capex story, there isn't a sense of slowdown in that narrative, at least.
Net, though? Not exactly positive.
No, the language is cautious, certainly when you're looking ahead.
There's a big German industrial company talking about kind of...
And inflation, actually, and worrying about what inflation does to customers.
And as we think about inflation, we think about shipping costs as well. Hapag-Lloyd's CEO, Rolf Haben Jensen, will be joining The Pulse, 9:30 a.m. UK time. So another gauge from the corporate front in terms of what is impacting, particularly within the shipping space and freight rates in focus. So stay tuned for that interview as well, Guy.
I'm looking forward to it. I think it's me doing it. Let's talk about what we've got coming up on the show. Thomas Schultz, Bilfinger's CEO, Paul Markham, GAM Investments Investment Director and Head of Global Equities, is going to be joining us. Anand Menon, UK in a Changing World Director, and Elisa Garcia Herrero, Natixis Chief Asia Pacific Economist, a little later in the programme.
Here's what else to think about throughout the day then. Monthly oil market reports from the IEA. They drop at 9 a.m. UK time and OPEC at 12 p.m. So some fresh detail on this currently roiled global oil market. At 10 a.m. UK time, we're going to get first quarter Euro area GDP as we talk about the challenges in France and beyond. 11:30 a.m. UK time. It's the King's speech, of course, at a moment of political turmoil here in the UK. SoftBank results drop at 7:30 a.m. UK time. We'll break those for you, plus Nissan, Tencent and Alibaba later this morning as well. And at 1:30 p.m. UK time, after that, tick up to 3.8% on the headline CPI. We're going to get US producer prices as well, so building out the inflation story over in the US.
Yeah, we've talked about rising yields globally. We've talked about the UK dimension a little bit. Let's focus more on the UK politics as a result of that market dynamic.
इस 23,300 का वो जो पुट था नाउ 150 के नीचे आना शुरू हो गया अब लेट्स सी निफ्टी फ्यूचर भी देखोगे वापस डे हाई के आसपास है 23,600 टू 650 एक्सपेक्टेड है वहीं आसपास एक रेजिस्टेंस मिल सकता है फ्यूचर में तो देखते हैं फ्यूचर पहुंचता है नहीं पहुंचता है 23,600 टू 650 वहां से वापस सेलिंग का प्लान करेंगे तब तक लेट्स होप ये अगर 100 तक आ जाता है 23,300 का पुट तो वेल एंड गुड है 220 पे सेल किया था इसे 180 पे पहला टारगेट 150 पे दूसरा टारगेट बहुत पहले बुक कर लिया था 150 के नीचे सस्टेन करता है तो 100 तक का एक थर्ड टारगेट भी हो सकता है जो लोग अभी भी ट्रेल कर रहे हैं मॉर्निंग पे 23,302 250 का सपोर्ट था फ्यूचर में वहां से रिवर्स आया ऊपर रेजिस्टेंस है 23,600 टू 650 इन फ्यूचर स्पॉट की चार्ट की बात नहीं कर रहा हूँ फ्यूचर की चार्ट की बात कर रहा हूँ तो ध्यान रखना प्राइस मोमेंटम किया पुल बैक प्रॉफिट बुकिंग अगेन मोमेंटम 23,600 टू 650 पर थोड़ा रिवर्सल होने के चांसेस हैं ध्यान रखना रिवर्सल नहीं भी हुआ तो रुकना चाहिए वहां पे अच्छा मूव आया है मॉर्निंग से, ऑलमोस्ट वन साइडेड ही कहेंगे मैं तो। करंटली फ्रॉम द बॉटम इट गोज अराउंड 213, 1% पॉजिटिव होने वाला है। 3 दिन कंटिन्यूसली गिर रहा था, प्रॉफिट बुकिंग अच्छी आई है सपोर्ट से। 23,300 पुट नाउ एट 130। मुझे लग रहा है 120 तक ही जाने के स्पेस है। कॉल बाय नहीं किया था याद रखना, पुट शॉर्ट किया था। किसने कॉल ही बाय किया होगा तो उतना ही प्रॉफिट मिल रहा है लगभग 25%, 22 to 25% का अप्रॉक्सीमेटली। बाकी नेचुरल गैस तो ऑलमोस्ट साइडवेज है फर्स्ट 15 मिनट की कैंडल पे। देखते हैं कुछ मूव यहाँ से भी होता है तो। कैंडल गैप अप हुई है विथ ओपन इक्वल टू लो इन निफ्टी फ्यूचर। साइडवेज जा सकता है क्या वापस? 23,500 के अप्रोक्सीमेटली। आईवी अभी भी हाई है, 18-19 आसपास चल रहा है एट दी मनी। एट दी मनी का स्ट्रेडल देखोगे, प्रीमियम आपका 280 270 के आसपास ही है कंटिन्यूसली, तो एक्सपेक्ट करेंगे हम। मॉर्निंग पे मैंने बताया था, मॉर्निंग पे आई थिंक 480 पॉइंट की रेंज बन रही थी। कॉल और पुट एट दी मनी का जो स्ट्रेडल है उन दोनों को ऐड करेंगे तो वो एक वीकली रेंज निकाल के हमें देता है। तो उसके अकॉर्डिंग मॉर्निंग पे लगभग 480 पॉइंट की एक रेंज बता रहा था मार्केट, वीकली बन सकती है। अभी भी वो 470 480 पॉइंट ही चल रहे हैं, तो अभी भी एक्सपेक्टेड ही है लगभग 500 पॉइंट की रेंज रहेगी मार्केट में इस वीक। ठीक है, नॉट 100% श्योर बट नॉर्मली यही होता है जब जो स्ट्रेडल रहता है, जिस दिन एक्सपायरी का पहला डे है, फर्स्ट आवर में जो क्लोजिंग आती है स्ट्रेडल के टाइम पे, मोस्टली प्राइस उसी रेंज पे रहने की कोशिश करता है। अप साइड कहूँ मैं 400 पॉइंट और डाउन साइड 400 पॉइंट, या रेंज ब्रेक होगी पक्का इसका मतलब। साइड मोस्ट प्रोबेबली 23,900। एंड डाउन साइड देखोगे तो 22,900 ये रेंज मुझे लग रहा है रहेगी. For this straddle, not 100% sure, but straddle में normally यही रहता है. देखते हैं कितना प्रीमियम और डीके करेगा. देखना आज डेटा आने वाला है क्रूड ऑयल में. एक तो इन्वेंट्री है, वो तो इवनिंग पे आएगी. खैर शाम को 8 बजे. उससे पहले आई थिंक एक डेटा और है, ओपेक का डेटा भी रिलीज होने वाला है मोस्ट प्रोबेबली. SpaceX was looking to acquire land in Louisiana. SpaceX CEO Elon Musk said that SpaceX is considering several locations domestically and internationally to build the world's most advanced spaceports. Per a statement from SpaceX, plan to launch Starship at a high tempo with require more launch location both domestically and internationally. Wow.
To Congress?
I didn't ask you that.
Lied to Congress is you. Not lied to Congress.
I didn't ask you that.
Not lied to Congress.
I didn't ask you that.
Lied to Congress is you.
Do you? I'm not testifying here, sir, and I don't lie.
Maybe the next time you run up a $7,000 bar tab, we can talk about it.
Well, see, there you go, lying again. You suggested
in the FEC report. I'll post it right now.
You suggested it was
Hang
public. It wasn't public money, as you know. That was for a 50-member staff party.
So it was a $7,000 bar tab.
Mr. Patel, I'm glad. Let me just say in closing, Mr. Chairman, two things.
Not lied to Congress.
I didn't ask you that.
Lied to Congress is you.
Do you? I'm not testifying here, sir, and I don't lie.
Maybe the next time you run up a $7,000 bar tab, we can talk about it.
Well, see, there you go, lying again. You suggested
in the FEC report. I'll post it right now.
You suggested it was public. It wasn't public money, as you know. That was for a 50-member staff party.
So it was a $7,000 bar tab.
Mr. Patel.
कल आपकी एक्सपायरी भी है, ध्यान रखना। क्रूड ऑयल ऑप्शन की भी एक्सपायरी है शायद कल, एंड सेंसेक्स की तो है ही एक्सपायरी।
for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
30 minutes to go until the start of equity trading this Wednesday morning. Good morning. Let's take a look at futures, show you what is happening in the European picture. As you can see, positive. Euro Stoxx 50 futures up by 0.9%. FTSE's up by 0.6%. CAC 40 up by 0.5%. Good corporate earnings, maybe one of the significant drivers of this. Stateside, you've got the Nasdaq up. The S&P is also tracking a little higher as well. Bond markets, though.
Yes, well, actually, bond markets taking a breather from the dynamic that has been hyperventilating about inflation. So oil prices are a little bit weaker this morning, and maybe that has something to do with what we're seeing in equities as well. But we're down by 1.4% on the Brent price. 106 is still the handle, but that means there's a little bit of space, perhaps, for bond yields to come down, and that's what we're seeing. So unlike yesterday, where we saw, 5, 6, 7, 8 basis points higher for the European government bond yields, today we're seeing those yields come down, but just by a basis point. So we won't dwell on that. What we will go to, though, Tom, is the numbers out of SoftBank.
Yeah, a very big beat for SoftBank. Full-year net income coming in at 5 trillion yen, well above the estimates then, smashing the estimates of 3.33 trillion yen. This is for SoftBank. In terms of the Vision Fund, that investment gain of almost 7 trillion, 6.99 trillion yen. 6.99 trillion yen is the investment gain there, because we're looking, of course, for exposure to OpenAI, into which SoftBank has invested close to 60 billion US dollars. It's in line to do that totally. It's invested around 30 billion to 40 billion so far. It's in line to invest another 30 billion potentially. Cumulative investment in OpenAI totaled 34.6 billion. And there's expectations it's got about another 30 billion to invest in OpenAI. So that's the investment in OpenAI totaling close to 35 billion. Net income coming in well above estimates. Net sales, that's a beat as well. This is very strong from SoftBank. Full year net income at 5 trillion yen.
Reading the preview of these numbers, there was definitely an expectation of a gloomier story.
Yeah.
Because there were lines about how this could be the first quarterly net income decline since 2024, concern around its investments and whether they might lead to some sort of credit downgrade at some point. But this is a much more positive story, perhaps, being told this morning.
Yeah, it'll certainly keep the credit story at bay. I think that will be certainly something that people will be happy about. It's at 9 o'clock, I think, London time. I think ADR trading could be quite interesting in this morning. And we'll watch to see exactly how the stock market is going to react. But as you say, Tom, initially this is like a surprisingly positive picture. But I guess in some ways, this is a stock that rides on the coattails of the AI sort of theme.
This is a way to play OpenAI before it lists.
Precisely.
Yeah.
If you were to kind of think about how the market reaction will go on this, it could be quite dramatic.
45 billion is what they're saying is the total gains now from those investments in OpenAI. 45 billion US dollars. Let's get more on the earnings front and switch to a major industrial player based out of Germany, but with a global footprint. First quarter results from Bilfinger show the firm reaffirming its full-year sales forecast. However, the Industrial Services Group said first quarter performance was hit by what it called seasonal effects and geopolitical tensions. We can talk now with the CEO of that company, Thomas Schulz. Thomas, sir, good morning. Thank you for your time. Let's start with the geopolitical uncertainty then. What is the most significant impact of the war in Iran on your operations at this point?
Good morning, Tom. The most severe impact actually is the slower decision-taking in the industry for further investments and actually maintenance and other necessary work. You know, when you have any critical or any crisis on global level, the industry immediately stops and slows down decision-making. And that is what we saw since February from a geopolitical perspective. The main impact what we had in the first quarter was actually the severe weather conditions. We had a longer winter, which 20, 30 years ago was normal. But nowadays, of course, a lot of work was just postponed and delayed.
How quickly, on the geopolitics and on Iran, how quickly do those decisions come back? How quickly do things snap back in terms of activity from your clients if this is resolved?
Yeah. Very quick. If there's the trust that things will improve, immediately it comes back. It's not about really the timing when everything ends. It's about the expectation when it ends. So if the expectation is out and back in the industry that things get back to normal, all fine. So we see more decision-making actually in the second half of the year.
Can I just ask you, good morning, a question about inflation. What kind of inflation are you seeing right now in your business?
Actually, not a lot. There's a lot of speculation now in the last few days based on comments out of the US. But the inflation is on a regular, normal level. We are not, it doesn't go down, definitely not. But there are debates about it. And that's a little bit of uncertainty into the decision making.
OK, so would you expect it to go up from here? The data would seem to point us in the direction of shortages. Are you expecting that you will be paying higher prices in the second half of the year? When does the inflation shock from the Gulf arrive, do you think?
So we are not experts in inflation forecasting, to make that fairly clear. Our contracts are long-term frame agreements. We have price escalation clauses in. If things change in the environment, we adjust our pricing properly. That actually doesn't hit us a lot, if at all, and sometimes quite positive too. So let's see what happens. At the moment, it's very volatile out in the world. It's not only about now the upcoming inflation discussion and interest rate discussion. It's about the Iran war. It's about behavior of US. It's about the meeting with Xi Jinping and so on and so on. There's a lot of volatility out. Volatility is not good for decision making. So from that point of view, if one or two things can get sorted out and cleared, it will be definitely better for the global economy.
Thomas, good morning. So the global landscape looks pretty uncertain right now for the reasons you've set out. Domestically, we've seen the government spending a lot of money on infrastructure and also on defence. How would you rate the progress so far of the fiscal stimulus effort that we're seeing in Germany? I know that's not the aim of all of it, but it will have some stimulative effects on the German economy.
Yeah, at first, the volatility we have since the financial crisis. So this is not new. It is more and more in the media, and it gets very quick into media, and that gives a feeling that permanently everything is in movement. If it comes to Germany and the investment package, which was announced beginning of last year with the new election of the new government, that was the absolute right thing to do in defense as well as in infrastructure. It's necessary. The plans are there. The only thing what is missing is faster decision on the politics side so that we can go into execution phase. But it's overall for Germany and for Europe, actually, quite a positive thing.
OK, so are there policies that can be introduced by the German government, Thomas, that would really boost industrial confidence? Because from what you've told us, some of what is weighing on industrial confidence might be out of the hands of the German government. So are there things that the German government can and should be doing?
I think it would be always good, especially in Europe, to reduce the amount of talking around the subject and just starting to act. That is what we see out of Brussels, if we see anything else than demanding more money. And that is what we should have more out of Berlin. The plans are there. The Minister for Economy, Frau Reich, has all the plans, good ideas, 10 points, actually great, get to execute it. The industry will support it. It will be good for the society. It will be good for the business. It will be good for Europe. Everyone knows that. Stop talking, start acting.
Thomas, you mentioned Xi Jinping and President Trump in that meeting later this week. Do you welcome Chinese investment into Europe, or should Europe be cautious and should Europe be putting up some barriers in some areas to restrict that Chinese investment?
In general, the investments are always positive for an area, to make that fairly clear. But the investments have to be in a way that they are not harming the future development of a geography, in that case of Europe. We have enough intelligence in Europe. We have enough politicians. We have enough media. We have enough information in the society where we should allow or letting investments happen and where we should be more cautious. And it's not only towards China. It's in general to the whole world. We have a change in politics. We have a change in the world. And we see that we divert more and more. We have a strong North American market. We will have a quite strong Middle East market, especially after the crisis. Investments is what we expect there. And Europe has a lot of potential. But the potential is at the moment not really unlocked because it's blocked in bureaucracy and, yeah, let me say it fairly loud and clear, in politician blah blah and not executing things which are very obvious.
Blah, blah. That translates around the world. Thomas, thank you very much indeed. Thomas Schultz, the Bilfinger CEO, joining us from Mannheim. Thank you very much indeed. From one CEO to another, Jamie Dimon has offered a warning to the markets.
I think there's a little bit too much exuberance out there. It's not just the Middle East. It's, Ukraine, Russia still there, America, China. There are a lot of these complex issues which may or may not affect the market. But then there are issues like inflation. That today's print wasn't so good. So, yeah, I think the market's kind of exuberant and it may not be completely justified.
Jamie in Paris, the JP Morgan CEO, speaking exclusively to Francine yesterday. We're going to take a close look.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just it's hard to call it because the trend, the technology trend and the investment is real.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
I have a great relationship with President Xi, and I think it's going to remain that way. We have a lot of things to discuss. I wouldn't say Iran is one of them, to be honest with you, because we have Iran very much under control. We're either going to make a deal or they're going to be decimated.
President Trump speaking before the departure for China. I think Air Force One is halfway across the Pacific, maybe not halfway, but it's certainly getting there. He is prioritising trade, it seems. The US president says he will be asking President Xi to open up China to US businesses when the two leaders meet this week. Apparently, that's the first thing he's going to put on the table. China correspondent Min Lo joins us now from Beijing. In terms of the priorities that Trump is laying out on trade, is that what Beijing wants as well? What is its priorities?
Yeah, Beijing's priority, actually, if you read Chinese state media, it's not Iran, it's not even trade, it is Taiwan. That is first and foremost the most important priority for China. It's warning the U.S. to exercise utmost caution when it comes to that arms deal, right? A $13 billion record arms deal, which President Trump has reportedly delayed announcing in order not to derail this Trump-Xi summit. But there is a bit of wariness about, whether when all of this, when the summit is done and dusted, whether President Trump will then turn around and approve that arms sale. So China is particularly highlighting that sort of defense relationship between the U.S. and Taiwan. I think even more than that, China also wants the U.S. to shift its stance on Taiwan to be not just sticking to that one China policy, but even be more affirmative to something more action-oriented and to support that peaceful reunification or at least oppose Taiwanese independence. And that is the number one issue for Beijing. And number two is trade and tariffs. Of course, China really wants to ensure that there will not be a re-escalation of tariffs despite the U.S. Supreme Court striking down those IEEPA tariffs. And that is why Jamie Zangria has mentioned that the two sides will be discussing this board of trade where they will be negotiating the final details. What sort of tariffs would both sides be willing to give up in exchange for better market access into certain sectors?
Min, what do you think we should read into Jensen Huang's rather last-minute jump onto Air Force One and visit alongside President Trump? How should we interpret this when it comes to the semiconductor story between the two sides?
Yeah, it certainly came as quite a surprise, and I think it really reignited hopes that maybe there could be some forward movement when it comes to tech restrictions, right? Because Jensen Huang has been so instrumental. He has been the key advocate for rolling back those tech export restrictions. The U.S. has now approved the sale of the H200 chips to China, but so far, no sale has taken place. The Chinese government has not given explicit approval for the domestic companies to buy them, and namely because they're trying to boost their own domestic chip production. And the domestic chips are catching up with the H200, especially if you stack multiple chips together. It can sort of be on par with the H200. So will there be discussion of perhaps further relaxing the trade curbs and perhaps selling even more advanced chips to China in order to entice China to buy more of those NVIDIA-made chips? That certainly is something that we are watching for. We are certainly seeing markets reacting, especially if you look at the tech stocks, the Korean Kospi. Really, there's a lot of hope from retail investors that maybe there could be forward progress on the chips front.
Min, thank you very much. Bloomberg's Min Lo joining us there in Beijing ahead of that really important meeting, which we will continue to cover, of course. Let's turn our attention back to the markets in 3 minutes on the opening trade with Markets Live Executive Editor Mark Cudmore. And Mark, I guess in terms of what's dominating the narrative, yesterday it did seem to be like as if the higher yield story, not just here in the UK, but certainly it had UK dynamics to it. There was a global story around higher yields. Today looks a little bit different. Oil prices on the back foot, and I wonder, with Nasdaq futures higher, if there's room to return to the stocks narrative around AI, that seems to be where the market's focus is, perhaps.
Yeah, I think absolutely. I think, look, we're starting to focus more on the Trump Xi summit, and it's making people jittery. There's certainly very large tail risks into this event, but the base case is that this will lead to some kind of positive headlines, probably won't mean too much, but some platitudes, some deal agreements, some trade agreements that support the stock market. So that means we probably get a jittery and volatile rally as we go into the summit. And if we get out of it without any of those tail risks transpiring, well, then I think we'll get more gains again next week. There are a lot of risks building in the background. There are higher yields. There are the fact the consumer is being squeezed. There's that inflation data out of the US. All those problems continue to build. But ultimately, none of them will probably derail this derail the longer term kind of bubble we're in until AI blows up. Now, it doesn't mean we can't get some really quite bad tactical environments. I think that maybe by next week, when we get through this summit, if we get through the summit okay, we might return negative focus to Iran conflict. And that's when I think that we might be in for a tactical bout of risk aversion that could last a couple of weeks. But again, it won't be the end of the bubble.
Do dips get bigger?
Yeah, the dips do get much bigger. I think. Look, I think the playbook here for markets is very much like 1999. There are fundamental differences. But I think the idea is that when in the dot-com bubble, in the most extraordinary part of the rally, we are getting some crazy pullbacks, and I think it's going to be a similar type idea to that. Now, I don't want to get too lost on the exact comparison, but just in terms of market dynamics, that's what we should expect. I don't know when this bubble ends. But my base case is that we've got many more months in it, and extraordinary more gains to be made in an extremely volatile fashion. And as I said, we're going to get some big pullbacks. We've all loved the size and scope. We talked about it yesterday. Kospi can fall 20% from yesterday's high and still, sorry, I've actually forgotten the exact size and scope there. It can fall 50% and still be 50% up from the start of last year. It can fall 20%, that's it, and be higher than any time in history up until 3 weeks ago. So we're going to see extraordinary dips, but ultimately, those who are along this bubble are probably going to be on the right side until the AI bit fractures. Everything else is noise and volatility.
And we have NVIDIA earnings out next week. What is the key catalyst for you in the next kind of days and weeks? Is it Trump Xi? Is that the key catalyst for these markets, Mark?
Like Trump Xi has a lot of tail risk, but I think we'll get through it. So I actually don't think it'll be a big market mover. I think Iran is going to come back into the radar in a major way, probably once we get to the other side of the summit. And to me, that's the big risk event. I actually do think we'll have a very extreme bout of tactical risk aversion based on Iran on the coming week. Either it's going to be resolved via material escalation, or we have no sign of resolution, and that's bad too.
Bloomberg Markets Live Executive Editor Mark Cudmore. Mark, thank you. Remember, you can get up-to-date analysis and insight from Mark and the rest of the team. Just go to MLive Go on your terminal. Let's get your stocks to watch this Wednesday. Chloe Melly standing by. Chloe.
Good morning, Tom. It's a very German day today. So let's start with Siemens this morning, which said that it will buy back as much as 6 billion euros of shares after orders surged recently. So it's really benefiting from growing demand for factory software and also smart building infrastructure. But it did say that it was a little bit cautious on the outlook because of the war and because of the potential impact of the war on supply chain. So we have seen the shares go on quite an up and down ride, as we can see over the last few months. So we'll see if investors this morning decide to focus more on this actually quite big buyback or on that more cautious commentary on the outlook. Moving on to Deutsche Telekom, which is also in focus today after slightly raising its guidance, and that was thanks to a strong performance in Germany but also in its US arm T-Mobile. And of course this comes at a very interesting time for Deutsche Telekom, given that it is in those early stages of exploring a combination with T-Mobile, which would create the largest telecom company in the world. We have seen Deutsche Telekom underperform, lagging behind its peers a little bit recently, but maybe this guidance raise, even though it is quite small, might actually provide that needed boost. And finally, Allianz is also in focus today after its earnings hit a record. So that was thanks to strong performance in the property and casualty insurance business, but also in the asset management business, including PIMCO. And so we could see that boost the shares this morning. There had been some concerns, some debates recently around Allianz, around private credit and technology, but recently Goldman Sachs analysts actually upgraded the stock, saying that those fears were overdone and that there was more opportunity than risk for that company. And so we could see the shares move higher this morning on the back of that.
Chloe, thanks very much. Chloe Melly with the stocks in focus. And as she said, rightly, there is a German flavour to the corporate earnings this morning. So a bit of a mixed reaction, though, we might get in markets. But overall, the DAX, the CAC, the FTSE all expected to go higher. DAX futures up quite significantly. I wonder if that's more to do with oil prices. They're down 1%, and that does seem to be sometimes something.
Both the CEOs, so the CEO that you spoke to from Siemens, of course, Roland Busch, and Thomas Schultz from Bilfinger, both pointing to longer-term geopolitical risks and headwinds. By longer term, the back half of this year, which ties into the point that we've been discussing through the last few weeks, which is, does the back end of this year look a lot uglier for these corporates, given the risks and the inflation?
I think that translates into the investment universe as well. Europe sounds uncertain. European CEOs sound uncertain as to what is coming up next. You heard it from Maersk as well, like what's about to happen next doesn't look particularly good. You go to America, that's not what you hear from investors, that's not what you hear from CEOs. You go to Asia, that's not what you hear from CEOs, and that's not what you hear from the markets. Europe feels tentative and uncertain right now in a way that the rest of the world maybe doesn't when it comes to the investment story.
Yeah, absolutely. And it's interesting, though, thinking about the SoftBank news we've had this morning, that seems on the face of it really positive. We're looking to dig into some of the detail there. NASDAQ futures didn't take a leg up on that. So I wonder if it's adding to our knowledge of what we already know. We know this is a big booming story, but we're waiting for a bit more context, perhaps. At 7:54 here in London. Coming up, we will bring you the opening trade. Futures are pointing firmly to the upside this Wednesday. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Wednesday morning, good morning. A couple of minutes to go. A little recap on what we saw yesterday out of the United States. Inflation was a worry for a little bit, but not for long. And we climbed towards the end of the session over in the United States which is basically why we are now seeing Tom's futures looking as green and rosy. Can you be green and rosy at the same time? But they are green and rosy this morning. Looking good, Tom.
We're going to run with green and rosy, Guy Johnson. Pointing higher by 0.8% after losses of about 1% for European stocks yesterday. The sector breakdown yesterday was food and beverage at the top, and it was technology near the bottom in terms of the sector play out. Today, it is a brighter picture. That handoff then from the US session pointed to gains of 0.8%. The earnings story as part of the oil price a little softer, still on 106 though on Brent, continues to be a factor. FTSE 100 futures pointing to gains of 68 points. Political risk, of course, remains an issue here in the UK. DAX futures looking to add 200 points, pointing higher by 0.8%. Anna.
Let's have a look at some of the mostly German companies that have been reporting this morning then, Tom, that they could be on the move this morning. We'll start with Siemens, the industrial giant, of course, increasingly part of the software and AI theme. The looking backwards numbers not so bad. The confidence in the future, though, not so great. So we'll see where the market focuses. There's a big buyback in the mix as well. TUI, certainly could be an interesting one. Second quarter underlying EBIT loss, as you might expect from this kind of business at this kind of season. But it looks to be in line with estimates. We'll see where that one goes. And insurers in focus. We've heard from, this being the day where we hear from lots of German businesses, Allianz reporting a record profit in the first quarter, helped by property casualty insurance, and the asset management business, of course, PIMCO reporting as part of this business, of course. Guy.
OK, here we go. Wednesday session. Let's talk about the numbers. Let's see what we're going to get. We are going to see a positive session to start with, at least. Let's see how the rest of the day progresses. Let me show you some numbers, give you an idea, first of all, what the FTSE is doing. It's expected to be up around 0.9%. Can we park politics for one day? The King's speech is on a little bit later on. We will watch King Charles in the House. Let's talk about where we're going to see other markets going. So FTSE is expected to climb. Stock 600 is up by 0.3%. CAC 40 could be interesting today. Big unemployment number out of France today, which paints an interesting, again, politics story going in to 2027. But maybe, again, we'll park the politics for one day. The CAC 40 is up by 0.6%. The IBEX is up by 0.6%. It's a big German day, as you guys have been saying. So I would suggest that maybe it takes a while for the DAX to get going this morning. So, Tom, sectors.
Basic resources. Putting in a strong session in the first few moments, up close to 3%. You've seen some gains for pricing around copper, around iron ore. Silver is up as well, so that's tying into the basic resources space. The gains are coming through there. It's the top performing sector, at least right now, up 2.9%. Banks also gaining 1.2%, and tech a bit of a turnaround from the European session yesterday when it was one of the laggards. Tech as a sector is currently up 0.9%. On the downside, just three sectors in negative territory. Travel and leisure currently down 0.2%. Personal care down 0.2%. And energy on slightly weaker oil prices in the session today. That sector is off a little bit, just around 0.2% as well.
It's been something of a week of strength for the mining sector. Earlier on this week, we saw an index of European miners rally to its highest intraday level ever, as on the back of those copper prices. So perhaps we're getting another day of that. But broadly, most sectors then, Guy, do seem to be in positive territory.
Siemens is the biggest points drop this morning in terms of how we are seeing it hitting the market. So that's interesting. SAP is also under a little bit of pressure. In fact, there's a lot of German stocks on the downside. Deutsche Telekom is also off as well. Tech is leading. As you say, the miners are doing fairly well. I don't kind of... Do we wait? Are we going to see progress? Are we going to see Trump landing later? I think he lands kind of just before the market close here in Europe. Are we going to see him making comments? Is he going to be tweeting as he arrives? I don't know. The potential for volatility today seems certainly there.
There is always that potential for volatility, perhaps. So European equity markets then opening on the front foot. In fact, I say opening. We haven't got all of them open. The DAX is not yet open, and there's quite a lot of corporates, as you say, Guy, reporting out of Germany today. So we'll wait for that one. But elsewhere, we see gains of around 0.6% on the Stoxx 600. Joining us now in studio, Paul Markham, Investment Director and Head of Global Equities at GAM Investments. Paul, nice to have you with us. We caught up with Max Kettner earlier on, and he is Max by name and Max bullish by nature, it seems, for global stocks, or in particular US and Asia stocks, not so much Europe. Does that fit with your stance around global stocks at this point?
Well, thanks for having me, by the way, Anna, and good morning. Yes, I mean, we've been pretty bullish on the whole, and we've been very constructive towards the tech story, and that's been proven to work pretty well since the beginning of the Iranian conflict. And clearly investors have flocked towards those kind of areas which they think are secularly blessed, which aren't cyclically challenged and don't have the uncertainties of the oil price as a major part of the investment case. However, I think going forward, there is the likelihood of there being some kind of a pullback at some stage. We saw the beginning of that yesterday. The market did recover intraday. Valuations aren't such a concern if you look at the kind of earnings trajectories that we're seeing, and that's demonstrated very well, for example, by some of the Korean names, which are experiencing unprecedented amounts of demand, in particular for high bandwidth memory. But I do think that the market may well be tempted to rotate. That may either be away from tech completely or within tech from potentially hardware into software, potentially for a trade.
OK. So in terms of the valuations there, and often we speak to people who will say, well, people who want to be long tech will say, OK, yes, they've rallied a lot, but they don't look expensive. Certainly we hear that in the Asia context around some of the memory makers. How much confidence can we have in the earnings that underpin those valuation conversations? Do you think?
Well, I think there's a couple of, you can look at it two ways. One is that for some of the hyperscalers, the balance sheets are very, very firm. You have excellent, net cash positions, for example. They are profitable. So in some cases, earnings growth can keep pace or exceed revenue growth. And, that's certainly a sign of some of the strength that they have in terms of their basic business model. I do think, on the other hand, that you can make the case that some of the orders that are placed aren't necessarily all real. So book-to-bill isn't necessarily what you might think it is. There's, the potential for there to be overinflated orders, particularly for semiconductors. So that's something to be watched, I think.
When do higher yields become a problem for tech?
That's a great question, actually, Tom. And if you think back to February 23 with the Nvidia moment, as you may call it, since then there's been a breakage of the negative correlation between treasury yields and the tech equities. And it doesn't seem to bother the market so far. I think when it does become a problem is exactly when valuations become potentially a concern. And that's because clearly the longer duration part of the market can't look cheap anymore with a much higher risk-free rate. So that's something which I think will at some stage hit. For now, I think we're in something of a... I hesitate to use the word bubble because I think AI is very real, but there is a bit of a gold rush, I think, towards those stocks. And I think positioning data will show that a lot of people are on the same side of the boat. So it will take a reason, and I think that could either be a spike in treasury yields or potentially something like regulation becoming a little bit tighter around AI and its usage for the stocks to take a little bit of a pause.
Do you want to take a kind of barbell strategy? Do you want to hedge some of that exposure that you're taking to tech, given that potential drawdown that you foresee in the future? How do you think about adding protection?
We've thought a lot about that, and the problem that we see is that there is a change in what you could classify as being defensive, and the kind of names which we would buy once upon a time, which would be HPC, it would be fast-moving consumer goods, those kind of things which used to be very sort of relatively acyclical, low earnings growth, but kind of firm, predictable earnings growth. The franchise value of those firms has really disappeared, and things like own brand at the supermarkets has taken over from the traditional brands. Input costs have spiked, tariffs, higher wages, inflation, pricing issues. So it's quite difficult to know what. I think certain areas of healthcare are potentially quite interesting. If we see a full-blown rotation, of course, into value, then the banks are likely to be in the vanguard of that. But again, valuations there aren't the bargain basement that they once were. So I think there is a chance of wanting to rotate at some stage and take profit out of tech, but what to go into is a little bit trickier.
If tech falls, would Trump rescue it? I.e., would Trump change tack? Trump likes the stock market being where it is at the moment. Does that give me confidence that stock markets will not drop? How certain should I be that Trump would do something to protect my portfolio? Because I'm hearing a lot of investors talking about this at the moment.
Well, I think there is the danger, of course, that if confidence in US institutions continues to ebb away, and if the sort of whole, the appointment of Warsh or the nomination of Warsh as a potential Fed chair is anything to go by, then it may well be that we end up with treasury yields going up, dollar down, and that's a bit of a mixed picture as far as Trump's concerned, and that's something which may not necessarily be good for the equity market. I do think that the presence of Jensen Huang on this trip now to China at the last minute is an important development, and that may be something of a mini taco in the sense that, there may be some leeway around China being able to buy certain types of chip, and that's something which may sort of come in as a kind of a put in terms of tech.
I'm just wondering how, in a world where equity markets are vitally important to the president's kind of ego standing, how he feels about the world, how do we react if we do see a wobble? Are we going to see policy support? You talk about Warsh. Are we going to see maybe the Fed supporting equity markets? What kind of cuts could we see if we do see an economic slowdown in the United States? I'm just trying to think about kind of what comes, maybe not in 3 months or maybe even 6 months, but 6 months after that, maybe we start to see the economy slowing down. Maybe we start to see the tech sort of wobble. We're going into the midterms. How should investors be thinking, not now, but in 6 months' time?
Well, the problem with this, guys, it's kind of circular, because some of the concerns that I just mentioned around US institutions, their robustness, their independence from the White House, if that's compromised, you know, that could end up with there being the concern that they're going to cut into an inflationary environment, and one where the labour market is being used as cover.
Care about that?
I think if they can care about that on a sector level basis, but you might get a rotation into areas which have lagged, and that might mean that kind of environment would be better for the value end of the market, I would suggest.
Okay.
And that could be better for certain types of financials. However, if that is accompanied by what is perceived to be an oncoming recession or a very significant sharp slowdown in the economy, then those stocks don't work either. And that's what might be classified as what used to be called a stagflationary environment, and that is something in which very few stocks win. So, you know, and that is, to be clear, that's not my central scenario, but it is possible.
OK, and you've mentioned a rotation, the possibility of various rotations, Paul, a few times. And within tech, you were talking about maybe into software, and you talked there about areas of the market that have been unloved. Was that whole episode, that SaaSpocalypse that seems like a distant memory now at the start of the year, was that overdone, and does it lead, I guess the war has provided time for everybody to step back from that particular theme and think about who the winners and losers in that space really might be?
Well, there have been several attempts by the software names to rally, and they've been so far abortive. And I think that one of the reasons for that is the fact that in our own daily lives in the investment industry, the pace of development and the ability, for example, to model stocks using large language models is frankly terrifying. And the ability of AI to come in and disenfranchise certain business models in software, I think, remains a concern. Having said that, if valuations come down low enough, and if the market gets clearly comfortable in its head that there is a moat around some of those business models, then they can rally. But I do think there has to be an existential threat over some parts of the software business model and over certain companies. I think if valuations on software come down below those of hardware, then clearly there is an opportunity there, particularly where earnings growth looks reasonably predictable. But I think that that kind of ironclad premium in terms of relative valuation within tech that software enjoyed for 20 years or more is unlikely to persist.
Paul, is the UK still investable at this point?
I think clearly the noise has become now to an extent where the yield differential in terms of the gilt market, the value status of the stock market are going to be very difficult for it to shake off. And you know, the value status of it relates somewhat to its sector mix, but also to the fact that it's at a valuation discount. The UK used to look at other nation states in the G7, particularly Italy and Japan, and kind of look a little bit down its nose because they were always changing prime minister. We've got the same problem now. I think the idea that the Labour administration coming in, which was going to represent the grown-ups in the room, has now been smashed to smithereens, and I think that that's something which the market's going to be concerned about. And, of course, anybody that thought when the government came in July 2024 that it was going to be a replay of the Blair administration, I think we're going to be sorely disappointed, because I think what we're going to see now for the next 3 years is a government with a large majority, if it changes leader, looking to enact policies which it's been itching to do for many, many years. And I think that is going to scare markets, and I think that's going to scare the gilt market, and I think the equity market suffers as a result.
Paul, great to see you. Thanks for stopping by to see us. We really appreciate it. Paul Markham, Investment Director and Head of Global Equities at GAM Investments. Call 6 looks like this. Let's take a look at the numbers and see what's happening. You are certainly getting a positive performance out of the chip sector today. ASML is up very nicely. Schneider's not having a bad day. Weakness elsewhere. Rheinmetall and LVMH both signalling softness today. Actually, so is Nestle, which is interesting as well on the consumer front. Details. What else do we need to be watching? Siemens in focus. Chloe's got the details of that.
Good morning, Guy. Indeed, Siemens is seeing a little bit of weakness this morning. It said it would buy back as much as 6 billion euros of shares because orders have surged, and is really benefiting from demand in the software space, in the digital infrastructure space. But at the same time, it did also say it was quite cautious because of the impact of the war on supply chains. And so it seems that investors are focusing currently more on that cautious commentary rather than that big buyback. And we're down about 1% this morning. It is, however, a good day for Merck after that company slightly raised its guidance, and that was thanks to a very strong performance in its life Science division, and that provides an early boost to the CEO, who's joined quite recently, and we're up very significantly this morning, almost 8% for Merck. We're also in the green for ABN AMRO after the Dutch bank reported quarterly profit that came in ahead of analyst expectations. There was strength in both fee income and net interest income. It's also a company that's been benefiting from cost cuts and the CEO focusing less on less profitable businesses. And so we have quite a strong set of results this morning for ABN AMRO, and also up about 8%. We're also up for Intertek after the product testing firm said that it was leaning towards recommending a fourth and final takeover offer from EQT. And so this might be bringing an end to this takeover saga, and we're up about 7% this morning. And finally, Heineken is seeing a little bit of weakness this morning after JP Morgan analysts said that it's really unlikely there'll be any near-term outperformance for that stock, because the market is waiting for a new CEO to be appointed and a new strategy to be outlined. And so in the meantime, we're really going to see those shares being held back a little bit. And so we're down about 1% on the back of that for Heineken.
Chloe, thank you. Chloe Melly with a rundown of those stocks on the move this morning. Coming up then on the programme, we'll get back to those results from Siemens, highlights from my conversation with the CEO, Roland Busch. That's next. This is
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Up to the minute geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. This week, leaders from the world's 2 largest economies will come together in Beijing. With geopolitical stability and the future of global trade on the line. Trust Bloomberg to go beyond the headlines with on-the-ground reporting, expert analysis, and real-time market reaction. The Trump-Xi Summit. Special coverage all week right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. Happy Wednesday. We are 18 minutes into today's session. You're seeing gains across the European equity space, as you can see, up 0.7% across the benchmark. The breakdown across sectors, top of the list, basic resources, followed by the likes of energy and telecoms. On the downside, travel and leisure under a bit of pressure, down 9 cents. But you're seeing the gains there across all the major indexes, including here in the UK, where the FTSE 100 is currently up around 0.8%.
So let's dig into the German numbers this morning, and numbers specifically from Siemens, a mixed set of numbers for Germany's most valuable company. That's being reflected then this morning in the share price, retreating just 1%. The company, which makes everything from trains to factory software and controls, will repurchase as much as 6 billion euros worth of shares. Orders rose 11% during the second quarter, but there was a decline in profits. I spoke to the Siemens CEO, Roland Busch, about the results.
We see a very strong demand from our customers. Let me start with our automation business. We are really picking up momentum, factory automation in particular. We have a very strong growth also in China from our new developed product, value for money products in China. They really pick up momentum. Remember, we launched 18 months ago, 16 of them, another 9 months, 26 of them, or recently 26 of them. They really hit the market very well. So, it comes back also in the other markets. We see a strong growth of our automation business in the United States, from a low level though, but we see a very strong growth there. So this is one piece. The other one is software. We have a very strong increase in our software revenue. It's 14%. Which is very strong, and this is across our whole portfolio. The last point is AI. We have already a couple of products in our software offerings, AI, which is received very well by the market, which drives our growth as well. And then we launched our Eigen engineering agent. This is really an agent which programs industrial computers for you, PLCs for you, and it does it really in a way that you can finally release the software because it's validated and you can release it. This increases the productivity of engineers by 50%. It makes you 2 to 5 times faster, and the quality goes up at the same time. We launched it at Hanover Fair, and it really lands very well on the market.
OK, sticking with the AI theme then, Roland, I wanted to ask you about regulation in Europe. We've seen that the EU has amended its AI regulation just recently, and you've been quite critical in the past of where the regulation has weighed on your business and your ability to develop industrial AI in Europe. Are you happy now? Will you now increase investment in that area in Europe?
So we are happy with that step. Why? Because now the AI Act, which is released, differentiates between regulating consumer and industrial applications of AI technology. And in industrial space, you have already existing regulations. We call it vertical regulations. So there's no need to regulate. This really helps a lot in order to really deploy AI faster.
The Siemens CEO, Roland Busch, speaking to me earlier on today. So he was happy with the change in AI regulation in Europe. He didn't see some of what was regulating his business as necessary. He was less happy with the geopolitical outlook. He said it's a very demanding geopolitical backdrop. And just as we heard from Billfinger, that is having an impact on companies' decision-making. Investment decisions get delayed when that kind of development in the Middle East happens. And it sounded, from talking to both of them, like it's not just companies in the Middle East. This is a wider thing because their clients deal with higher energy prices and such.
So uncertainty is the problem, and you wonder if that's going to change anytime soon. Asset prices are swinging around all over the place, economic outlook swinging around all over the place. Doesn't feel like an environment in which it's easy to make decisions. We've also had an earnings update this morning from the shipping giant Hapag-Lloyd. It said pressure on freight rates led to significantly lower results in the first quarter. The share's up by 3.25%. I just put that out there in terms of what we are seeing in terms of market sentiment. Brendan Murray, who leads Bloomberg's global trade coverage, joining us now. Earnings ahead of consensus. Rolf Harben, CEO, describing the first quarter as unsatisfactory. Like, why unsatisfactory?
Yeah, there were probably a lot of cost pressures there that they could have gotten under control in a better way. But look, the Hapag-Lloyd, like a lot of the major container carriers, is dealing with multiple headwinds and tailwinds. They see demand as being pretty strong still, despite the disruptions in the Middle East. But they're also dealing with an overhang of supply. There are new ships coming online, so they have to manage the supply and demand balance, and it's a tough one to get right now when you have the Strait of Hormuz blocked. The immediate concern that many of them have is several ships inside the Gulf that aren't going anywhere, and so and just generally the disruptions that's causing around the Middle East, affecting trade between Asia and Europe, which is a big part of Hapag-Lloyd's business.
What do you the Trump-Xi meeting? Later this week, in about 48 hours or so, maybe a little less, 24 hours or so. Trump says he wants it all to be about trade. I guess my question would be, do we expect anything beyond some pretty simple gives from China in terms of soybeans and beef and Boeing aircraft? Is there anything more material that we expect to come out of this meeting on the trade front?
You know, it's interesting. The tone of this meeting is being set up very differently than the mood between the two countries a year ago. It was almost a year ago that President Trump put out on social media that it was no more Mr. Nice Guy with China. Overnight, we saw his posts calling the President Xi a brilliant leader and praising the ingenuity of the Chinese people. And so there's a very different tone entering these talks. And for good reason. You have China basically held the critical minerals hostage last year for the whole world and showed the U.S. and everybody else that it can play hardball when it comes to trade leverage. President Trump has his own export controls on chips and those kinds of things. So you have the tension in the trade relationship. Remember, the U.S. had, with some consistent stability in the trade relationship. Remember, the U.S. has 2 301 investigations that are still going on. They're both targeted squarely at China when it comes to forced labor and industrial overcapacity. President Trump could rebuild that tariff wall that came down from the Supreme Court and the one that will expire on January 24th. The Chinese are going to want to know how tough he's going to get with them on these new tariffs that are coming in the next several weeks.
Brendan, what?
Okay, guys, Nifty का देखो टारगेट होने वाला है कंप्लीट 23,300 का जो पुट सॉर्ट किया था 150 के नीचे 100 का टारगेट था. मुझे लगता नहीं वो 100 आएगा क्योंकि फ्यूचर का चार्ट ऑलमोस्ट रेजिस्टेंस को रीच करने वाला है. 23,580 पहुंच गया. 23,600 टू 650 रेजिस्टेंस जोन है, तो 20 to 40 पॉइंट का और स्पेस है बस ऊपर. उसमें ये 100 पे जाएगा, चांसेस कम है. मुझे लग रहा है मैक्सिमम 110 तक जा सकता है. निकल जाएंगे वहाँ पर फाइनल टारगेट पे. 110 पे निकल जाना फाइनल टारगेट. 100 का वेट भी मत करना. इट इज़ जस्ट गोइंग टू हिट द रेजिस्टेंस एरिया इन फ्यू मिनट. निफ्टी फ्यूचर की मैं बात कर रहा हूँ, ध्यान रखना. स्पॉट का चार्ट नहीं देख रहे हैं. मॉर्निंग पे सेल किया था 23,300 का पुट 220 पे. 180 पहला टारगेट था, 150 दूसरा टारगेट था. 150 के नीचे ब्रेक करता तो 100 का एक टारगेट रखा था, बट मुझे लगता नहीं वो 100 तक जा पाएगा बिकॉज रेजिस्टेंस हिट होने वाला है फ्यूचर चार्ट में. 23,600 टू 650 का जोन रेजिस्टेंस का है. 650 तक चला जाए बिल्कुल टॉप लेवल के आसपास, ये 660 तक, तब हो सकता है जीरो भी आ जाए, बट नहीं तो 110 पे भी निकल सकते हैं. Currently trading at 112, 23,300 का पुट. ठीक है, अच्छा मार्केट है. ठीक है, हो गया टारगेट डन. डिस्टेंस हिट हो गया है, निकल जाना इसमें. 112 के आसपास ही निकल जाओ. 110 पहुंच गया. ठीक है, रेजिस्टेंस को हिट कर दिया इसने. 23,600 इज हिट इन फ्यूचर. लेट्स सी कितना और ऊपर जाता है. 23,300 ने भी 110 टच कर दिया. 10 पॉइंट का बफर है, देखना पड़ेगा. मुझे लगता तो नहीं ये जाएगा. बिल्कुल टॉप पे जाना पड़ेगा इसको फ्यूचर को, तब जाके ये और रिड्यूस होगा. एक्सपेक्टेड है मार्केट इसी रेंज के आसपास क्लोजिंग देगा शायद 23,600 to 650 के आसपास.
This time round it was dressed up as how do we save some cash? And I think that, you know, actually this is part of the issue, isn't it? Is you need someone who's good at the political game, who has a political vision, who can actually convince his MPs that actually where we are today isn't very good, but I'm going to take us here and this is how. And that storytelling has never been Keir Starmer's forte.
Do any of the leaders that potentially could emerge, can any of them do that? You talk about the fact that we've got to save some cash. UK spending, to the gilt market's mind, is out of control at this point in time. Cash does need to be saved. Finances need to be put back on a more even keel. Something needs to be done. Do any of the leaders look like they could be going to deliver that? Because the bond market's sitting there going, we're worried here. We think whatever comes next is going to be a government that spends more money, and we're not OK with that.
I mean, it's very hard to tell because no one's put themselves forward as a candidate. No one's outlined the policies they're going to pursue. And it's very hard to know.
But does anybody from within the Labour Party have the mindset to do that, to recognise what is happening in terms of the fiscal position the UK finds itself in?
I mean, there are certainly people within the Labour Party who are thinking sensibly about the economy, if that's what you mean. There's a Labour growth group. There are a couple of reports that have come out this week that have been completely sort of subsumed under the noise around leadership and so on, that make a lot of pretty sensible suggestions within the fiscal constraints that Rachel Reeves has set out. So it's not necessarily the case that any success is going to come in and do what Andy Burnham said he was going to. You know, why are we in hock to the bond market? That's not necessarily the view of anyone who's going to come in. And I suspect that as any leadership contest starts, candidates will be aware of the fact that the bond market is out there and reacting.
And not all European governments see their leaders change quite as quickly as we seem to manage in the UK these days, but many of them face very low poll ratings. What is it that this feature of Western politics right now, that we either don't give people very long to do things, or we're just so, voters in general are disappointed with what they see, do you think?
I think across Europe, in fact, across most of the Western world, over the last 20 years or so, we've seen an erosion of trust in politics. We've seen the rise of what you might call anti-politics, which is people saying, I've fed up with the mainstream. They haven't generated economic growth. They haven't made my life better. So voting for alternatives. We saw that in the local elections with Greens and Reform UK. And increasingly that worrying trend that electorates tend to vote against people rather than voting for people. You see this more and more, which is like you vote against the person you really don't like because there's no one you really do like. And I think this is tied up with a whole load of things. It's a sort of erosion of deference, but most fundamentally at all, across Western Europe particularly, it is a failure to generate growth. It is a failure to make people feel that the prospects for the future are better than, or at least as good as they were for their parents and so on. And I think that is something that's going to be a priority for the next Prime Minister.
It's easy to look at the results from the local council elections and project that Labour is going to lose the general election, that Reform and the Greens are going to be successful in some format, and maybe there's some kind of coalition. I guess my question is, at what point do we see the Green Party and Reform tested on policies that they have yet to fully outline and construct for the electorate?
I think you've got to be very cautious about reading across from local elections to general elections, partly because of turnout, partly because people tend to behave differently in local elections than they do in general elections. People feel a bit safer to experiment in local elections. They're what political scientists call second order. And you're absolutely right that if Reform and the Greens keep doing well in the polls as an election approaches, they will be subject to far, far more scrutiny than they have been up to date. There are real challenges creating a professional national political party, if not from scratch, then from very little, which will confront both those parties. So I think, obviously, this is a really challenging situation for Labour and the Tories. Obviously, Reform in particular, but also the Greens did well in the local elections. But you can't just glibly assume that that situation will persist until a general election, not least because that general election is ages away. I mean, in theory, at least, President Trump won't be in the White House by the time we have our next election.
When's the next election? How many more Prime Ministers do you think we'll get before then? It's every 2 years, isn't it, now?
That's the sort of prediction I just can't make.
Nice to see you. Thanks very much for dropping by to see us. And Evan On, Director of UK in a Changing Europe. We didn't even talk about Europe. Coming up, we're going to look ahead to the summit between President Xi and Trump with Alicia Garcia-Herrero, Chief Asia-Pacific Economist, joining us from Natixis. That conversation is next, and this is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. Welcome back. You're watching the opening trade. We are 48 minutes into the equity market session. And this is what the story looks like thus far. Actually, it's not changing very much. You've got an initial boost around most of Europe. Paris is lagging today. I'm not sure that's much down to what we're seeing in terms of the unemployment number, which has been revealed. It's more down to names like LVMH under a little bit of pressure. But European equities basically on the front foot. Feels like a rear-view mirror move to a certain extent, though. European equities kind of went out at the lows yesterday in the United States. We have to price that in. What happens next in the United States may not be determined until Trump lands in Beijing a little bit later, Tom.
Jamie Dimon says there's a bit of complacency in the markets. He's also been saying, of course, the JP Morgan CEO, that fixing, quote, stupid trade issues between the US and Europe would pave the way for better growth. Speaking exclusively with Bloomberg's Francine Lacroix in Paris, Dimon said the US would benefit from a stronger NATO.
I would say that Europe, including the UK, know what to do, and it's the Draghi report. There are 300 items in there about common capital markets, common regulations, allowing cross-border in the EU competition. There's huge regulatory, not tariff, but regulatory burdens. They need to do the same thing in the UK. I think Keir Starmer's a very smart guy. Politics is really tough. They're in a bind because of debts and deficits, and they inherited a lot of that. I think the world of Rachel Reeves, and they got to be tough. They got to say, we're going to do these things. And the short term may not be great, but governments have to get the stuff done right that grows the economy and militarily. And I think they need to work close with Europe. And if you remember, Keir Starmer and President Macron, they were going to work closer. Not reversing Brexit, but military alliances, intelligence alliances, making sure the economies have economic relations good for both the continent and good for Europe, good for the UK.
You're building a big mega project in Canary Wharf that everyone is quite excited about. Does this potential politically instability actually change your view on everything, or do you see costs going up? Or are you worried about taxation?
Not political instability, but if they become hostile to banks again, yes. I mean, I've always objected to the fact, we didn't damage the UK in any way, and we paid probably $10 billion of extra taxes by now. I don't think that's right or fair. If that happens too much, we will reconsider.
Look, I know you've also looked a lot at Europe and funding, and especially when it comes to security. How much time are you spending making sure that defense companies, that companies in Europe have enough funding from JP Morgan to make sure that they can, defend
a lot.
The continent?
So we have this huge effort. We deploy over the years $1.5 trillion to help. It's not just it's resiliency. So it's even medicines and rare earths, which would be defense, semiconductors, defense. But it's anything you need. So Europe needs LNG. So we look at that as resiliency for Europe, not LNG in America, but shipping here is resiliency. So we have professionals doing it. We've got an unbelievable advisory group. We've dedicated 30, 40 people. We're doing research now, which you might be interested in, across the shipbuilding ecosystem, across the active pharmaceutical system, the rare earth system, and then having public policy which puts us in a better position. We, the democratic world, should never have gotten here where we're so reliant on other people, potential adversaries for rare earths. And we did. Right. So don't cry over spilled milk, but let's fix it. And we got to fix it right away.
And this is good for the U.S. Does the U.S. need stronger allies?
This is good for the U.S., and I think having strong allies is good for the U.S. So my view is we need a stronger NATO. They're doing that, by the way. So, our president pushed them a lot. Well, they're all doing it, which is a good thing. But we want to keep it together. The goal of it should be to have a stronger NATO, not a weaker NATO. The goal, in my view, if you ask me what the goal should be of our economic relations with Europe, should be having a stronger Europe to get you to help you do the Draghi report. And I wrote my chairman's letter, maybe a pipe dream, that if you did the Draghi report, I would give you one big, beautiful free trade bill.
JP Morgan CEO Jamie Dimon speaking to Bloomberg, speaking to Francine exclusively. Interesting thoughts there on the UK. There was so much noise around the UK story yesterday. Maybe that gets a little lost, but maybe it gets some people will think about it, some others really won't. It's interesting that he is really quite positive on a strong Europe, isn't he? Always. He thinks that's good for America, whereas there'll be some in the Trump administration he's pointed to who said that a strong Europe isn't necessarily in the interests.
Yes, from some in the Trump administration, it's how you define what a strong Europe is. But pointing to the Draghi report and saying that needs to be implemented. Yeah. There's an interesting story that we've been reporting out, as well as the FT, on potential changes at the top. We talk about, and we heard from Jamie Dimon saying, yes, those investments in the new headquarters or the new office space in the UK would be at risk if the government was to change its policy around additional taxes on banks. So we think about the headcount that goes into that office space. JP Morgan apparently set to overhaul the upper ranks of its investment bank as part of a broader reorganisation. And according to the Financial Times, the reshuffle is set to be announced later today. So you get some new co-heads of the global investment bank as the deal-making has really boomed at JP Morgan.
Who's the next Jamie Dimon?
That's the key question, the succession question.
But still there, still keeps going. Another few years.
Yeah.
We'll see what happens.
Well, I can't answer that one, but let's have a look at what else is on the agenda for today. We've got the monthly oil market report from the IEA. That's at 9 a.m. UK time. OPEC and from OPEC, of course, as well, at 12 UK time. Then we get first quarter euro area GDP. That data drops. The King's speech is going ahead. And despite the fact that Wes Streeting is going to be meeting Keir Starmer beforehand, the BBC at least reporting that there's not going to be, well, at least Wes Streeting is not planning to say anything that will derail the King's speech. So on that we can be perhaps sure. We get some earnings out of Asia coming through this morning and US PPI.
OK. There's a lot going on. It's going to be a busy day. Adam Linton joins us now from our MLive team. Any of that Anna's just read out, lots going on, going to stop stocks going up?
No, probably not at the moment. Okay. I mean, it's the conversations we've been having for weeks now that AI is just very much the dominant theme. Yep. And, as I think Mark was on your show saying yesterday, unless there is this big, huge negative AI catalyst, then it's going to be pretty hard to derail things. You had Max Kettner early on your show saying that... Exactly. Just a tad, yeah. So saying, the position isn't screaming sell. So, in the absence of any big, major negative catalyst, we're probably going to keep going. And in the interim, everything just feels kind of peripheral to AI at the moment. I mean, yes, Iran has not been resolved, but it's not really having too much cut through into the market if you're looking at the US and Asia. Europe may be a slightly different story. Obviously, there is only so long that can go on for. If it rumbles on and on and on, then the story changes. But we're very much just not in that kind of mode at the moment.
What are the biggest potential risks on the horizon?
Aside from AI, that's obviously the key one. I think, we are watching for this Trump-Xi summit at the moment. A lot of people are saying that could potentially be a risk. But even then, I don't think it's, in this kind of big crunch meeting that, in years gone by that it would have been. I mean, he's got a plane full of, some of the top CEOs in the world. You're probably going to get a lot of top headlines about they've made this many deals. And on the overall trade front, the source of contention between the two, Trump just doesn't really kind of have the leverage that he has in years gone by. If you look at gasoline prices heading into the midterms, he's had his wings clipped by the Supreme Court when it comes to trade. Then there doesn't really appear to be as much angst around this. And there's even the tail risk of, do we get some sort of announcement on Iran? It may be Trump trying to push positivity on that. It may be something that doesn't bear fruit, but it wouldn't be surprised to see a positive Truth Social post on that front.
It was interesting that he did say, he was asked, and it's hard to know whether it's flippant or intentional, but he did say something about not caring about where the US economy is going. We'll see, and I know Mark has concerns about stocks at these highs and whether, therefore, he can take more risks around the US economy. So we'll see if that comes to pass. But Adam, thank you very much for being with us. Adam Linton joining us there with the latest on the markets. We are going to pick up some of the oil conversations later in programming today.
I will be. We're about to talk to the IEA. The IEA report is about to come out. Looking forward to hearing exactly what the inventory story looks like, or what expectations are on inventories. When does that become a problem? Do oil prices stay actually in relatively well-behaved territory?
That ties back to the comment that Anna was just flagging by President Trump. It's pretty remarkable. I don't care about the US. I don't care about households or the economy. I'm paraphrasing, but that's the concern amongst his advisors. He's focused on Iran. He's not focused on the fact that gas prices are up at $6 a gallon in California or $4.50 elsewhere. That's the political risk.
I hear there's an election in November.
Stocks are higher here in Europe. Futures pointing higher for the US as well. That is it for the opening trade. The Pulse is up next.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
President Trump adds the Nvidia CEO to his entourage on his way to China. He's seeking to focus the upcoming summit on trade and not on Iran. The International Energy Agency warning of an unprecedented supply shock as global oil inventories fall at a record pace. Plus, SoftBank reports a surprise jump in profit, while Hapag-Lloyd is hit by supply chain disruptions and higher freight rates. We are going to be speaking with the Hapag-Lloyd CEO this hour. Before we do all that, though, let's talk about what is happening in the markets and where we currently are positioned. SoftBank, you would have thought actually that might have given us a little lift when it came to the S&P futures. It's Nasdaq's up. S&P's only up by 0.2%. Crude's a little lower, but we're still north of 105, 106.72 on that contract. The US 10-year 445. We're a little bit bid. Bond markets are a little bit bid today. Yesterday, we were pretty terrified of the inflation outlook coming out of the United States, the CPI print. And the cable rate, 135.21, as we watch Keir Starmer continue to cling to power in Downing Street. European equities generally well bid this morning. France is a little bit of an exception. Check out the French inflation rate today. Worth paying attention to there as we head towards 2027. France is only up by a little bit. You've got names like LVMH under a little bit of pressure. But broadly across Europe, we are higher. A lot of German corporates reporting today. And actually, the German market is up by around 0.8%. But the FTSE's up by 0.7%. So we've got a busy day coming up. There's plenty to talk about. Air Force One is halfway across the Pacific. Probably a great time to get this show started.
Newsmakers and market movers. This is The Pulse.
Morning, welcome to the show. I'm Guy Johnson, in for Francie in London. Let's talk about where we are with this trip that the President of the United States is taking to China. The NVIDIA CEO, Jensen Huang, has joined the US President on that visit to Beijing. It was a last-minute addition. He picked him up in Alaska. So Air Force One always apparently refuels in Alaska because it wants to have enough fuel that when it lands in Beijing, it can take off immediately again. Anyway, so that was where we caught up with Jensen Huang. He got on the plane. Everybody's happy. US futures got a little lift off the back of that. Strangely. Anyway, his name had been notably absent, of course, from the list of CEOs that are accompanying the president. The president is hoping his talks with Xi Jinping will be focused on trade and not on Iran, apparently, though.
I have a great relationship with President Xi, and I think it's going to remain that way. We have a lot of things to discuss. I wouldn't say Iran is one of them, to be honest with you, because we have Iran very much under control. We're either going to make a deal or they're going to be decimated.
There's going to be a deal. There might be lots of deals. Like the Boeing CEO's there, GE's there. Lots of deals to be done. Min Lo joins us now, Bloomberg's China correspondent. Can we really not talk about Iran? Can we really focus on trade? Trump wants to do that. Are the Chinese going to play ball?
Yeah, I mean, of course, we cannot ignore that Iran is happening in the background, but I think both economies are coming in slightly weakened here. The U.S. is feeling the impact of the energy spike at the pumps, and U.S. citizens are feeling the pinch there. But for the Chinese as well, domestic consumption is still pretty sluggish, and I think both sides seems to have the intention to make sure that Iran is not going to be center stage here. I think there is not that much that China is willing to do for Iran. I think they are very cognizant that China's relationship with Iran really pales in comparison with its relationship with the U.S. That is still the key relationship here. And when it comes to trade, I think China really is keen to ensure that there will not be a re-escalation of those tariffs after the IEEPA tariffs have been struck down, after the latest baseline 10% tariff that was meant to be a stopgap measure was also struck down by a U.S. Federal Trade Court. I think China wants to ensure that they will be able to find a way to expand trade. That's why they're discussing this Board of Trade, and I think they'll be really negotiating the final points of what sort of tariffs both sides are willing to sort of give up on in exchange for more market access. You can get a hint of what sort of sectors could be in focus, because there are a lot of financial sector companies like Visa, like I believe MasterCard is coming as well, BlackRock, Blackstone. They will be looking at whether they can get licenses, for example, to operate securities brokerages here and to clear UN transactions here. So that's going to be in focus. Of course, a number of other major company CEOs coming, Boeing in particular as well, looking at this potential mega deal, 500 jet deal that could potentially put an end to nearly a decade of frozen sort of transactions with China.
Yeah, Larry Culp's there as well. So big engine orders potentially on offer as well. Talking of engines, the NVIDIA CEO getting on board Air Force One in Alaska. Why is that such a big deal?
It is such a big deal because Jensen Huang has been an important interlocutor in this U.S.-China relations, right? He is one of the key factors why the U.S. had rolled back some of the tech export curbs and finally allowed the sale of those H200 chips to China, because Jensen Huang has been a huge advocate of that. And there is a bit of a blockage here right now, because even with the sales approved, the Chinese side are now not allowing their domestic companies to buy from NVIDIA. They're trying to boost their own domestic chips production, and perhaps there is this idea that the H200 chips are not that advanced, right? Domestic chips, especially if you stack them together in a cluster, could close the gap with the H200. So there's, a lot of speculation about whether his presence mean that China might finally give the green light for its domestic companies to buy from NVIDIA, or could the US relax those curbs even further and perhaps consider selling even more advanced chips to China as an incentive. And we are seeing retail investors really reacting to that, especially if you look at some of the Chinese AI startups like Zhipu, like Minimax. They are sort of rallying today by double digits, 20, almost 40% for some of these companies. So a lot of expectation that maybe we could get a breakthrough on the tech front.
Min Min, you're going to be very busy over the next few days. We look forward to the coverage. Thank you very much indeed for joining us now. Min Min Lo joining us in Beijing before President Trump arrives. Let's turn our attention to one of the other big stories we're focusing on this morning. The International Energy Agency is warning of an unprecedented supply shock as global oil inventories fall at a record pace because, of course, of the war in Iran. Toril Bossoni joins us now, the head of Oil Industry and Markets Division at the IEA. Toril, thank you very much indeed for your time. How quickly are we eroding our inventories when it comes to crude?
Good morning. So oil inventories are drawing at the record pace. Already during April and May, we draw more than 250 million barrels of oil from inventories. And this is obviously accelerating as the disruptions to the flows through the Strait of Hormuz remain restricted, and demand is also declining. But this is the record pace of inventory declines that we've seen.
Okay. When does it become a problem?
The longer the disruptions remain in place, we're already seeing uneven draws in inventory across countries. We're seeing global crude stocks falling. We're seeing it both in the United States and gasoline stocks. And it becomes a problem when refiners are cutting back, having to cut back refinery runs, and the disruptions to crude supplies are translating into lower supplies of products, and we have to cut back demand. So we're getting there. As the disruptions continue.
Yep. Are you surprised that oil prices are so well behaved at the moment? Yes, they're up, but they could be a lot higher. Are they going to go a lot higher? We're trading, 106 this morning on Brent crude. Would you anticipate that once we start to see this inventory issue kind of really beginning to bite, the prices could go up?
Certainly. We've seen unprecedented volatility in oil prices over the past month. North Sea Data traded in a range of $50. This is unprecedented volatility that we're seeing in the market, where in the one hand, market participants are looking at the supply disruptions that are pushing physical prices higher, and on the other hand, contending with the prospects for a peace deal that could allow for flows and through the Strait of Hormuz to resume and for production to recover. So if the longer the disruptions remain in place and the faster that inventories decline, we're going to see increased pressure on prices, certainly.
In terms of kind of how this plays out, the Aramco CEO over the weekend was talking about the fact that even if we saw the Strait reopening today, you would see an effect into 2027. What is the tail on this story? How long, even if we get resolution, will we be suffering as a result of what is currently happening?
Certainly. Even if there is a resolution to the conflict, we do think that it will take time, weeks and months, to resume flows through the Strait of Hormuz to normal pace. There's a lot of tankers that are stranded in the Gulf. There's mining clearance that has to be done. So it would take time not only for the supply chains to resume, but it would also take time to bring workers back into the regions to resume productions. So we do expect a rather long tail in production curtailments towards the end of the year. Even in the best case, if we're seeing a resolution in the coming weeks and into early June. So we do see protracted supply disruptions in the regions and beyond.
Toro, thank you very much indeed. Toro Bosoni, Head of Oil Industry and Markets at the IEA, the International Energy Agency. Let's talk about kind of where we are this morning. So what have we heard this morning over the last 10, 15 minutes? We've talked about what is happening with trade and China and the AI trade and the fact that it was really important that Jensen Huang went on that trip. We've just heard about what is happening in terms of the oil outlook. The question is, how do investors react to all of this? Yesterday, we certainly saw tech kind of rolling over a little bit, but a rise in inflation continues to be one of the main stories that we are watching out for at the moment. So what does the Fed do next? How do you price this all into a portfolio? Great guy sitting next to me to kind of talk about all of this. Andreas Sitterman, Chairman of Vontobel. Good morning.
Good morning, Guy. Thanks for having me.
So you've sat there patiently. You've listened to Min talking about what is happening in China, the strip that's coming up. Trade deals are going to get done. Yeah. Trump doesn't want to talk about Iran. You just heard from Toro talking about the fact that we've got an inventory crisis coming, that oil prices, we're going to see a lot more volatility. Talk to me about how you see the world through these lenses, because you've got so many kind of conflicting forces at the moment.
Well, first of all, I learned a lot this morning already, Good. So I was patient, but listening.
Yep.
I agree with pretty much everything that Min said, for instance. I think the significance of this visit is not so much in GDP terms or increased trade. It's more about what it signals to the world. And if there is a broad-based agreement around having more trade between the US and China, this is very positive for Europe, because Europe arguably is much more dependent on trade with China than the US is. And right now, China is still a bit toxic from a trade perspective. And if that suddenly becomes detoxed, then obviously that's quite positive for Europe. So that's what I take from that. In terms of what we've heard about the oil price and energy, I'm always surprised to hear unprecedented. We hear always a lot of unprecedented. And the last time we had an unprecedented energy shock was when Ukraine was invaded by Russia, and everybody was saying that the Germans would have no heating over the winter because they didn't have any access to gas. The market has ways to take care of itself, and we didn't hear much about that 6 months after, because they actually managed to deal with it. So my assessment, I'm not an expert on energy at all, or supply chains or whatever. My view would be, if there is a lasting peace deal in Iran, oil prices, which ultimately what everybody cares about, will adjust much quicker to our normal, which would be significantly below 100, I would say, than people anticipate today.
So can I park all of that and just focus on AI? Because it seems at the moment that AI is greater than oil, and that certainly is how the markets are trading. Is that the right...
Greater than oil? What do you mean with that? Greater than oil?
Just in terms of the impact that it has. The impact that AI is having right now, the impact that it's having on stock markets, the impact it's having on the economy, is greater than the oil shock. If you were to balance the two out, is the glass half full or glass half empty, I guess is what I'm asking.
Well, it's sort of half full. I think if you look at there's obviously many ways you can look at the impact of AI. Let's talk about the impact of AI on the stock market.
Yep.
Now, we said earlier on the show that stock markets are reaching all-time highs and all of that. But as has been pointed out previously, the stock market's very narrow.
Sure.
It's driven by AI. So actually, there's a lot of value in the stock market. So it doesn't really matter whether AI ultimately becomes a very profitable business with a lot of money being made, or whether we're seeing another sort of mini .com kind of bubble where a lot of players will fall by the wayside because they just can't get the economics right.
Yep.
But the market itself is actually not that expensive. So that's good news. Secondly, of course, it's helpful that hundreds of billions are being invested in data centers and training of people and so on and so forth. So yeah, I mean, it's half full for sure.
Do Europeans see it that way? Because, okay, well, tell me what your clients are saying at the moment. Because what I hear in the States is very buoyant. What I hear in Asia is very buoyant. But when I listen to European CEOs and European investors, they're more fearful.
Well, they're fearful in particular of inflation.
Okay.
And in many ways, I'm quite surprised that we're no longer talking about financial repression. Because it was obvious when interest rates were negative and inflation was slightly positive that we were in financial repression.
Yep.
And as soon as interest rates became nominally positive, but inflation rose much faster, meaning real interest rates are more negative than they were when we were talking about financial repression. Now nobody's talking about it. So our investors, what do they care about? They care about beating inflation.
Right.
And this is where quality stocks with dividends come in. This is where potentially taking some risk in the bond markets comes in. And this is potentially where investing in high-quality growth stocks, and some of these tech stocks certainly are, come in to insulate our investors and our clients from this inflation shock that we're seeing.
How do you as a business position for that? How do you, I kind of, as Vontobel, when you sit there and think about what happens with Vontobel, how do you get flows to turn back round? How do you get this business, given what we're seeing with investors and their kind of view of the world, how do you, what is the plan currently to turn things around?
Well, and you're right, it's got to do with the fact that, particularly in Europe, but I think that goes for most investors today, is there is obviously a fear factor. There is concern. So we need to persuade our clients, and we need to have dialogue with them that allows them to see that without taking calculated risk, they're not going to beat inflation. And the fact is, if you look at the history of financial markets, the inflation rates that we're in today, sort of between 2.5% and 5%, is actually not disruptive for stock markets. It's actually quite good. And similarly for bonds. I mean, the bond shock happened in 22, so rolling down the yield curve, even if there's a bit of a setback in bond prices, you're going to make that up very, very quickly.
Can I ask you a slightly sort of broader question? I was in Zurich a few days ago talking to Sergio when they had the results out. And they're trying to figure out what they're going to do at UBS, and do they stay, do they go? Well, yeah, precisely. How would the ecosystem change in Zurich and Geneva and places like that if UBS were to go? Like, I'm just curious as to your take. I've heard his take, and I've heard lots of other people say it, but I'm really curious to get your take on what would happen in Switzerland were UBS to depart, how that would change the financial sector.
Well, that would be cataclysmic. I mean, it would be a really, I think it's something that we can't really think about, because let's start.
Is it possible?
Everything's possible, as we've heard in life, but I mean, I think it's quite difficult to contemplate. I mean, we've already lost Credit Suisse. We've had a very big consolidation in Switzerland in the banking sector. The impact of the loss of Credit Suisse has already been felt in the corporate lending market. It's not very obvious that ZKB and Raiffeisen and all these others can actually make it all up. If UBS were to go, surely that would mean that they would allocate less capital to Switzerland over time, and that would be a real problem. You might say, well, that's good for the other players in Switzerland, but it would certainly diminish significantly the renommee of Switzerland as a global financial center. So I can't think that UBS would leave. Yes, cataclysmic.
Nice to see you. Thanks for stopping by.
Likewise.
I'd like to get nice to get your wisdom on what is happening around the world at the moment. Andrea Utterman, the chairman of Vontobel. Thank you very much indeed. Coming up, we're talking to Michael Haig from SocGen CIB about oil prices and the resolution or not to what we are seeing in the Middle East conflict, what happens with metals prices, all of that good stuff, all on deck next. This is Bloomberg.
The world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
and laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Morning, welcome back. 20 past the hour. So the bond market's beginning to get nervous. You could see that in the reaction yesterday to the CPI print that we had out of the United States. Some of that was commodities, some of that was services, but the general tone is increasingly that the bond market is fearful. Is that the correct response? Let's bring in Michael Haig, head of FIC and Commodities Research at SocGen CIB. Good morning.
Morning.
So from the commodity, your perch on the sort of in the commodities world.
Yep.
How do you? The bond market is beginning to wake up to this inflation risk. Is that the correct response?
Yeah, because, I mean, we've lifted our inflation forecast for Europe to above 3% for this year.
Yep.
We're reevaluating how the ECB is going to react, not to the inflation, but to think more about growth. So absolutely, it's time for it to react. I think one of the misconceptions in the market, and I know you've just had the IEA on, is the level of inventory. Because I go around and tell our clients, we have about 6.6 billion barrels of oil in inventory, and people on the equity side and the average person on the street says that's a lot of oil.
That's a lot of oil, isn't it? Yeah.
Well, not really, because you can't take all of that out of the system. It's a bit like blood in your body. You can only take a little bit out.
And you can't take it out quickly.
You can't take it out quickly. You've got to keep the pipelines full. There's oil in transit. The real flaw in inventories is more like between 7 and 6.4 billion. So that is about 700 million barrels. And when you're talking about 10 million barrels coming out each day, you get to that number in a few months. And the other thing to bear in mind, and this is why we're so concentrated on inflation numbers, is that even if it opened up today, that vessels can only go through on average every 9 minutes. So it would take about 30, 40 days to clear the strait and about another 30 days to get to the destination. So we haven't seen the right reaction yet in the price.
What is the right reaction?
Well, up, obviously, but conventional...
By how? Okay, magnitude.
The problem is the conventional, normal, inventory-based price forecasting models don't work in this environment. But what I'll give you is some perspective. Suez Canal, the Arab embargo of 1973, they lasted about 5 months. In those situations, prices rose, in the case of the Arab embargo, about 134%. We're up 60% today. So that gives you some perspective. It's not high enough to choke off the demand that you're going to need to choke off in addition to what's already come off the market. So 150.
Okay. And that has a demand effect. We get demand destruction at those kinds of levels.
You get demand destruction from two ways. Price effects, that's people like you and I saying, I'm not going to go on holiday drive, etc. And then you've got policy effects, and that's what you saw in 1973. You see today in Asia, people putting in policies to stop people consuming energy. You'll see more of that.
Recession?
Not yet. We talk about it. Obviously, these previous events, 73, 56, that's what ended the recession. We've only got about between 3 and 5% demand destruction right now. In those previous events, even though the situation was obviously clearly different back in the early 70s and the 50s, we saw demand destruction around 10, 11%. And that causes recession. So we're not there yet, but, I'm fearful of that. Our economists aren't yet.
In terms of you talk about the kind of the effect of if we were to end it now, how long it would take to clear the Gulf. But then there's also just this kind of supply. It just takes a while to filter out into the chemical space. Like what happens in terms of the cracks and kind of just in terms of how that works. What happens in terms of miners and their energy inputs and aluminium and all that kind of stuff. Agriculture. Can you talk to me about kind of how the situation spreads out and how far it gets?
Yeah. Well, I mean, so. You use the example of miners and agriculture. I mean, very energy intensive. Diesel prices in the US are approaching record levels as their refineries reconfigure towards jet fuel rather than diesel and gasoline. That will change in the next few weeks, by the way.
Okay, we'll come back to that.
But Yeah, I mean, look, it's not just about the price of effect. It's about being able to get the actual supply itself. And if that becomes a crunch, then this is what becomes an issue for these other agricultural mining sectors.
Okay, talk to me about diesel then. If I remember my chemistry, you kind of, like, in terms of the way a barrel actually sort of breaks down. How much movement do we have in terms of the ability to manage diesel and jet fuel? Yeah, so you're absolutely right. So the refiners are reconfiguring and producing more jet fuel at the expense of diesel in particular, but also gasoline, because the feedstock is being used in jet fuel rather than what's being used for gasoline. It's marginal. It's probably about, I mean, we've seen it in the US. The amount of exports that you see in jet fuel now is remarkable. It used to be about 60,000 barrels a day, and now it's about 400,000. And that gives you some perspective as to how... If it becomes a problem, does America... Actually, we're getting some questions on this. Yeah. Does America go, well, no, this is ours, not yours. We're not exporting this stuff. Do we get control? This is what I'm concerned about. I mean, there was about a month ago, I think it was, that Donald Trump said, oh, we can ban exports. And WTI prices crashed, Brent went through the roof, and the same day a bunch of CEOs from the oil majors and the American Petroleum Institute made their way to the White House and said, don't do that. And obviously that would be very cataclysmic for the rest of the world, because you'd be talking, right now the US is exporting 5.5 million barrels a day of all of the stuff. Normally it's about 4. So you remove that from the market, and I don't know what happens to prices at that point. But there's a possibility, perhaps, that he could say, well, let's just not allow gasoline exports. Let's not allow jet fuel export. Some of the exports, potentially. I hope not, obviously, because I think that would be quite damaging to the rest of the world. No kidding. Nice to see you. Good to see you. Thanks very much indeed for stopping by. Michael Haig, Head of FIC and Commodities Research at SocGen CIB. Coming up, we're going to talk about one of the consumers of that oil, Hapag-Lloyd, swinging to a first quarter losses. Freight rates and severe weather have an impact. We'll talk to the CEO next. This is Bloomberg.
Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly. Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving someday.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Hi, boss. Yeah, welcome back. You're watching The Pulse. I'm Guy Johnson in London. What do you need to know? So President Trump adding NVIDIA's CEO to his entourage on his way to China. This as he seeks to focus the upcoming summit on trade and not the Iran war. The International Energy Agency warning of an unprecedented supply shock as global oil inventories fall at a record pace. Plus, SoftBank reports a surprise jump in profit, while Hapag-Lloyd is hit by supply chain disruptions. There's quite a lot of capacity out there. We'll be speaking to the Hapag-Lloyd CEO in just a few minutes' time. But before we do all that, let's talk about UK politics. The British Prime Minister, Keir Starmer, surviving in post yesterday. Nice little trip to an owl sanctuary, I think, in the afternoon. Maybe was part of that. Just get out of the way. We had a slew of ministerial resignations, which have so far actually failed to force his downfall. The escalating political drama is heaping fresh pressure, though, onto the bond market ahead of today's King's Speech, which will be happening shortly. Let's bring in Bloomberg's Lizzie Burden for more. So he survived yesterday. Little trip to an owl sanctuary. What does he do today? Does the King's Speech keep him in office for another day? What is happening at the moment?
Well, if you look at the poly market odds, they've improved for Keir Starmer over the past 24 hours.
Not a lot, but they've improved.
No, but we need improvement. He needs improvement. So by the end of June, the probability that he'll be out, according to Polymarket, is down to 34% from 65%. And the chance he'll be out by the end of the year is down from 85% on Monday to 65% now. And you can see that reflected in gilts, right? Yields have been down, even though they're still relatively elevated. We just had this meeting between the Health Secretary Wes Streeting and the Prime Minister Keir Starmer. He's been in and out in less than 20 minutes. We'll wait for the readout, but this is one of the potential challenges to the Prime Minister. We don't know whether he made a challenge yet. Some of his allies are thinking that he's bottled it at this point. And does he miss the window to go for it?
Wes Streeting.
Yes, Wes Streeting. We've already had at least a fifth of Labour MPs publicly calling for the Prime Minister to go. That's just publicly, never mind privately. 4 junior ministers have quit. So in theory, we're past the 81 threshold to trigger a leadership contest. But then 100 have signed a statement saying that they want Starmer to stay.
It's costing us a fortune.
Yes, it's increasing the cost of living for ordinary Britons, which is the message that Labour surely should be hammering home. But that isn't what we're
bond
hearing.
Market, what bond market?
Exactly. You're hearing one Labour Liverpool MP saying that the market will just have to fall in line with Andy Burnham.
Because that's what bond markets do.
Quite.
Yeah.
A complete, amnesia of what happened in 2022 with Liz Truss, although arguably what's happening now is the reverse of the Liz Truss situation, because the bond market is protecting Keir Starmer.
Just before I let you go, is it certain that Burnham can win a by-election?
No.
Because this is, precisely. So this is the risk that's got to be growing. And he's got a pretty big call that he's got to make, because he's only got, I was told earlier, one shot at this.
Yeah, and then you could have Reform, you will have Reform or the Greens, whichever constituency it will be, going out guns blazing to take him down.
You're going to have an interesting few days ahead of you, Lizzie Burden, on the UK politics story. We'll come back to it later. Let's talk about what's happening on the corporate front right now. Hapag-Lloyd shares are up, the shipping giant, posting weaker first quarter results, talking about freight rates, operational disruption, weather, and, of course, what is happening in the Strait of Hormuz. The German shipping group has confirmed its outlook for the year with a wide scope of outcomes. Joining us now, Hapag-Lloyd's CEO, Rolf Haben-Jansen. Good morning, Rolf. Thank you very much indeed for your time. How much visibility do you have right now as to what your business is going to be doing in 6 months' time? How uncertain is the picture?
Driven by things in the Middle East. It's just very tough to predict what is going to happen there. Right now, we are still planning with or expecting to see some kind of return to normality in the upcoming couple of months. But in the end, nobody really knows. And initially, we thought probably this was going to last very short, but it's still ongoing.
Rolf, can you give me an idea of what the situation in the Gulf is costing you right now? I spoke to the Maersk CEO the other day. I think he said it was $500 million a month in extra fuel costs. Can you put a number on it? How much is it costing you at the moment?
I think that estimate is roughly right. I mean, I've said earlier that our extra cost is between $50 to $60 million a week. That's about 240, 250 million a month, which is roughly half of Maersk's. And I mean, if you look at the difference in size, it's not so strange that our estimate is round about that number. And it's also not so difficult to do because everybody knows how much fuel price is up. So, yeah.
Fuel price, yeah, precisely. They're on the move. In terms of what comes next, though, at the moment it does seem as if we've actually got a fair amount of capacity sort of still underutilised, despite what we're seeing in terms of the lock-ins in the Gulf. Can you just give me a sense of how you see the capacity situation at the moment and whether or not actually, even with what's happening, we have too much?
It's actually a little bit surprising because when you look at the market today, then demand is actually quite strong. Yeah? We see volumes picking up, particularly out of Asia. Especially month of April has been fairly good, and also if we look ahead into May and June, then we see that volumes are very decent. Of course, we missed the volumes from the upper Gulf, but all the other markets are actually pretty strong. And when you also look at futures and when you talk to customers, I would not be surprised if we see strong volumes until the end of this quarter and probably also into Q3.
So what is the outlook on freight rates, given that demand?
That's a good question. I mean, of course, we've seen a bit of a hike in freight rates on the back of much higher fuel costs. Now we need to see what's going to happen going forward. If we look at some of the futures that are being traded, and even if these markets are fairly thin, then they indicated that rates will still go up further. That's also what I would expect, but that's more of a normal seasonal pattern where normally towards the end of June, July, when you start to enter peak season, you see that short-term rates are going up. And today there is no signs that will be any different in 2026.
If, say, the war ended tomorrow and the Gulf opened up and the Red Sea opened up as well, how quickly would we end up in a sort of really oversupplied market situation?
I'm not sure whether we end up in a big oversupply market situation. First of all, it will take us several months to get everything back on track and to get all the services then into a normal rhythm. I've said before that if the Red Sea opens up, it's still going to take us about 3 months or so to return in an orderly fashion. I think if the Strait opens up, it will also take 2-3 months until all of that is back to normal. I don't see that happening today, so I would expect that we're going to be stuck with a situation like we have it today until the end of the peak season. And let's also not forget that over the last couple of years, the dominant legs, which actually drive the need for capacity, have grown much faster than global trade. In 24, it was 10%. In 25, it was 8%. Yep. And that means that you simply need a lot more ships than we needed before.
Do you think we're going to end up in a situation where you are having to see vessels being escorted through the Gulf? What is your view on that? Is it possible? Can you have a partial reopening? Kind of, what are your metrics in terms of how you're willing to risk ships? Kind of just give me your sense of what you think the status quo will end up looking like and whether that's something you will participate in.
I mean, that's incredibly difficult to predict. Of course, there was some discussion on Project Freedom, and if ships get escorted and that is safe, then for sure, we will try to participate in that. But to go out of the Strait unescorted or through the Red Sea unescorted at this point in time for us is definitely still a bridge too far. In the beginning of the year, we tried to go back to the Red Sea. Then we had to abort those efforts, and we still have some ships stuck in the Strait as well, or in the Persian Gulf as well, even if we managed to get at least one out.
Have you been in touch with the U.S. administration? I spoke to Maersk again. They brought one vessel out that way. Are you having conversations with the U.S. Navy? Can you give us a bit of colour on what is happening in terms of your operations and your vessels?
I mean, you should assume that we talk to everyone that wants to talk to us and that will give us information on, what is and what is not possible. And of course, we then also consult those that are active in the Gulf, and that is helpful because that allows us at least to judge the situation a bit better.
Okay, Rolf, it's great to catch up. I really Really appreciate your time and your kind of views on what is happening here. Hapag-Lloyd's CEO Rolf Habben-Jansen joining us on the shipping story. What else do you need to know this Wednesday morning? SoftBank reporting a surprise jump in quarterly profit, helped by valuation gains on its OpenAI investment. Fourth quarter net income came in at $11.6 billion. Now, that's more than 6 times what the average estimate was. Shares in SoftBank's key holdings fell during the period as the Middle East war rattled markets, but it was clearly offset by a jump in OpenAI's valuation to more than $850 billion and climbing. Samsung has failed to reach a last-minute wage agreement with its largest labour union. The two sides remain sharply divided over the size of bonuses tied to the booming AI-related earnings. The breakdown in talks after 2 days of negotiations heightens the risk that we could see a strike that could disrupt operations at the world's largest memory chip maker. And oil shipments from Iran's main export terminal appear to have come to a standstill over the last several days. If Karg Island were to remain idle, it would increase the pressure on the country's remaining storage facilities, which satellite images show are filling up pretty rapidly. This is the country's semi-official Fars news agency says that Iran won't join the next round of talks with the United States unless what it describes as confidence-building preconditions are met. OK, you're up to speed. The CEO of JP Morgan, Jamie Dimon, has warned that his bank could consider plans or reconsider plans to invest billions of dollars in a new London headquarters if the UK becomes hostile to banks again through higher taxes. In an exclusive interview with Bloomberg, with Francine, Jamie Dimon also argued that a stronger Europe is in the best interests of the United States.
I would say that Europe, including the UK, know what to do, and it's the Draghi report. There are 300 items in there, common capital markets, common regulations, allowing cross-border in the EU competition. There's huge regulatory, not tariff, but regulatory burdens. They need to do the same thing in the UK. I think Keir Starmer is a very smart guy. Politics is really tough. They're in a bind because of debts and deficits, and they inherited a lot of that. I think the world of Rachel Reeves, and they got to be tough. They got to say, we're going to do these things, and the short term may not be great, but governments have to get the stuff done right that grows the economy and militarily. And I think they need to work close with Europe. And if you remember, Keir Starmer and President Macron, they were going to work closer. Not reversing Brexit, but military alliances, intelligence alliances, making sure the economies have economic relationships good for both the continent and good for Europe, good for the UK.
You're building a big mega project in Canary Wharf that everyone is quite excited about. Does this potential politically instability actually change your view on everything, or do you see costs going up? Or are you worried about taxation?
Not political instability, but if they become hostile to banks again, yes. I mean, I've always objected to the fact, we didn't damage the UK in any way. We paid probably $10 billion of extra taxes by now. I don't think that's right or fair. If that happens too much, we will reconsider.
Look, I know you've also looked a lot at Europe and funding, and especially when it comes to security. I mean, how much time are you spending making sure that defense companies, that companies in Europe have enough funding from JP Morgan to make sure that they can, I guess, defend
a lot? So we have this huge effort. We deploy over the years $1.5 trillion to help. It's not just it's resiliency. So it's even medicines and rare earths, which would be defense, semiconductors is defense, but it's anything you need. So Europe needs LNG. So we look at that as resiliency for Europe, not LNG in America, but shipping here is resiliency. So we have professionals doing it. We've got an unbelievable advisory group. We've dedicated 30, 40 people. We're doing research now, which you might be interested in, across the shipbuilding ecosystem, across the active pharmaceutical system, the rare earth system, and then having public policy, which puts us in a better position. We, the democratic world, should never have gotten here where we're so reliant on other people, potential adversaries for rare earths. And we did. Right. So don't cry over spilled milk, but let's fix it. And we got to fix it right away.
And this is good for the U.S. Does the U.S. need stronger allies?
This is good for the U.S., and I think having strong allies is good for us. So my view is we need a stronger NATO. They're doing that, by the way. So, our president pushed them a lot. Well, they're all doing it, which is a good thing. But we want to keep it together. The goal of it should be to have a stronger NATO, not a weaker NATO. The goal, in my view, if you ask me what the goal should be of our economic relations with Europe, should be having a stronger Europe to get you to help you do the Draghi report. And I wrote my chair's letter, maybe a pipe dream, that if you did the Draghi report, I would give you one big, beautiful free trade bill.
That was, of course, Jamie Dimon, the CEO of JP Morgan, speaking to Francine. Coming up, Donald Trump seeks to set the agenda with his summit that he's going to be having with President Xi. He'll be landing shortly. More on those crucial talks that are about to take place. We'll have that next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. This week, leaders from the world's two largest economies will come together in Beijing with geopolitical stability and the future of global trade on the line. Trust Bloomberg to go beyond the headlines with on-the-ground reporting, expert analysis, and real-time market reaction. The Trump-Xi Summit. Special coverage all week right here on Bloomberg. Context changes everything.
We're leading China in AI, and I'm going to go see President Xi in 2 weeks. I look forward to that, but I'll say I'm leading. We have very friendly competition, but it'll be a very important trip. We're doing a lot of business with China and making a lot of money. We're making a lot of money. It's different than it used to be. But I'll be talking about that'll be one subject. But he's been very nice about this. You know, in all fairness, he gets like 60% of his oil from Hormuz, and I think he's been very respectful. We haven't been challenged by China. They don't challenge us. We're going to have a meeting with President Xi. It's going to be, I think, quite amazing. He's been a friend of mine. I've gotten along with him very well over the years.
President Trump speaking in the run-up to the summit, which is going to be taking place in a few hours' time with the Chinese president. President Trump says the focus of the talks will be on trade. He doesn't actually want to focus this on Iran. Can the two leaders see eye to eye on this issue? Can they do a trade deal without talking about Iran? And what else is going to be on the table? Mario Messmer, International Security Program Director at Chatham House, joining me around the table. Good morning.
Good morning.
Do you think the Chinese are happy just to talk about trade? Trump just wants to go and do deals. Is that what the Chinese want?
Well, in a sense, that's preferable for China, I think, because China has the U.S. in a pretty good position in that regard at the moment. And some of the more strategic issues, whether that's Iran, whether that's support for the U.S.'s Asian allies, is actually much more volatile and could be a bigger issue.
So they'd be quite, to put all those to one side, just do the trade deals. Do they want anything out of this, other than making sure that we don't see too much turbulence? What are the aims and objectives of the Chinese here?
Well, I think for China, it's a great opportunity to continue to cement their positive position with regards to the U.S. In the sense that when it comes to tariffs, when it comes to export controls, the U.S. has already made some concessions in that regard. And especially if we're talking about things like the AI competition between China and the U.S., China can only gain to benefit, especially if there's a reduction in export controls on some of the chips or other elements that they would require.
Do you think it was significant that Jensen Huang, NVIDIA's CEO, got on the plane in Alaska and joined the trip? Like, if he wasn't there, would that have been a problem, do you think, if AI is such an important factor here?
Well, it's interesting in the sense that export controls, especially for NVIDIA chips, have been such a hot topic between the US and China for a long time. So to me, that suggests that this is something that the US might be willing to discuss or offer up.
Taiwan?
Well, Taiwan is one of the really challenging issues in the conversation. Asian allies are going to be really concerned about what the U.S. might be willing to concede. There's some nervousness that the U.S. might be willing to offer up concessions on arms sales to Taiwan. And of course, what we've also seen with the ongoing war on Iran is that the US has already moved some critical assets from Asia to the Middle East, which really upset South Korea that relied on some of those missile defense assets that were in the region. And so I think after having some really challenging months with European allies, this could be one of those cinch moments where it looks like Trump is happy to do deals and look like a deal maker, but it actually comes at the expense of the U.S. relationships with Asian allies.
How does that manifest itself in Asia? What do the Chinese do with that in terms of their strategic positioning?
Well, it seems to me that with regards to their strategic positioning, China has been quite happy to essentially try to make sure that the U.S. stays out of Asia, which is a position that the U.S. has not been willing to concede. But for the U.S.'s Asian allies, there are a lot of concerns what that means for their security. Does it mean that China could be much more aggressive without them having U.S. support? And so we're seeing that express themselves in, for example, conversations in South Korea, where South Korea is all of a sudden exploring whether it might actually want to acquire its own nuclear weapons, something that's unthinkable or was unthinkable until relatively recently. But nuclear weapons have just become a much bigger topic in international security.
Has proliferation, precisely, has proliferation become a much bigger story as a result of what has happened in Iran? What is the lesson that mid-sized countries take from what we're seeing in terms of the Iran conflict?
Yeah, I mean, it really unfortunately has. I mean, there's Iran's lessons on the one hand, right, where Iran has tried to use its hedging position with regards to whether it will acquire nuclear weapons or not for a long time to get some leverage on the international stage. And then that backfired in a way in the sense that the US attacked its nuclear installations. And at Chatham House, we actually have a report out this morning where we look at some of these proliferation issues and at the ongoing negotiations in New York at the UN about the non-proliferation treaty. And we do see a really big risk that the non-nuclear weapon states are essentially drawing the wrong lessons from that and are wanting nuclear weapons just because they're no longer...
Why is it the wrong lesson?
Well, it is the wrong lesson because the world with more nuclear weapons is not necessarily a more stable world, right? If we think about the fact what risks we have of nuclear escalation in a world with 9 nuclear weapon states, that's one thing. But if we were to get to, 10, 15, any extra nuclear weapon state just increases the risk of nuclear war.
But the lesson from North Korea is nuclear weapons give you a pretty big ring fence.
Well, this is exactly one of the concerns. So North Korea, with the exception of sanctions, North Korea has never faced much pushback against its nuclear program. I think in part because the nuclear program was underestimated for a long time. And so if states look at North Korea and look at Iran and compare those two experiences, I'm really concerned that they might be drawing the wrong lessons from that for global stability.
Back to China. What lesson is China learning from Iran about the way that the US has reacted in terms of the way that it might impact their thinking vis-a-vis this trip?
Well, I think China doesn't want to get drawn into the U.S.'s war in Iran. I mean, there was a point in time only a few years ago where China and the U.S. and essentially all 5 Security Council states, plus Germany, were on the same side when it came to Iran. They all negotiated the Joint Comprehensive Plan of Action together, which is the treaty that was controlling Iran's nuclear weapons program for a long time. And And so the US certainly will want China to weigh in that regard and use its diplomatic relations with Iran. But China hasn't shown any indications of being willing to help the US in that regard.
Did China underestimate its exposure to the Strait of Hormuz, or was it ready for it?
I'm not sure that any state could be ready to that.
But it built up quite significant reserves, which it's now using to be able to manage the longevity of its its economic position. Is this one of the other lessons that is going to be drawn, which is you need to have robust supply lines, you need to have sufficient energy resources? Is it going to accelerate China's move into sustainable? What is the lesson that it is going to learn in terms of its ability to isolate itself from US policy?
I mean, I think what we've seen over the last few years is that resilience is becoming more important for states all around the world. And China already had invested quite a lot in making sure that it was a resilient nation, and its leads in green energy are also really interesting in that regard, because it means that it's becoming much more independent from needing to import oil or gas or anything else. So in addition to how China will react, I think it'll be really interesting to see how some of the European states and other states that are much more vulnerable to global shocks will react to this.
Great to see you. Lots of analysis in there. Thank you very much indeed for joining us.
Thank you.
Mesmer, International Security Programme Director, joining us from Chatham House. Just a reminder that we are going to be talking, when it comes to the inflation story and what is happening in markets, Francine is going to be joined by Franklin Templeton CEO Jenny Johnson. That's going to be at 9 a.m. London time. Before I hand you over to the brief and Vonnie in New York, let me just give you a quick update on where we sit with markets right now. As you can see, US futures currently are a little mixed. The S&P is up by around 0.2%. Hasn't moved around that much. Nasdaq futures have been much more positive throughout most of the morning, up by around 0.8%. So the tech trade is still firmly on this morning. In terms of the picture here in Europe, we're up by kind of 0.7%. We faded a little bit. The CAC's moved into negative territory. Stocks like LVMH in the luxury space are under a little bit of pressure this morning. The FTSE 100 is up by around 0.5% as we continue to watch what is happening in the UK political story and how that's going to develop throughout most of the rest of the day. Anyway, that wraps things up from Europe. It's now time to hand things over to our colleagues over in the United States. The brief is up next. I will leave you in the capable hands of Vonnie Quinn. This is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
Insight with Haslinda Anand, only on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Treasuries on the move after hotter than expected CPI data drives yields higher across major markets. PPI up next. Tech also bouncing, lifting stocks. SoftBank's AI bet paying off handsomely, and Anthropic chasing more funding. And President Trump heads to China, emphasizing the focus on trade talks with President Xi while renewing threats toward Iran. Well, it's been an interesting session in Asia on the tech front. Let's get a check on markets around the world now, starting with Winnie Su for the latest from Asia. Winnie.
Good morning, Bonnie. What a turnaround for Asian stocks today. Originally, we were expecting a down day with the U.S. CPI and that sell-off in chips overnight, but we quickly saw that reversal with that surprise of Jensen Huang joining the Trump-Xi meeting. And here you can see Kospi leading that rebound up 2.6%. Now, you flip the board and see how really all eyes are on that upcoming meeting between President Trump and Xi, with the Taiwanese TAIEX index actually under pressure because Taiwan is actually one of the big discussion topic, but you did see that the Chinese stocks and currencies actually extending gains, with the Chinex index surging to a record on these optimism around trade talks, especially U.S.'s chip exports.
All right, Winnie Su, thank you so much. Now, with the King's Speech on deck and Keir Starmer still in precarious position, let's get to London now and Justina Lee, London.
Good morning, Bonnie. Now, continuing with that bullish theme that Winnie was just talking about, we're seeing kind of European stocks up 0.6% today. And the euro is a bit weaker, with broader kind of dollar strength that we're seeing today. Now, of course, as you were saying, the focus is still on the UK today. Now, in terms of short-end gilt yields, we're seeing a bit of relief today with yields kind of down 3 basis points. And I think that's kind of reflecting kind of the oil also slipping a little bit. And so traders kind of paring back those rate hike bets. But of course, when it comes to political risk, we're all watching those long-end bond yields. Now, if we flip the board here, we can see that today the 30-year yields are seeing a bit of a relief too. But of course, the focus is still on the future of Keir Starmer, Bonnie.
Yeah, exactly. Justina Lee, thank you so much. Here in the U.S., after 3 days of gains, we are seeing oil off its peak, but not by much, right? There hasn't been much movement, if any, in Kharg Island for the last few days, according to satellite imagery, and that's going to have an impact on the oil market as well. Brent crude above 107 still. New York crude still very close to 102 a barrel. Now, I wanted to talk about yields because we have that 30-year Treasury at 502.42, so that's the highest it's been in decades, basically. We have the 2-year yield very close to 4% now, and the 10-year yield creeping ever closer to that 4.5 mark. So it's quite a precarious position for the incoming Fed chair, who's likely to get his vote done today to make him Fed chair. Dollar index continues to strengthen, and we have futures bouncing back after the Nasdaq dropped about 0.9% yesterday. All right, let's get to some individual movers now. Here's Chloe Melly. Chloe.
Good morning, Bonnie. Some Magnificent Seven stocks are up this morning after the CEO of NVIDIA, Jensen Huang, joined Trump on his visit to China. And so this was a last-minute addition to the trip, and it shows and means that AI is going to be really top of mind in this really high-stakes summit. And so we are seeing NVIDIA in particular up this morning about 2%, and also driving up the rest of that sector, with Alphabet and Amazon also in the green this morning. Moving on to Zebra Tech, which is also in the green this morning after the maker of things like computers, printers and barcode scanners was upgraded to an overweight rating by KeyBank following very strong results. And the analysts have said that this points to early signs of recovery in industrial demand, and said that challenges like higher memory prices were actually already priced in for that company. And so we're up about 2%. And finally, the recruitment firm Adecco over here in Europe is down after margin missed estimates, pointing to a lot of pressure on that recruitment sector because of layoffs, because of AI displacement. And we are down very significantly this morning, about 13% for that recruitment company.
All right, Chloe, thank you so much. Chloe Malley there in London. And coming up on this hour, we're going to have more on inflationary risks with Kayla Sater of State Street. But first, President Trump heading to Beijing for his meeting with President Xi.
I'm going to go see President Xi in 2 weeks. Actually, it'll be a very important trip. We're doing a lot of business with China and making a lot of money. We're making a lot of money. It's different than it used to be. In all fairness, he gets like 60% of his oil from Hormuz, and I think he's been very respectful. We haven't been challenged by China. They don't challenge us. We're going to have a meeting with President Xi. It's going to be, I think, quite amazing. He's been a friend of mine. I've gotten along with him very well over the years.
Joining us now from Beijing is Bloomberg's Anne-Marie Hornern. Anne-Marie, the president almost in China. What should we expect from these meetings?
That's right. The president is just a few hours away from touching down here in Beijing. What I find very interesting being on the ground just in the past 24 hours that you wouldn't actually know the president of the United States was touching down. On the front cover of the China Daily this morning, it was actually about China's relationship with Tajikistan. And normally, as in 2017, you saw American flags and Chinese flags side by side outside Tiananmen Square. That is not here right now. So far, a muted reception we are seeing in Beijing. Maybe things change overnight. What you can expect is a lot of focus on deals, especially when it comes to trade, and especially given the fact that you can look at who the president is going to be flanked with in terms of the executives, maybe also some negotiations when it comes to the technology sector. We did hear from officials before the trip talking about the fact that they would like to open up a channel of communication when it comes to AI. Everyone obviously is focused and a lot of attention on the last-minute addition in Alaska, Vani, with Jensen Huang of NVIDIA joining the trip last minute, potentially when it comes to these chips. Remember the H20 the United States lifted the ban on in January, but we've heard from the Commerce Secretary last month at a Senate hearing saying that not a single H200 chip has been sent to China just yet because the Chinese government hasn't allowed those firms to purchase them. So I would say keep an eye on any sort of trade deal, purchase agreements when it comes to things like the agricultural sector. Obviously, Boeing is prepared to make a massive deal here, a record order potentially when it comes from China, but also how the communication surrounding technology, especially given Jensen Huang's last-minute addition. And then one notable thing, of course, is going to be the geopolitics and the context surrounding this trip. Obviously, the war in Iran. Remember, this trip was supposed to be in March. It was pushed back because the United States is engulfed right now with what is going on in the Middle East. And, of course, for China, they're going to push the administration on any sort of language. And, of course, the record arms deal they announced in December in terms of arms to Taiwan. And there's a $14 billion deal as well, Vani, waiting in the wings in the docket.
All right, Anne-Marie, thank you so much. Can't wait to see the outcome of what's expected to be a 3-hour meeting. That's Anne-Marie Hornern there in Beijing. In Iran, a liquefied petroleum gas carrier which had previously ferried Iranian cargoes sails past the blockade boundary, and data show it's now headed southeast in the Arabian Sea. Joining us now from Dubai is Bloomberg's Abir Abu Omar. It's an Iran-linked tanker. Abir, what can we say about traffic in the Strait of Hormuz? We have seen 1 or 2 tankers move through, after all, over the last few weeks.
Yeah, good morning, Vani. So you're right. You just mentioned this ship that was linked to Iranian cargoes previously. It is trying to cross the Strait of Hormuz. This is according to shipping data that we have seen this morning. And it's actually gone through the boundary that was put by the U.S. Navy last month. So, you know, the Strait of Hormuz is going through a double blockade at this point, one by Iran, one by the United States. So this ship is making its way through. It is a ship called Tara Gas, and it's carrying a very, very big shipment of gas making its way through the Strait of Hormuz. But it's not the only one, right? We have data to suggest that another tanker, super tanker linked to China, is also trying to make its way through the Strait of Hormuz, suggesting that it's linked to Beijing. Now, this tanker is close to Iran's Larak Island this morning, and it would be the third super tanker to try to make its way through the Strait of Hormuz since the start of this war. So look, again, the Strait of Hormuz is seeing a fraction of the ships that would typically have gone through it pre-war. We're now coming to a near standstill in the number of tankers and ships that are carrying cargoes through the waterway, but some progress there, especially ahead of this meeting between President Trump and Xi Jinping that Anne-Marie was just talking about in China.
Khark Island, we're not seeing any activity around Khark Island for the last several days. According to satellite data, it had been a hub of Iranian oil activity. Abir, what is that signaling to us?
Yeah, so look, I mean, the Khark Island is the main exporting venue for Iran, and satellite images that were seen and witnessed by our colleagues suggest that the exports out of there have come to a standstill over the past few weeks. Now, remember, President Trump and the U.S. has been trying to exert this economic pressure on Iran to not have them export the lifeline that they have, which is those shipments. So that kind of pressure is coming to Iran. It is there, and that's what we've been seeing when it comes to the shipments that are coming out of Khark. Now, Iran has been trying in its proposal or its response to the United States to unsanction, if you were, those oil shipments. That is something that the Trump administration has refused, and that is where we stand. Oil prices right now stand at about 107. North of that, they're pairing some of the losses that we saw earlier in the day. But again, at the heart of this issue remains the oil exports. It remains the Strait of Hormuz that continues to see this double blockade by both the U.S. and Iran.
Abir, thank you so much. Abir Abu Omar there in Dubai. Now to other top stories trending on the terminal this morning. JP Morgan is said to be planning an overhaul of the upper ranks of its investment bank. According to the Financial Times, investment banking coverage chief Dorothy Blessing, global head of capital markets Kevin Foley, and global co-head of the financial institutions group Jared Kay will all be appointed as co-heads of global investment banking. The reshuffle set to be announced today. French unemployment unexpectedly rose to its highest in 5 years. The jobless rate hit 8.1% in the first quarter. Joblessness increased across all age categories. Aramco is considering raising more than $10 billion from its real estate assets. According to sources, the deal would be a sale and leaseback transaction, allowing it to unlock capital while retaining use of its real estate holdings. Coming up, tech bouncing as dip buyers flock in. SoftBank's latest profit jump adding fuel to the return to risk. This is Bloomberg.
Tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. And this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. SoftBank's bet on OpenAI paying off. The Japanese conglomerate blowing past quarterly profit estimates, bringing in a net income of more than $11 billion thanks to its valuation gains on its OpenAI investment. Analysts had predicted $1.87 billion. Bloomberg's Neil Camping joins us now. So, Neil, a great quarter for SoftBank, but is it too reliant on OpenAI at a time when we're seeing fierce competition from Anthropic and even Alphabet?
We are seeing fierce competition, as you mentioned, Bonnie. Clearly, the entire upside surprise in that quarterly print was that OpenAI mark-to-market profit that SoftBank put out this morning. I think what it will do, though, is embolden perhaps or give them more justification and confidence in perhaps plowing even more money into OpenAI and potentially other AI-based models as well. So they obviously invested early into the race for the AI trades. But whether they can, other parts of the business aren't performing as well. And clearly we are in a market where we've talked about various platforms trying to raise money in this space. It's very much still a race to see who becomes the big AI champions. And it's not clear whether SoftBank will necessarily be able to follow up a repeat performance as to what it's produced this morning in those results. Yeah, it's interesting though, Masayoshi Son always pulling a rabbit out of the hat. Now, when it comes to Anthropic, it's in talks apparently to raise $30 billion at a $900 billion valuation. Can it make the trillion, Neil? I think it's more a question of when it makes the $1 trillion valuation, because this is the third raise in terms of the number talked about in terms of valuation, and it's more than doubled in the last 3 months. Anthropic clearly, I think, has captured the attention of many of the agentic AI tool sets and the many leading hyperscaler investing in Anthropic as well. So it seems to be the hot topic currently at the moment. And we heard earlier this year about sort of the revenue growth rates that they've enjoyed are just simply staggering. Now, interestingly, actually, is Anthropic's valuation today. We've got two big Chinese tech stocks, Tencent and Alibaba, reporting results this morning. And the market cap of those two Chinese champions is less combined than Anthropic's is today talked about. So that's quite tells you the feat of Anthropic's perceived growth and valuation over a very, very quick period of time. Yeah, that is quite the setting in context for us. Samsung, it was about to be involved in labor talks. There were going to be strikes and so on. Then South Korea said it's getting involved. Bring us up to speed on what this might mean for the global memory chip shortage that we're already crazily worried about. Yep, we are indeed, and this chip shortage is particularly sort of being seen in the memory space, as you mentioned. These HBM4 chips, the HBM4 chips go into these big AI models. Now, the problem here is that if we do see a strike at Samsung's fabrication plants, that could create some huge pressure on those supply chains, because whenever these fabs go offline, they can take weeks, if not months, to come back up to full capacity. So when you're already facing a memory crunch, you're already facing pricing squeezing going on today, and that's just on the supply side, and we already have a huge demand for these chipsets as well. So this could be another problem that supply chain faces, and just adds to the inflationary pressures within the AI ecosystem. Absolutely, Neil. Thank you so much. That is Bloomberg's Neil Camping. Coming up, we're going to bring you part of our interview with Irish Minister of State Neil Richmond. That's next. This is Bloomberg.
about 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. President Trump's trip to China bringing trade back into focus. This as the president's threat of higher tariffs on auto exports looms over Europe. I caught up with Ireland's Minister of State for Diaspora and International Development, Neil Richmond, on the EU's economic partnership with the US.
We very much want to protect this trading relationship. We appreciate the change in direction from the current administration. It's not necessarily a direction we'd like to go in, but we are responding in a manner that shows that we still have very strong trading potential with the United States. For Ireland within the EU, we recognise that the United States is our largest trading partner, both in goods and services, and we want to build upon that. And we're happy to respond to the United States and make sure an agreement can be reached.
What new progress is there, though, on ratification? How confident are you that there will actually be ratification in time?
Well, certainly this has gone through official channels within the European Commission and it's been with the European Parliament. We are more than happy to ratify this on a basis which shows mutual benefits to both sides. It's not an ideal situation, but I have no doubt that what can be concluded by July of this year will absolutely be something that is of benefit to both sides.
The president has made clear that he's not averse to upping tariffs again if he feels like it, right? If he feels like the EU isn't meeting him halfway. How confident are you that pharma will be capped at 15%? Because it would particularly impact Ireland, the headquarters of Eli Lilly and other pharma companies.
Well, tariffs aren't a good thing, to be quite honest. They're not a good thing for the United States economy, certainly not for the United States consumer. However, we understand what the president has decided to make a decision. From an Irish point of view, we are confident that the cap that there is in place at the moment will stay. It is not just vital for our own economy. 10 of the world's 10 largest life sciences companies have a large presence in Ireland. It is our largest area that we export to the United States across medtech and pharmaceuticals, all the brand names that you know. But crucially, there are patients and medical practitioners in the United States who depend on both the drugs and the drugs components as well as the technology that come from Ireland into the US market. We don't want to see anything happen that would make it even more expensive for them than it already is. And that's why we're happy to work with the United States administration to make sure that the life sciences more broadly, but particularly pharma, is a trading area that is one that is of mutual benefit.
How do you do that? Can you do it in a unilateral way, or do you have to go through Europe? How are you making sure that the US is happy with the situation?
We work within the European Union family to make sure that we can push things along, recognising that the trading relationship more broadly, but specifically on life sciences with the United States is so important. But also, we negotiate directly, we engage directly, be it with the US administration, be it with the companies who have large presences in Ireland, be it with their representative bodies, be it with the political and business leaders across the United States who have an interest in making sure we protect that relationship.
What are the multinationals saying to you about their fears, be it uncertainty over tariffs, pharma tariffs, or just uncertainty in the Middle East?
Well, the uncertainty in the Middle East is having a massive impact on the European economy more broadly. But when we engage with the multinationals, particularly in the life sciences sector, we work on the areas that they need us to work on domestically. So that's looking at the large-scale infrastructure development in Ireland, new water infrastructure, new roads, the development of schools, the sort of things that make it easier for them to do business.
That was Irish Minister of State for Diaspora and International Development, Neil Richmond. Time now for your front page news. First, on the New York Times, U.S. intelligence shows Iran retains substantial missile capabilities. The Times says secret new assessments say Iran has operational access to 30 of its 33 missile sites along the Strait of Hormuz. Next up, the Wall Street Journal highlights Joe Lowe, the fugitive behind the 1MDB scandal, asking President Trump for a pardon. The Journal says the request was filed in recent weeks and, if granted, would remove U.S. criminal charges from the Malaysian financier, who prosecutors say engineered the heist of billions of dollars from the Malaysian government-owned investment vehicle. And finally, the BBC spotlighting the King's speech. King Charles III will unveil the government's agenda in the UK for the year. It's expected to include more than 35 bills and draft bills on immigration, the NHS, police reforms. The state opening of Parliament taking place, though, as Prime Minister Keir Starmer fights for his political life. Coming up, we're going to push ahead to PPI data with Kayla Sader of State Street. That's next. This is Bloomberg.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market. You can get that from a bank. You can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit, where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Treasuries on the move after hotter than expected CPI data drive yields higher across major markets. PPI up next. Techs also bouncing today, lifting stocks. SoftBank's AI bet paying off handsomely, and Anthropic is chasing more funding. And President Trump landing in China in a few hours, emphasizing his focus on trade with President Xi while renewing threats toward Iran. Let's take a look at those markets then. We've had 3 days of gains for oil. It is off its recent highs, but only barely. We're above 107 on Brent still and above 101 on WTI. If you look at those yields as well, we're very close to multi-decade highs around the world. The 30-year yield in the United States is well above 5% and 502.42, and that's the same across the curve. We've seen markets start to price in the very real prospect of a hike at this point this year. Let's take a look at equity index futures, because of course we saw semis off the boil yesterday and then come back to end the session down just 3% when they were down 7% at one point. That plus the idea that Nvidia's Jensen Huang is now going to China, potentially lifting sentiment for the Nasdaq today. S&P futures also pointed higher, and that dollar index continuing to gain. Let's get to some individual movers now with Chloe Melly in London. Chloe.
Good morning, Vonnie. Shares in chip makers, optical firms and storage firms are all rallying this morning as we are seeing the global supply crunch in memory chip continuing to deepen. And of course, those chips being a very important part of the AI build-out. Those companies are also reacting to the CEO of Nvidia, Jensen Huang, joining Trump on his visit to China. And so we are seeing Nvidia, but also some of those other names, including Intel and Qualcomm, all in the green this morning. Moving on, but staying within the tech sector, and the semiconductor company Arteris is up this morning after first quarter results beat estimates, and it also raised its guidance because of very strong AI-driven demand. And finally, let's go over in Switzerland, where Adecco is having quite a tough time with shares hitting the lowest since 1993 because margin missed estimates. This really points to concerns around the recruitment sector, given all the layoffs that we've seen and those fears around the AI displacement and replacement of workers. And so we are down very significantly, about 12% for their recruitment firms this morning.
Chloe, thank you so much. Chloe Melly there in London. The latest PPI data dropping in less than 3 hours after that hotter than expected CPI report. Let's bring in Michael McKee for more. Michael, Paul Donovan pointing out today about the fictitious nature of some of what's in this report. Is it of economic concern that we saw a hotter print yesterday, or is it just more a political concern right now?
It's both. It's a concern for the Fed in that it keeps them on hold for much longer, because at 3.8%, the new chair isn't going to be able to convince anybody to cut rates on the open market committee. And the markets probably aren't going to like it if they tried to do that, because there's some inflation out there. And we're going to get more today. The PPI producers' prices expected to rise to 4.8%. That would be the highest since 2022. And it's going the wrong direction. And when you look at unemployment, there is no problem at this point with unemployment. It's near record lows. So for the folks at the Fed and for the folks on Wall Street, inflation is an issue. We saw goods prices were flat in the CPI, which you would have thought might have been higher because of tariffs, but we did see service prices rising by 0.5%, and that's where the Fed's been concerned.
Michael, we're obviously getting the Warsh Fed chair confirmation vote today. If that all goes according to plan and Warsh is indeed the next chair, what would have to happen for him to raise rates before the midterms, or to actually even talk about it with the committee?
You'd probably need to see a big drop in a big rise rather in unemployment to signal that the economy itself is in trouble. Tomorrow we get retail sales figures for the month of April, and they're expected to be relatively strong. They're not deflated by inflation, so they come in a little stronger than they actually were in terms of people's purchasing power. But there's no sign yet that the economy is giving in to the higher prices that we've seen. That would take a few more months. But as long as inflation continues to rise and move away from the 2% target of the Fed, you're not going to see any kind of move to cut rates.
What is everyone in Washington saying, Michael, if indeed the confirmation vote goes fine and he's the next Fed chair? Will he come under pressure from the president to lower rates?
Well, if it were an ordinary administration, you'd think not, because it's pretty obvious that they can't cut rates right now. But this is the Trump administration, and Donald Trump has his opinions. So there is widespread expectation that he will at some point send out a tweet criticizing the Fed, criticizing Kevin Warsh. How long he waits is going to be an interesting question, because the pressure will ramp up as they get closer to the midterms.
Michael, thank you so much. Bloomberg's Michael McKee there for us on all the economic data and, of course, the Kevin Warsh vote. Joining us now is Kayla Sader, macro multi-asset strategist for State Street. Kayla, are markets pricing in the current state of affairs? If you look at Treasuries and the 30-year yield at 5.02, what is that telling you?
I think it depends on where you look at the curve. So sticking to the long end, we do see yields being particularly high, and especially, let's talk about the 10-year yield. The 10-year yield is, higher than it was during peak Iran concern. And so we are seeing the long end be more sensitive, and there are a lot of drivers for this. So for example, we can think of term premiums, which have room to move higher. There's a lot of uncertainty out there. And what's interesting is that when we look at our investor data at State Street, what we see is that institutional investors, their appetite for duration is very, very limited. And so what that means is we would expect to see long end yields remain higher. The next question, though, is at what point does this hurt the economy? At what point, do some of these borrowing costs limit risk appetite? And so those are some of the questions we're grappling with right now.
That, and also just inflation expectations, Kayla. If consumers feel like inflation is on the way, they're going to start hunkering down a little bit, no?
I think that's fair. Inflation expectations are so important for the Fed right now. The Fed has been out of mandate and on their inflation side for years and years. And so they really need to focus on inflation expectations. And we hear this in Fed speak, where the Fed has been able to cut when inflation is not at 2% because inflation expectations remain anchored. And now they still maintain that long-run inflation expectations are anchored. However, we have started to see consumer expectations tick higher. Now, what we've seen in actual consumer activity, hasn't really reversed. We've seen very strong retail sales. We'll get another read on that tomorrow. And we still see consumers being able to spend. And part of that does reflect a very strong labor market. So when you pair that together with where inflation is today, where some of the leading indicators are, I think it is fair that the market is starting to look at hikes either in 2027. When we look at December 2026, about 9 basis points are priced in. And I think that's fair that the market is starting to question, will the next move actually be a hike?
Kayla, you point out that in the equity markets, turbulence is high, but it's not getting worse. Are you confident that it won't get worse and that this volatility is about as much as we'll see?
I think it depends on where we're allocated and where we're looking within the equity market. Certainly with yields where they are and the propensity for long end yields to go higher, it will be very hard for the equity rally to broaden out. So that does put some pressure on really how far this equity move can run. With that said, when we look at downside risk, when I think about how much lower the equity market could move and what's really at risk here, I think about how are investors allocated. Are they sitting within sectors that are interest rate insensitive? And so far, the answer looks to be yes. When we look at allocation, we do see a lot of exposure to tech, to communications, to the US. And these are countries and sectors that have proven relatively interest rate insensitive. Now, that sensitivity may have increased over the past year or two, but when we think about it relatively to other sectors, we've seen these large tech companies be able to outperform even when the Fed is increasing interest rates. And so that gives me a little bit of comfort in that even if we do hit some bumps moving forward, overall allocation is secure for now. And that should limit some of the downside risk.
At State Street doing with the AI trade at the moment, are you sticking with the traditional AI trades or are you trying to think a little further down the road when, you know, we might be fully valued here in certain areas? All right, I think we have lost Kayla Sater of State Street, but wise words there from Kayla. Now to other top stories trending on the terminal this morning. SoftBank's quarterly profits surging. Results were driven by valuation gains on its OpenAI investment. SoftBank has committed to raising its total investment in OpenAI to $64.6 billion by the end of the year. Anthropic is said to be in early talks to raise at least $30 billion in fresh financing. This sets the stage for its largest funding round ever. According to sources, the new capital will be raised at a valuation of more than $900 billion. The round is expected to close as soon as the end of this month. JP Morgan is said to be planning an overhaul of the upper ranks of its investment bank. According to the Financial Times, investment banking coverage chief Dorothy Blessing, global head of capital markets Kevin Foley, and global co-head of the Financial Institutions Group Jerry Kay will all be appointed as co-heads of global investment banking. The reshuffle is set to be announced today. Coming up, President Trump expected to land in Beijing in the next couple of hours. More on the US-China summit next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, the next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
I'm going to go see President Xi in 2 weeks. Actually, it'll be a very important trip.
We're doing a lot of business with China and making a lot of money. We're making a lot of money. It's different than it used to be. In all fairness, he gets like 60% of his oil from Hormuz, and I think he's been very respectful. We haven't been challenged by China. They don't challenge us.
We're going to have a meeting with President Xi. It's going to be, I think, quite amazing. He's been a friend of mine. I've gotten along with him very well over the years.
President Trump due to land in China later this morning for a meeting with President Xi. Bloomberg's Anne-Marie Horner joins us now from Beijing. What should we be looking out for as quote-unquote deliverables from this meeting, Anne-Marie?
Well, good morning, Vani. I mean, there's a number of deliverables in terms of what we could expect from this meeting between President Trump and Xi Jinping. Really a historic summit, given the fact that the last president to visit China was Trump himself in his first term nearly 9 years ago in 2017. I would say what we really want to focus on are things like purchasing agreements when it comes to agricultural sector, potentially a big Boeing deal as well that will be on the table. Obviously, technology is going to be in focus. The president right now was on Air Force One with Elon Musk, an individual that has a huge stake in this company and obviously is looking for regulatory approval at some point later this year from the Chinese when it comes to autonomous driving. And a last-minute addition of Jensen Huang of NVIDIA. Of course, NVIDIA has really been this company that not only has been influencing the White House when it comes to chip policy, but has really been stuck in the middle between Beijing and Washington when it comes to at what level of advanced technology chips China can get their hands on. And what we saw earlier this year is the U.S. grant China's ability to buy H-200s. That was a U-turn from this administration. But what we know so far from the Commerce Secretary is that China hasn't allowed any Chinese firms to actually buy them. So are chips going to be on the table? And then, of course, the two big geopolitical issues to watch out for is, of course, the Iran war. Remember, this meeting was supposed to happen in March. It was pushed back given the war in Iran. China is the biggest purchaser of Iranian crude oil and also recently told their firms to basically ignore and snub U.S. sanctions when it comes to Iranian oil. And then the biggest tell and the biggest thing to watch out for on this trip, of course, is going to be how the president speaks about Taiwan. Lots of consternation in Washington, D.C., with the president saying that he would discuss the arms sale package right now that's in the docket when it comes to Taiwan. That's got a lot of China hawks and Republicans in Congress as well concerned about what the conversation is going to be. We know China is always going to press the United States on language and arms sales when it comes to Taiwan, but really, how does the president talk about this delicate issue coming out of the meeting is going to be one to watch.
Anne-Marie, we know that Treasury Secretary Scott Bessent and He Lifeng had pre-meetings in Seoul before this. Will they have sort of laid out the agenda, you think?
Well, I think this was incredibly important, especially given the fact that China likes this stuff to be done well in advance, not the evening before the summit, before the two presidents are set to meet. So Secretary Bessent and He Lifeng spent about 3 hours together in Seoul. According to the Chinese readout from CCTV, they said that was candid conversations. Likely on this agenda was some of the deliverables we can see between President Trump and Xi Jinping, and also potentially some of the asks the United States may have China when it comes to things like the Iran war and Beijing's backing and purchasing of Iranian crude. I do find it very interesting that this comes on the heels the evening before the meeting, because this is very different to how China likes to schedule these events. Normally, these discussions would have months in advance, and a lot of them did, but they would be ironclad deliverables already done before the summit. And the summit would literally just be pomp and circumstance between the two leaders. Right now, there's a level of unpredictability when it comes to this meeting, and that certainly would have the Chinese on edge.
All right, Anne-Marie, thank you so much. Anne-Marie Horder in there in Beijing for us. Back in Washington, lawmakers pressing Defense Secretary Pete Hegseth on the mounting costs of the war with Iran. Let's bring in Kate Ackley of Bloomberg Government in Washington. Take us through the highlights, if you like, of the hearing, Kate. Who came out on top in the end?
Well, right. We've had Secretary Pete Hegseth on the Hill this week, and lawmakers have been grilling him and other Pentagon officials about just the rising cost and the duration of this war with Iran. They're now saying, the Pentagon is now saying that it's more like $29 billion. And of course, this all ties into the Pentagon's really unprecedented request for $1.5 trillion, a spending request. Really big money that the Pentagon is seeking from appropriators on Capitol Hill. In the midst of this, this war that doesn't seem to have an end in sight.
Kate, another thing that doesn't seem to be having any end in sight is just gas price hikes at the pump, right? Inflation really squeezing US voters, and we're just a few months away now from midterms, and also food prices too. And you can see that in the president's efforts to lower beef prices, take off the fuel tax and so on. What can he do in the next few months to appease voters?
Well, this is top of mind for, this is sort of the bread and butter issues for American voters. And we are now within 6 months of the midterm elections. You see Democrats running in their House races, their Senate races on the kind of affordability issue. And the economic data out this week showed that inflation had spiked up, in large part because of this conflict in Iran, where the Strait of Hormuz is blocked, so oil and gas can't get through. And it's, elevated gas prices in a way that, is very noticeable for voters. And so that is clearly top of mind. The U.S. cost of living jumped 3.8% through April, the month, the year ending in April. And that's a level that we hadn't seen for a couple of years. So that puts that issue top of mind, not just for voters, but obviously for lawmakers. Every member of the House of Representatives is up for re-election this year. And, you mentioned that Trump had said he wants to suspend the gas tax. And it's gotten a really cool reception on Capitol Hill. It doesn't seem to have been something that lawmakers are, really jumping for joy about. So we'll see where that goes. It's about 18 cents, I think, something like that per gallon. So it's not a huge amount, but every bit would help is what Trump is arguing. And again, getting sort of a cool reception on Capitol Hill for that.
Yeah, and of course it would take away, funding from the National Highway Administration too if that were to happen. Kate, thank you so much. Bloomberg Government's Kate Ackley. Coming up, PPI on deck, also another Treasury auction. We'll have your day ahead. This is Bloomberg.
'Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. First up, another look at inflation with PPI data that drops at 8:30 New York time. Then we have $25 billion in a 30-year Treasury auction that's happening this afternoon. And earnings, among others, from Cisco and StubHub after the market close. Let's take a look at some pre-market movers. Chip stocks rebounding today. Nvidia helping that sentiment really positive after we learned that Jensen Huang is, in fact, going to join President Trump on the trip to China. Alibaba down 2%. We had earnings this morning. The revenue missed estimates despite its monetization efforts in AI. And then Next Power, well, a nice jump of almost 12% for that stock. A full-year revenue outlook boost there for that particular stock. Let's take a look at your macro picture. It's going to be an interesting day. We are seeing oil off its highs, but bear in mind it's been rising for 3 days and we're really off just more than 0.5%, so not that much of a move there in Brent crude, which is still above 107. We have sentiment improving again, particularly for the Nasdaq. Now, S&P futures are also higher, but we saw the semiconductors down at 7% at one point yesterday. They crawled right back up to just being down 3%, and it looks like sentiment might improve a little bit more once again today. And then I wanted to point out yields. So the 10-year yield is a little lower than where we started the morning, 446.10, still crawling towards the 450 mark. If you look at the 30-year yield, though, it's above 502, and the 2-year yield is approaching 4%. So they do bear watching today. All right, that is it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.
Day 8 at the Italian Open. Coco Gauff maintained her perfect record against Mira Andreeva after she fought back from a set down to reach the semis. Coco's now 5-0 against the 19-year-old. She'll face the informed Sorana Castella for a spot in this weekend's final. And don't forget, you can watch all the action live daily and head on over to tennischannel.com to download the app.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction.
ओए गाइस निफ्टी ऑलमोस्ट क्लोजिंग होने वाला है फ्यूचर मैंने आप लोगों को बताया था वापस मॉर्निंग पे ऊपर रेजिस्टेंस है 23,600 टू 650 फ्यूचर में वहां से सेलिंग आई 23,450 के आसपास डे लो टारगेट था नहीं आया है तो कोई इशू नहीं है निकल जाना ओवरनाइट मत लेके जाना कल देखते हैं कोई इवेंट तो नहीं है बट नीड टू सी क्रूड अगर डाउन जाता है तो पॉसिबिलिटी है प्राइस वापस कल हमें एक छोटा सा अपसाइड देखने के लिए मिल सकता है। बहुत बड़ा अपसाइड तो मैं एक्सपेक्ट नहीं कर रहा हूँ, बट या काइंड ऑफ लिटिल एक्सपेक्टेड अपसाइड मोमेंटम। ठीक है, सेंसेक्स भी जिस तरह की डेली टाइम फ्रेम की कैंडल बनाई है सेंसेक्स ने, आज का हाई और लो बड़ा इंपॉर्टेंट हो गया डेली टाइम फ्रेम पे। आज के हाई के ऊपर अगर कल क्लोजिंग आती है तो फिर मैं एक्सपेक्ट करूंगा 77,000 की ओर भी जा सकता है प्राइस। क्लोजिंग नहीं आती है कल, फ्लैट ओपन एक कंसोलिडेशन जैसा बनता है कैंडल, देन नीड टू सी क्या प्राइस केस में मूव करता है। हो गया है मार्केट क्लोज, सेंसेक्स 74,668। कल भी 1000 पॉइंट की रेंज में रहे तो बेटर है। फिलहाल क्लोजिंग पे देखोगे एटीएम का स्ट्रेडल तो 74,700 का कॉल 350 के अराउंड क्लोज हुआ है। पुट 320 के अराउंड क्लोज हुआ है, तो टोटल मिला के हो गया ये 600, 650, 670, 680 पॉइंट की रेंज बन गई टोटल कल की एक्सपायरी के लिए। ठीक है, आज लगभग 1000 पॉइंट की रेंज थी, कल लगभग लग रहा है 600 टू 700 पॉइंट रेंज रह सकती है किसी भी एक डायरेक्शन पे। लेट्स सी, एक्सपायरी है, कल देखेंगे अब इसका। नेचुरल गैस में कुछ नहीं है, देखते हैं कुछ ट्रेड बनता है तो। कल एक्सपायरी भी है क्रूड और सेंसेक्स की, ध्यान रखना। वेदांता 6% अप है आज, वाओ। ठीक है, निफ्टी ने अच्छा मूव दिया मॉर्निंग पे, जैसा मैंने बताया था। मॉर्निंग पे एक बाइंग किया था, बाइंग नहीं किया था एक्चुअली हमने निफ्टी में, पहले मॉर्निंग पे पुट शॉर्ट किया था, मैंने आप लोगों को बताया था। 3 टारगेट उसके 20,300 का पुट शॉर्ट किया था 220 के अराउंड। 180 पहला टारगेट था, 150 दूसरा, 150 के नीचे ब्रेक करता तो 100 के आसपास तीसरा टारगेट रखा था, बट वो 100 आने से पहली पहली रेजिस्टेंस हिट कर गया निफ्टी फ्यूचर, तो अराउंड 110 तक वो लास्ट टारगेट मिला था। वहाँ पर मैंने कहा था यहाँ रेजिस्टेंस आ गया, सेलिंग आ सकती है। किसी ने अगर वहाँ पर शॉर्ट किया होगा तो अच्छा प्रॉफिट मिला होगा। पुट में तो मुझे नहीं लग रहा ज़्यादा प्रीमियम बढ़े हैं, बिकॉज उतना कुछ खास प्रीमियम बढ़े नहीं। पुट किसने बाई किया होगा, हाँ किसी ने उस एरिया पे 23,600 टू 650 के बीच में, 600 टू 630 तक गया था, बट 600 टू 650 के बीच में किसी ने अगर कॉल शॉर्ट किया होगा, वहाँ पर अच्छा प्रीमियम गया है डाउन। 23,650 का जो मैंने देखा था कॉल, 210 से 130 के अराउंड क्लोजिंग आई है फिलहाल। कल देखते हैं मार्केट कहाँ जाता है। फिलहाल अभी क्रूड ऑयल भी यहाँ पर मुझे लग रहा है ये पॉइंट ऑफ इंटरेस्ट के आसपास थोड़ा बहुत साइडवेज आ सकता है, जब तक ये इस लेवल के नीचे क्लोजिंग नहीं देता लेस चांसेस हैं कि और डाउन जाएगा। फाइट हो सकती है इस एरिया पे, मुझे लग रहा है अब ये एक एरिया है, फाइटिंग एरिया नाउ एक्सपेक्टेड है कि यहाँ पर मार्केट थोड़ा बहुत फाइट करे। नीचे ब्रेक किया तो नीचे का एरिया इजीली आ जाएगा, अपसाइड ब्रेक करता है तो फिर अपसाइड के एरिया भी ओपन हो जाएंगे। तो ये रेंज लग रही है फिलहाल के लिए मुझे क्रूड में। कैंडल ओपन इक्वल टू लो, ओवरनाइट आज इन्वेंट्री है तो मुझे लग रहा है ये रेंज साइडवेज रहनी चाहिए टिल मार्केट नॉट ओपन।
to bounce, Nasdaq futures started to bounce, Nvidia higher in the pre-market.
So the conspiracy theory is that because semiconductors were down yesterday, this was sort of a market offering saying Jensen Huang is going to come. I love some of the memes on social media. Jensen Huang deciding what to pack, and it's just a whole host of black leather jackets spread out over a bed.
Tough choices, right? Tough choices. Anne-Marie, just a final word. Of course, tech is front and centre. We'll spend time on that throughout this morning. But the elephant in the room, Iran. Lisa and I were talking about potential deliverables before the programme came on. Where does Iran fit into all of this?
Yeah, it's a great question because this entire trip, the whole context of this entire trip really was around Iran. It was supposed to be in March and it was pushed back because the United States was just once again engulfed in the Middle East. I think when it comes to Iran, there's going to be a number of questions the United States can put forward when it comes to one, how much are you supporting this regime? Obviously, China is the biggest buyer of Iranian crude. And recently, when it comes to the increased sanctions on Chinese teapots, these refiners and some of the banks that facilitate these purchases, we've seen a lot of these sanctions come through, and the Chinese government has told some of these firms that you can ignore them. So I think those would be two of the biggest asks. And I think on some level, potentially the United States could ask the Chinese at some point, you have 1.4 billion barrels of oil. When you put the United States and the 8 other biggest stockpilers of oil together, it still doesn't accumulate to what China has in terms of crude oil stockpiles. At some point, could they push some of that into the market and relieve some of the pressure when it comes to oil? I think potentially those could be some of the asks at the table.
Anne-Marie, thank you. AMH over in Beijing, China, following this trip. How many times have we talked about a President Trump trip, both in his first term and now in his second term, that typically for the diplomats, they go ahead of time, they have a conversation, they pre-agree the deliverables, and then you move on. The principal turns up and executes. It just feels like the president doesn't quite follow that particular script.
We have no idea what's going to come out of this, and people are trying to game this out, saying nothing. Other people are saying, actually, this could set the groundwork for what the détente looks like between the world's 2 largest economies.
Futures positive this morning, up by 0.3 on the S&P. Here's the view on Wall Street. Seema Shah of Principal Asset Management writing, equity gains have been led by a renewed surge in tech as AI enthusiasm reaccelerates. Despite the support, markets sit at a fragile juncture. Seema joins us now for more. Seema, welcome to the programme. What's fragile about this moment?
Hi, John. Well, I think what's fragile is we're still in the middle of this geopolitical conflict. Like the economy is really strong. We've seen that being displayed through the earnings, through the economic data, labour market data, etc. And certainly there is that renewed enthusiasm around AI, as we were saying. But so much is still dependent on how this conflict is going to go on. When does it end? When did the supply of oil start moving? And really, when are the shortages going to hit? I mean, I think the vulnerabilities are mainly with Europe and Asia, certainly less with the US. But there is, I think, a lot of optimism built into the market at the moment, which does create vulnerability.
At this point, Seema, a lot of people are saying even if you strip out the influence coming from the Middle East, there is, as John was saying earlier, a 2-speed economy, whether you're looking at the United States, whether you're looking at Europe, or even in Asia. How does that factor into how you invest, given that a lot of the gains have been driven by the AI sector?
Yeah, you know, we can't ignore the AI sector. And I think what's been interesting is the reasons why people are investing in tech again. Why has that enthusiasm come back? It's actually, it's not just about the AI productivity gains, which are driving a lot of this. It's also driven by the idea that people are looking for something which is almost something of a safe haven. They want to get exposure to growth and strong economy earnings go ahead, but they also want the strong balance sheets, positive cash flow, and the kind of the moat that sits around a lot of companies. And of course, AI technology comes right at the heart of that. So I think that's really key. And so inevitably, as we move forward, we do think that investors are going to stay really focused on technology, but you could see, I mean, you know, we have seen a broadening out of broader earnings growth, but technology is likely to continue to be the favorite. And if we do see a downturn in the economy, then something like consumer staples may certainly come back to the forefront.
Seema, does it concern you? Typically when we see crises, whether it's in credit, whether we see markets more broadly, it's in areas that people perceive as safe. The fact that we're talking about big tech as the haven trade at a time where people aren't sure what to hedge against, and we're seeing some of the valuations go to the moon, does that raise some discomfort in terms of just how not positioned this market is for any kind of downside surprise in this sphere?
Yeah, it does. And actually, this very neatly ties back into the geopolitical conflict and the concerns around that. So as you said, one of the things, of course, is valuations look very rich and have become much, much richer in the last month, given the rally that you've seen from these tech companies. But the other part of this is that these companies are not completely immune to the conflict. We know that a lot of the inputs that go into making of chips, driving a lot of the capex drive is coming through segments through the Strait. So there is a vulnerability within there that if you were to see a continuation of the conflict, stopping a lot of these inputs being able to go through and drive the capex cycle, well, then there's a clear impact through to the market and then back onto the economy. So certainly you're right, there is a vulnerability even within the enthusiasm around technology as well.
Seema, to Lisa's point, she's dead on. People have been buying what they perceive to be safe, and what they perceive to be safe in the equity market right now and over the last few months has been the chip sector. And the reason for that is there is a belief, a comfort, a high degree of confidence, conviction that it's insulated from the cycle because they have these very aggressive, very powerful secular tailwinds, and the spending is coming from a bunch of companies that are totally price insensitive with very strong balance sheets. Just how cyclical is the chip sector?
So I guess I would push back a little bit on that. You know, there is certainly cyclicality within that. But this is something which we believe is really a secular force which is moving forward. We may well see a couple of blips, but I think that investors, you know, generally they're looking for what are the long-term thematics. One of the key things that people were interested in the last couple of weeks was that after February, there was a bit of a valuation reset. Indiscriminate selling, pulling down companies which did have the strong balance sheets and very strong business models. So within that, there has been a good opportunity if you're a long-term investor to get exposure to something which we believe is a secular theme, which is going to be here for a number of years, potentially decades. So there is cyclicality, there is secular forces as well. Within the cyclical, there are certainly vulnerabilities, but we do think that investors, whenever there's an opportunity, it does suggest that that should be an opportunity to get exposure to this very, very strong secular force, which we think is going to run for a while.
Siemens, was yesterday an opportunity?
Well, you want to see a little bit of a move back.
I don't know what a dip is these days.
Yeah, it's a very, very small dip. But I think what we're seeing is people want to build up exposure. They want to keep creating this build up in AI technology. And I think the other thing that we haven't mentioned yet is the fact that these tech companies, the chip makers, are sitting at the heart of a lot of the government negotiations, US and China, gives us even more confidence to some extent that this is something which is going to be very important for the US economy going forward. Cyclical forces may create some hiccups along the way, but there is a productivity drive. The government believes that this is really key to the US growth story. And so as a result, this, investors should look for an opportunity whenever they can to build up exposure to this sector.
Seema, appreciate your time. As always, thank you. Seema Shah there of Principal Asset Management. Just finishing on the chip sector, and what a move we've seen. 70% move off the lows. A blip yesterday, only the 5th down day for the chip sector since the end of March. That chart, as you can see, has been vertical over the last 30-plus days.
You asked, was it a chance to buy? Was it an opportunity? And plenty of people are saying yes. And Seema even referenced this discussion with China. Jensen Huang, you saved the chip sector, at least for this day in May, given the fact that people are taking that as a very strong signal.
One flight on Air Force One, a quick trip to Alaska, and futures bounce. Isn't that crazy?
I mean, it gives you a sense of where people are trying to read the tea leaves.
Futures right now pulling back just a touch. We're still positive on the session by 0.2%, with an update on stories worldwide. With your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John, good morning. U.S. intelligence showing Iran still has substantial missile capabilities. The New York Times is reporting Tehran has access to 30 of its 33 missile sites along the Strait of Hormuz. SoftBank reporting a quarterly profit thanks to valuation gains on its OpenAI investment. The gains on OpenAI outweighed lackluster investment gains elsewhere. SoftBank committing to raise its total investment in OpenAI to more than $64 billion by the end of the year. A U.S. appeals court temporarily pausing a ruling that declared President Trump's latest tariffs illegal. A judge is weighing the administration's request to allow officials to keep collecting the levies. The order means importers will continue to pay the 10% duty. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. More from Vonnie later this hour. Up next on the programme, a Trump-Xi face-off.
I spoke with President Xi We both look forward to the meeting. It's going to be great. We're going to be talking with President Xi about a lot of different things. I would say more than anything else will be trade.
Tobin Marcus of Wolfe Research joins us next, live from New York City this morning. Good morning.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is open interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
$8K, new price target, Morgan Stanley, Mike Wilson, joining a host of names that have upgraded their outlook on the S&P 500. Mike Wilson being one, RBC, Lori Calvasina being another, Edgiard Denny doing the same thing, HSBC following as well. All of that in the last week, looking for a much higher equity market. Your equity market this morning bouncing back. On the S&P 500, equity futures up by 0.25%. On the NASDAQ, up by 0.8%. In the bond market, 2s, 10s, 30s, new high of the year on a closing basis for 10s and 30s. 30s holding on to 5%. And now, in addition to that, this move in the UK. UK yields off the lows and bouncing, almost positive on the session, north of 5% on a 10-year. This from the Times of London just moments ago. That the House Secretary, Wes Streeting, has told allies he's preparing to trigger a leadership contest and resign as soon as tomorrow. So this uncertainty around the future of this government continues to linger, and yields on British debt continue to climb.
The argument here is that they're not climbing because Keir Starmer could leave. It's climbing because of what could potentially replace Keir Starmer. There were a lot of calls for apologies to Liz Truss yesterday. It was really notable yesterday, saying it was not a Liz Truss moment. It was a fiscal reality that the United Kingdom is facing, that nobody has come up with a feasible, implementable plan to actually fix it. And as a result, you're seeing the bond vigilantes waving their pitchforks and coming out for blood. And that is what you feel on this morning.
I saw your viral social media post yesterday of the chart of British yields, and I have to say I agree with you, which is probably what encouraged some of the pushback and the clamour for support for Liz Truss from the moves back in the day.
I remember when people said this is just because of her budget and how unrealistic it was. People are now pushing back and saying, actually, Rachel Reeves is following a lot of those same edicts that Liz Truss was saying. She took the fall for it, but clearly there is a need for some sort of more significant financial plan to shore up UK finances.
There's a real bite in the bond market, not just in the UK. You see Japanese yields at the highest level since 97 on some maturities, in the UK since 98. German yields 2011 on some maturities again. The US the highest close so far this year. You're seeing this build, I would say worldwide. More acute in the UK, but worldwide.
Yeah, you saw that yesterday, that 10-year auction come at the highest yield going back to February of 2025 in the United States. Today we have a 30-year auction, which is going to get really interesting given the lack of demand for long-term debt. Do people pile in with the faith that they are going to be rescued by Treasury Secretary Scott Bessent, or do they stay away? That's what I'm watching today.
At the moment, the president is focused on something else. He's heading to China. Under surveillance this morning, a Trump-Xi face-off.
I spoke with President Xi. We both look forward to the meeting. It's going to be great. He's a wonderful guy. He's a friend of mine, and we're going to have a great meeting. We do a lot of business with China. We do very well with China, and they do well with us, and the relationship is very good. We're going to be talking with President Xi about a lot of different things. I would say more than anything else will be trade. We have a lot of things to discuss. I wouldn't say Iran is one of them, to be honest with you.
So here's the latest this morning. President Donald Trump travelling to Beijing with a plan to focus on trade during his meeting with Xi Jinping. Tobin Marcus of Wolf Research writing, we think the summit will serve largely to reinforce détente rather than deliver new breakthroughs. Tobin joins us now for more. Tobin, welcome to the programme. What are the kind of deliverables, if any, that you might expect in the coming days?
Thanks for having me. So the centerpiece certainly seems like it's going to be purchase commitments. That's always been a classic part of the playbook between Trump and Xi. We saw that in the Phase 1 trade deal in his first term. We saw that in the Busan truce last year with agricultural purchase commitments. There are questions about exactly how big those numbers will be. I think markets probably are most excited about the aerospace piece of that in terms of whatever new order Boeing might get, exactly how big it is, exactly how many wide-body airframes are included in that. But certainly there will be some big numbers there. Beyond that, I think we're going to get a lot of announcements of dialogue and things that we want to work on together, but really not a lot in the way of concrete further policy movement on issues like export controls that have been a focus for markets.
Tobin, with that in mind, what about chips? Jensen gets on the plane, the NVIDIA boss, the market starts to pop a little bit higher. Not a major move, but you can see it on the screen, on the charts, Tobin. Could we expect something there?
I'm not expecting much. So the original omission of Huang seems to have been very intentional, very mutually agreed upon. And so I think that that reflects the deliverables that exist here. More so than the subsequent decision to add him back in. He seems to have been kind of added back on an impulse by Trump, who saw the coverage of the omission, didn't love what he was seeing. So I'm not reading that incredibly strongly. And there are, there are good security reasons for not expecting further concessions on chips. It's something that there's been pushback on in the past. There was pushback on that at the Trump-Xi meeting back in October with other folks in the White House seeming to have kind of staged an intervention to prevent him from putting Blackwell chip relaxation on the table. So that's not something that I think is on the roadmap.
Tobin, John was talking earlier about how rare it is to go into a meeting like this without all of the deliverables predetermined in advance. Do we have a sense of what ultimately could come out of this meeting that would set the tone for whatever détente there is, and frankly, for the terms of trade?
Yeah, so, I mean, in terms of managing the terms of trade going forward, there's been a lot of U.S. emphasis on this notion of a U.S.-China Board of Trade that's meant to sort of formalize and institutionalize purchase commitments going forward. The idea being that left to their own devices, we're just going to end up with a very unbalanced trade relationship where they're not buying enough of U.S. exports. And so we need to have an ongoing mechanism to figure out what it is they're going to buy to offset the exports they're sending to the U.S. and try and reduce the bilateral trade deficit. That's something that doesn't necessarily seem fully baked and agreed upon from the Chinese side, but that there's been a lot of U.S. focus. So wouldn't be surprised to see anything like that come out. So those kinds of things, again, ongoing dialogue mechanisms, ways to structure and institutionalize the détente that currently exists, I think that's most of what we're going to see rather than, again, concrete new commitments.
Do you believe, Tobin, that Iran really will not be part of the conversation?
I would be pretty surprised if it didn't come up at all, but I also would be pretty surprised if we saw China come out and do something really specific to pressure the Iranians to make a deal. That's not really how they approach foreign policy in general. Their foreign policy approach tends to be fairly transactional, tends to be very focused on their own interests. They don't like to be dragged into, mediating between third countries like this. And I question whether or not they have the leverage to force the Iranians to capitulate to Trump's demands on nuclear and other issues, even if they wanted to. Certainly they want a peace deal. I'm sure there will be messages coming out of this encouraging flexibility and sincerity by all sides and the importance of national sovereignty and freedom of navigation and so forth. But in terms of actually trying to twist the Iranians' arms to make them agree to a deal on President Trump's terms, which of course is what he's shooting for, not just a deal, but a deal that meets his demands, that's not something that really seems appealing to China from my perspective.
Hey, Tobin, it's good to see you. Thanks for your input. Tobin Marcus there of Wolf Research. It's the elephant in the room, no doubt. But by saying we're not going to talk about it, it just lowers the bar for expectations over the next 24 hours.
And it raises the bar for other deliverables in terms of all of the corporate officers who are there looking for some sort of resolution to their issues. But yes, you're right. It's saying, look, don't expect much.
Beans, chips and planes. Apparently it's the focus now.
Beans,
right?
chips and planes. I haven't heard that. I love that.
There you go.
And tractors.
Up next on the programme, Kit Jukes of SocGen as the British Prime Minister Keir Starmer vows to stay in power. The latest in the UK in just a moment.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Later this morning, another read on inflation following a hotter-than-expected CPI print yesterday. PPI later this morning at 8:30 Eastern Time. Look out for that. Tons of Fed speak as well. Goolsby with some pretty stern language yesterday. Chicago Fed president saying, we've got an inflation problem. Okay, What are we going to do about it?
Well, you see the market starting to price in a greater chance of a rate hike as a result of some of that rhetoric. I thought it was really funny, some of the commentary around what we have Kevin Warsh walking into. There was a Wall Street Journal editorial where they said, Kevin Warsh is inheriting one of the most difficult monetary tasks since Paul Volcker took it over from G. William Miller in 1979. Wish Mr. Warsh good luck. He and we will need it.
He's certainly going to need it. I don't know about us. We're going to be okay.
I mean,
plenty of coverage, Bramo.
That's true. It's as you say, we're in the volatility industry.
It's the gift that keeps giving, right?
Sort of.
Equity futures on the S&P positive this morning by 0.2%. On the Nasdaq bouncing back, we're higher by 0.75%. Let's talk about that bond market with the Fed in mind. Front end of the yield curve, twos. The high of the session yesterday, 3.9998. The high of the session this morning, 3.9956. We've got this 4% shaped ceiling at the front end of the yield curve. Can we break through that later this morning?
If we get PPI coming in significantly hotter than expected, you get some more rhetoric coming from some of the central bankers. And then, of course, Kevin Warsh potentially becomes Fed chair today in a vote. Does he give any signal? He probably won't. But if he does give a signal that he's open to potentially hiking rates and that inflation truly is a choice and that he's choosing the metrics that are out there and that they are too high, suddenly we have a very different scenario where we break some of those levels.
Inflation hotter than expected, driving yields higher in yesterday's session. Crude contributing to that as well, driven higher by the president's current posture around the story in Iran. Brent crude 108, WTI 102. That's the cross-asset price action this morning with some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. When the president calls, you answer. And that's what happened with CEO Jensen Huang, who is now on his way to China with President Trump, despite not originally being on that list of executives set to attend. So you are seeing a bump in shares up 2.5% in the pre-market as investors bet that this can help NVIDIA get its H200 AI chip into China. Speaking of chips, we are seeing that sector rebound after a challenging session yesterday. We are seeing names like Micron and SanDisk up in the pre-market, and I will note that the CEOs of Micron and Qualcomm are both part of that delegation heading to China with the president. And speaking of China, we are seeing Alibaba ADRs falling more than 1% in the pre-market. It just reported earnings in the last hour, and it missed on both profitability and revenue, despite its AI business showing strong growth. But investors appear more focused on slowing momentum in its core e-commerce business and that heavier spending tied to AI. John.
Yahira, thank you. Thanks for the update. More from Yahira in the next hour. On our radar this morning, the NVIDIA CEO, Jensen Huang, joining President Donald Trump and other high-powered executives in China as a last-minute addition. NVIDIA shares rising on the news of Huang's inclusion to the delegation. Elsewhere, Anthropic in talks with investors to raise at least $30 billion in what could be its largest round of funding to date. The round expected to close as soon as the end of this month, with the Claude maker's valuation now topping $900 billion. US dollars. And finally, SoftBank reporting a surge in profit as its stake in OpenAI continues to pay off. OpenAI's valuation growing by more than fivefold since SoftBank's first investment, with the bank set to commit more than $64 billion to OpenAI this year.
Do you worry about concentration, or do you reward them on paper gains? How much does this really highlight what's at stake when OpenAI potentially has their IPO later this year? How many different funds are highly leveraged to its success, even amid a pretty controversial lawsuit? I don't know if you read any of the coverage yesterday about the back and forth. Some of the discussion, the way that the lawyers were planning this. Either way, it just shows you can't avoid concentration risk. SoftBank right now is being rewarded for it, and it's almost a godsend because they're having trouble raising other additional money. So at least they could take the booked profits and try to invest more.
We've talked about the potential weak links to the AI ecosystem. You've mentioned the ROI of certain hyperscalers, that at some point, if it doesn't arrive, there's going to be pushback on the amount of spending. The other weak spot as well is the spending commitments of these companies. Are they going to have the revenue to match for them to be able to deliver it? Because there are a lot of companies building out a lot of capacity with these companies in mind.
Yeah, and it's leverage, as you've pointed out, with respect to other chip makers, whether it's Oracle, whether it's Amazon, whether it's Microsoft and their investments in the OpenAIs of the world. But it's also all these investment funds. And I was thinking about this last night. What isn't leverage to this story? Even government debt, you could argue, is leveraged to the story of the productivity of AI that's coming to the fore. And as we can see from SoftBank's earnings, there isn't really another option. If you're investing in tech, you're investing in this trade. So why not go all in? If that all in doesn't land, well, then we have a problem.
The latest on SoftBank this morning. We've got a problem in the UK. Political uncertainty in the country pushing gilt yields to their highest levels in decades. According to the Times of London just moments ago, a rival to UK Prime Minister Keir Starmer preparing to trigger a leadership contest. Kit Jukes of SocGen writing the following. Increased spending and higher taxes are a given. Layer that on top of rising energy costs and falling growth forecasts. There isn't much to make anyone feel good about the pound. Kit joins us now for more. Kit, welcome to the programme. Lisa said it yesterday, said it again this morning. Is this the new normal for UK assets?
It's been the normal for a little while now. We are stuck in a world of governments that don't focus enough on growth, that have lots of other things they're more interested in. The result of that is you are constrained on spending or you have to raise taxes, and you're probably going to be unpopular somewhere in the middle of it, and round we go. And the adult in the room is the bond market, or the referee is the bond market, because funding this requires a country with a massive current account deficit dependent on foreign investors to come in and buy gilts. Gilt yields spike, and the government does or doesn't fall and doesn't respect the bond market and get its act together. And we've done this a few times, and we don't look like escaping this until someone comes in and says, we need more growth.
Okay, outside of the UK, investors might not be familiar with names like Wes Streeting, Andy Burnham. Andy Burnham, of course, the Mayor of Manchester, Wes Streeting, the House Secretary. There was a moment ago, about 10, 15 minutes ago, we had a report from the Times of London suggesting that maybe the House Secretary might consider triggering a leadership election, a leadership contest, and ultimately quit the government in the next 24 hours. Kit, what could come next? Can you help people understand what the next government, the next leadership might look like?
So it depends on where we go. So we have factions that he's not part of the biggest faction. That's the Burnham faction, but it represents certainly a shift to the left politically. And then if he were to win a vote, for example, which is possible but at this point unlikely, you would have a messy kind of situation going forwards from there, where you see what you can do. If it gets to one candidate turns into lots of candidates, then we see the Mayor of Manchester has to find himself a seat in Parliament, and that'll take time. And the last round of voting that we saw in the local elections didn't suggest that a lot of people are voting Labour at the moment. So that's quite messy. So it's all going to be quite drawn out. And if we got to an end conclusion, we would still have a Labour government, and we would still have a Labour government that at the moment is fixated on lots of things that don't include growing the economy more quickly and increasing tax revenues through that method. That includes higher taxation or reduced spending, depending on where you sit. So the problem doesn't go away.
How much is this specifically a UK problem, and how much is this a broader representation of the issue facing all of Europe and, frankly, on the margins, the United States, with debt levels at a very high level relative to growth and a potential pushback in an inflationary environment from bond investors?
Well, so firstly, I guess we're at the pointy end of the problem. So the problem starts if the United States sees higher yields because people are concerned about the inflation-fighting credibility of the Federal Reserve and are concerned about the size of the deficit spending on the war and anything else. If we get ourselves into that, then you get Treasury yields, if you like, wandering up to 4, and we wanted ours up to 5, and we can add some numbers to each of those. We have a bigger current account deficit as a percent of GDP than pretty much anybody else, so we're dependent on foreign investment coming in. We have slow growth, and the only thing that keeps our currency stable is having interest rates that are high or higher than the rest of Europe. That doesn't get our growth story out. So, yeah, if 10-year note yields were at 2.5% in the US, the world would be a much easier place. Unfortunately, because it isn't, we're the kind of we're the place where the pain starts being felt, and it's on the UK government, given where we are, the size of our deficit, the size of our current account deficit, to be responsible. The only advantage we have over the United States is we have a very credible central bank, an inflation-targeting central bank whose independence isn't in question at all. But that on its own isn't going to be enough to finance the deficits to come.
What would it take, Kit, for you to get bullish on the pound?
On the pound, I'm only slowly, but the support the pound has is that everybody's bearish. So it doesn't take me much good news to make me optimistic, but I would like a government with a clear and coherent plan for growth, and then I probably would be bearish, because at that margin, if I thought that that we could put in a program that would have the UK growing 1% faster per annum than the rest of Europe, which isn't a very big bar to get over, then the pound, I think, could start getting stronger. But its value in real terms is being eroded because we're consistently running higher inflation than the rest of Europe. So it's getting more expensive every day, and that's why in nominal terms the currency is going to have to weaken at some point if we don't turn that around.
Boost exports, liberate North Sea oil, do something about who's running energy policy in the UK right now, maybe means test some of the entitlements programs, do something about that. All the kind of things that nobody wants to do in the British government at the moment.
I see John Farrow for Prime Minister.
I don't think nobody wants that.
Underneath the desk, these banners that are about to be waved
Nobody
come out.
Wants that.
You know, no cruises. Yes, for
no cruises
fiscal.
would be another one. Yeah, sure. That'd be just one of those policies that, just to understand my values.
Yeah, just
right?
to,
No cruises.
benchmark to the extreme.
Kit, thank you, sir. Kit Jukes there of SocGen in the City of London. Happening right now, as we have this conversation, the ceremonial opening of Parliament, King Charles III taking the throne, so to speak, although not quite the throne, of course, that you might be used to seeing, really outlining the Prime Minister and the government's priorities at this time. And the question, the elephant in the room, is whether he can actually deliver them or not, whether this leader is going to be around to really push through these proposals.
And whether King Charles is really going to back Keir Starmer's bid to stay on as Prime Minister. I was doing extensive research this morning on social media and ChatGPT to try to understand exactly the relevance of the King's speech. And this idea of, is this essentially the last salvo of backing to Keir Starmer was what I came up with. So I am the people who are doing vast research on the entire structure and all these people.
Great scenes, and that's about as good as it gets for UK policy right now. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. The U.S. Senate confirming Kevin Warsh to the Federal Reserve Board of Governors with a 51-45 vote, granting him a 14-year term. Lawmakers also clearing a procedural hurdle for a vote on his nomination to be Fed chair. That could come as early as today. Walmart is cutting or relocating about 1,000 corporate jobs. The company is saying it's consolidating its technology and AI efforts. The retail giant will help staff explore opportunities within the company for workers who lose their jobs, it says. Global oil inventories are falling at a record pace. The IEA saying stockpiles will continue to drop for months as disruptions from the Iran war intensify. Adding the market will remain severely undersupplied until October if the war ends this month. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Next on the programme, peak inflation pressures.
You still have kind of what I'll call a trifecta here. You have energy prices pushing the headline. We think we have the last vestiges of tariff pass-through, and then we had that catch-up effect on shelter. We think we're at peak pressures now.
Up next, we'll catch up with Claudia Sam of New Century Advisors, live from New York City this morning. Good morning. You're watching Bloomberg TV.
operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Equity futures positive here by 0.2% on the S&P 500, bouncing back by 0.8 on the Nasdaq, up by about a quarter on small caps this morning. Bond yields near the highs of the year, just off them right now, 10s and 30s, 10s 4.46, 30s north of 5%, and 2s bumping up against 4%. Did that yesterday, doing it again this morning, going into PPI later this morning. 8:30 Eastern Time.
People are looking at the inflationary pop that we saw yesterday, and they don't like what they see. You see that reflected in some of the bond yields and inflation expectation metrics. Yesterday, we're coming off of those just a touch. A real question about how much will there will be at this central bank to really combat that increase in inflation, and again, whether it's sustainable.
Under Savannah's this morning, peak inflation pressures.
You still have kind of what I'll call a trifecta here. You have energy prices pushing the headline. We think we have the last vestiges of tariff pass-through on core inflation, core goods, and then we had that catch-up effect on shelter. So three forces pushing inflation in this particular CPI reading higher. We think we're at peak pressures now.
So here's the latest this morning. Investors are waiting another read on inflation. PPI data due at 8:30 Eastern Time, following a hotter than expected print for consumer prices. Claudia Sam of New Century Advisors writing, the distortions from the government shutdown aren't over. We've been carrying too low inflation, then had a 1-month pop to get the price level back on track. Claudia joins us now for more. Claudia, welcome to the programme. Yesterday, the number, just your reflections on that. Was that a quirk of maybe some distortions or something more important?
So particularly when we look at core inflation, so not the energy, not the food prices, that the housing inflation, so rent, owner's equivalent rent, this was a carry-on from a distortion. Because of the government shutdown, the Bureau of Labor Statistics did not collect those prices in October, and the way they worked around that missing data was to impute a bunch of zeros. And 6 months later, they actually get to go back and in that housing space pick up the prices. And so we got like twice the price increase in the housing inflation. Again, we expected this to be coming because of the distortions, but I think it brings us back to how disruptive the government shutdown was, how disruptive it was for our statistics. And the Bureau of Labor Statistics is still dealing with some missing data. They have to put together the CPI weights for next year. So it's really frustrating to see how much time is put into kind of fixing a hole in the data as opposed to innovating on our statistics.
Does that make you hesitant to draw conclusions from the data we've received so far? Can you take it at face value?
Oh, there was a lot to take at face value in the data. And frankly, we needed to see that pop in the housing shelter because that's gotten the price level of housing back on track. So I'm not trying to discount that number, but we shouldn't expect to see such really hot OER and rent numbers next month. Like that was a one-time adjustment. the real thing to be focused on is what's happening in the energy space, because we are right at the beginning of that cost shock, right? So we're seeing it in the gasoline prices, the diesel prices, but what is going to happen over the coming months is this is going to start seeping into other prices, potentially back into core in a variety of goods. And frankly, I mean, the real concern is the energy disruption is still live. The Strait of Hormuz is still disrupted. So we're not even at a place where we're kind of building back. I mean, this is going to worsen unless, really things change on the supply side. So we're in the early innings of what could be a really problematic path for inflation the rest of this year.
Claudia, one thing that economists pointed to yesterday was that we're already starting to see that pass through the second order effects that come from higher energy prices. We saw airfares rise 2.8%. We saw postage and delivery services rise 3.5%. Grocery prices also saw their biggest increase going back to 2022. Does that give you pause that we're already seeing those pass-through effects in a number of different categories?
Well, I think it should also give us pause that we're not seeing the full effect of them. I mean, with any kind of supply shock, the details matter. The timing is very hard. The duration is very hard historically. And we have had more experience with energy shocks. Historically, those pass-throughs, particularly to other kinds of goods like in groceries or any, I mean, we have a lot of goods that depend on energy just for the transport. Typically, those transport feed-throughs take several months to happen. Now, it could be happening more quickly this time, for a lot of different reasons. But I suspect what we're seeing on the food prices probably didn't have that much to do with what's happening in the Middle East. It was other effects. I mean, we have a lot of reasons food prices can move around, but then that should be, could be really disconcerting because that means those energy costs are still coming, right? And so we have not seen the full effect of this in terms of the prices. Now, typically those indirect costs, the second order effects, they tend to be relatively small with energy. But again, the energy shock itself hasn't played itself through. So there's a lot of uncertainty about where this goes, and it's not going in a good direction.
When you pair the inflationary story with profits that have come in at incredibly high levels, exceeding expectations by something like twice what the Wall Street had penciled in, there's another aspect to the story, which is that demand is still strong enough to sustain the pass-through effect on some of these price increases. What are you looking for in PPI? What are you looking for in retail sales to give you a sense of just what kind of demand destruction there is or, frankly, isn't right now?
So what I have been focused primarily on is the wage data, right? Because for most consumers, the way they support their spending is through their paychecks, and we have seen now with having gotten the wage data for April last Friday and now getting the consumer prices for April, the wages are no longer keeping up with prices kind of broadly. And certainly that has, there are certain groups of workers where they've been falling behind already. So that, as that buffer wears down, and again, the full effect of that could take time. Many people do have some kind of buffer. They try to work around. This is temporary, but the longer things go along, people are going to have to cut back. And I think one thing coming into this inflation movement or surge that is different than before, in the pandemic, is lower wage workers do not have an extra bump in the wage growth. That was something very unusual coming out of the pandemic. Is lower wage workers had the faster wage growth. They actually had a little bit more of a buffer when inflation picked up. That is not the case now. So the people who are hardest hit already, they're getting the full force of this in terms of a loss of purchasing power. And eventually that is going to show up in terms of the spending, but I wouldn't expect it necessarily to see it in this week's retail sale. I mean, if we see weakness, that's not a good sign because there's more weakness coming.
Welcome to the committee, Kevin Walsh. Claudia, just a final question. What kind of a committee is Walsh walking into?
This is a committee that is very, very concerned about inflation. I mean, we've gotten some good news on the labor market. Things do appear to have stabilized. Downside risk to employment appear to be less than they were even 6 months ago. That's great, but the news on inflation is just not good. So it's going to be, they're very cautious. They want to see any signs of improvement on inflation before they act, and it's going to be a while before we see real signs of improvement on inflation.
Claudia Sam of New Century Advisors. Claudia, always good to catch up. Chicago Fed President Austin Goolsbee, these words yesterday: "We've got an inflation problem in this country. We've got to get it back down."
Kevin Warsh, back in 2010, probably would agree with him in terms of what the priorities were. He did also sound relatively hawkish in the testimony that he was, the prepared testimony to the congressional committees that he was meeting in front of. Will he be truly that much more dovish than the current Fed chair? Will he come in and be a surprise Paul Volcker? What will the rope be like that he'll be given by this president? And that is the tension. Look, the commentary, Wall Street Journal, wish Mr. Warsh good luck. The FT, Kevin Warsh will be thrust into an impossible position. I mean, one person after another sees this conundrum and says, well, he is not in the easiest of spots.
I'm sitting here laughing because you say that, Kevin Warsh would agree with him back in 2010. Austin Goolsbee might have disagreed with himself a year, 2 years ago.
Austin Goolsbee once was a dove and Kevin Warsh was once a hawk.
Right.
Now we're talking about penguins. I have no idea what we're talking about now.
Things can change. They cut interest rates multiple times at the end of last year. They cut interest rates multiple times at the end of the year before. They were worried about the labour market, now they're worried about the other side of the mandate. They've got caught offside multiple times now over the last several years.
We have an economy that's in vast transition right now, and people don't understand all the myriad effects. They all have different opinions. This is going to be like herding cats, and Kevin Warsh has to do it at a time where, yes, bond yields are climbing, but also the dollar structurally, some people are saying, is in a weakening position. Who's the referee in this contest? And ultimately, people aren't really gaming this out. People kind of are expecting Kevin Warsh to be center down the line kind of guy, at least according to price action.
We'll see what we get. The good news is consumers are still spending. The bad news is that wages are being squeezed. And being squeezed by higher prices. Up next, we'll catch up with Victoria Fernandez of Crossmark, Conor Wayne Sanders of Bloomberg Intelligence, Seth Carpenter of Morgan Stanley, and Eddie Fishman of the Council on Foreign Relations. With futures bouncing back by 0.2% on the S&P 500, the second hour of Bloomberg surveillance just around the corner.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is The Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The economy remains resilient.
Growth has been really strong.
You've seen reasonably good hard economic statistics.
I don't think the Fed needs to cut rates.
The Fed's on the sideline for the rest of this year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Equity futures on the S&P 500 firmer by 0.2%, bouncing back on the Nasdaq up by 0.75%. One flight from Alaska to China, apparently enough to support this market. We'll get into that in a moment. Ridiculous. In the bond market, 2s, 10s, 30s, highest close of the year on 10s and 30s in the last 24 hours. We hold on to those levels. 10s at 446, 30s north of 5%. Heading into more economic data later. 90 minutes away. Another read on inflation. PPI.
Guys, crude oil को देखोगे as expected ये point of interest से support लिया है मार्केट ने वापस. ठीक है, रेंज है. देखो अब इसको निकलना है किसी एक साइड पे, या तो ऊपर ब्रेकआउट करना पड़ेगा 9,820 850 के ऊपर, या फिर नीचे ब्रेक डाउन कर दे इस पॉइंट ऑफ इंटरेस्ट के विच इज़ बिलो 9,680 660 के नीचे. तब हम एक्सपेक्ट करेंगे कि एक रेंज मिल सकती है. अदरवाइज मुझे लग रहा है थोड़ा फंस गया है साइडवेज रेंज के अंदर. अच्छा सपोर्ट लिया एग्जैक्टली फ्रॉम द पॉइंट ऑफ इंटरेस्ट. So it is kind of a sideways now. मतलब ये नहीं कि ऊपर बाई कर लें, ऊपर बाई के लिए ब्रेकआउट चाहिए. जब तक ऊपर ब्रेकआउट नहीं होगा बाई भी नहीं कर सकते. ये रेंज है, किसी एक साइड पे ब्रेकआउट या ब्रेकडाउन हो जाएगा, उसके बाद मुझे लगता है डायरेक्शन मिल जाएगी. नीचे ब्रेकडाउन हुआ तो ये ओरिजिनल जो टारगेट था वहाँ तक जा सकते हैं. अप साइड प्रॉपरली ब्रेकआउट में चला गया तो फिर ये सपोर्ट स्ट्रॉन्ग बन जाएगा पॉइंट ऑफ इंटरेस्ट वाला. ऊपर का तो फिर रेजिस्टेंस काफ़ी दूर है अभी, और ये रेजिस्टेंस भी कल दूसरी बार टेस्ट हुआ था, अभी तीसरी बार आया है यहाँ पर. नेचुरल गैस भी वॉलेटाइल ही है. गिफ्ट निफ्टी देखोगे गैप डाउन हुआ था हल्का सा सेलिंग में, डाउन साइड गया वापस न्यूट्रल हो गया. करंटली ट्रेडिंग इंडियन मार्केट की क्लोजिंग के बाद लगभग 33 पॉइंट का गैप डाउन में चल रहा है.
An increasingly dangerous and volatile world threatens the United Kingdom, with the conflict in the Middle East only the most recent example. Every element of the nation's energy, defense, and economic security will be tested. My government will respond to this world with strength and aim to create a country that is fair for all. My ministers will take decisions that protect the energy, defence and economic security of the United Kingdom for the long term. They will defend the British values of decency, tolerance and respect for difference under our common flag. And they will harness the potential of the pride felt across this country for its communities. My government will take urgent action to tackle anti-Semitism and ensure all communities feel safe.
वॉलेटिलिटी काफ़ी हाई लग रही है वापस नेचुरल गैस में। ट्रम्प आई थिंक देखना पड़ेगा कब पहुंचते हैं ईरान, सॉरी नॉट ईरान, चाइना में।
My ministers will also proceed with the introduction of digital ID that will modernize how citizens interact with public services. My ministers will also proceed
नेचुरल गैस में कोई लेवल नहीं है, वेट करना पड़ेगा, नहीं तो वॉलेटिलिटी में फंस जाएंगे। कल एक मोमेंटम सेलिंग साइड पे आ चुका है। अगर थोड़ी देर यहाँ पर कंसोलिडेशन हो गया क्रूड ऑयल में तो ब्रेकआउट के चांसेस बढ़ जाएंगे। इन दैट केस ये रेजिस्टेंस ब्रेक हो ही जाएगा मोस्टली। नहीं होता है मार्केट थोड़ा सेलिंग में फास्ट आता है, नीचे रेजिस्टेंस के ब्रेक होने के भी चांसेस हैं उस केस में, क्योंकि डीप लेवल से सपोर्ट ले लिया इस पॉइंट ऑफ इंटरेस्ट के अराउंड प्राइस ने। एक्सपेक्ट कर रहा था नीचे आए फिर यहाँ से बाइंग आए और फिर ऊपर जाए, सबसे बेस्ट के सिनेरियो। यहाँ पर जितने भी सेलर हैं उनके इजीली टारगेट ही मिल जाता है, देन मार्केट मूव, क्योंकि प्राइस ऑलरेडी हाई है काफ़ी, थोड़ा सा भी ठीक ठाक प्रॉफिट बुकिंग दे नहीं रहा है यहाँ पे। नेचुरल गैस काइंड ऑफ रेजिस्टेंस रेजिस्टेंस था, उसका ब्रेकआउट हो गया था, उसके रिटेस्ट पर रुक रहा है मोस्ट प्रॉब्ली। रेंज बना के बैठा हुआ है नेचुरल गैस भी, डे हाई डे लो, सिर्फ कुछ पॉइंट्स की रेंज है, जस्ट 3.5 पॉइंट की रेंज है फिलहाल के लिए। ऐसा नीचे आता है तभी बाई करेंगे इसमें वापस नेचुरल गैस में, 260 567 के अप्रोक्सीमेटली। घंटा है 5:30 होने वाला है न्यूयॉर्क सेशन में भी गोइंग टू ओपन रेंज है बस 3 पॉइंट की इसी में घूम रहा है ये बाकी क्रूड ऑयल भी देखोगे जैसा मैंने बताया थोड़ी देर पहले रेंज बाउंड हो गया है ऊपर रेजिस्टेंस और इस पॉइंट ऑफ इंटरेस्ट के बीच में नीचे जाना है तो ब्रेकडाउन जरूरी है 9680 660 के नीचे ऊपर जाना है तो 9820 830 के ऊपर ब्रेकआउट जरूरी है नीचे ब्रेक किया तो जो फाइनल टारगेट मॉर्निंग से कल से सोच रहे हैं वो आ जाएगा जो कि मैं एक्सपेक्ट कर रहा हूँ कि आना चाहिए फिर यहाँ तक एक बार प्राइस आ जाए फिर यहाँ से बाइंग करना ज़्यादा सेफ रहेगा कंपेयर टू यहाँ ब्रेकआउट हो जाए और फिर प्राइस आके यहाँ सपोर्ट ले दैट इज़ बेसिकली कोई बड़ी न्यूज़ अगर आने वाली है तब एक पॉसिबिलिटी बन सकती है इसकी चांसेस कम है चाइना पहुँच चुके हैं ट्रम्प मोस्ट प्रॉब्ली कल आई थिंक अर्ली मॉर्निंग 6:30 इंडियन टाइम के अकॉर्डिंग एएम चाइनीज़ प्रेसिडेंट और यूएस प्रेसिडेंट के बीच में बातचीत होगी तो वहाँ से देखते हैं क्या कुछ पॉइंट्स निकल के आते हैं Okay, 15 मिनट लेफ्ट न्यूयॉर्क सेशन ओपनिंग। क्रूड थोड़ा मोमेंटम कर सकता है, डेटा भी आना है अभी। आज क्रूड ऑयल की इन्वेंट्री है, उससे पहले पीपीआई का डेटा है शाम को 6 बजे, उसका भी ध्यान रखेंगे। ओके, गिफ्ट निफ्टी फ्लैट हो गया है, अपना इंडियन मार्केट की क्लोजिंग जहां पर थी वहीं पर आ गया वापस। लुक्स लाइक कल गैप अप देखने के लिए मिल सकता है, एक छोटा सा 100-200 पॉइंट का।
And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. And this is Bloomberg.
Live pictures coming from Beijing Capital Airport, where the president will touch down on Air Force One any moment now. Scheduled to drop down in about 5 minutes' time. The president will be greeted by the vice president of China and also a military honor guard and a military band as well. On board Air Force One, as we understand, according to Elon Musk himself, is Elon Musk and Jensen Huang, which is getting plenty of attention heading into this bilateral meeting with the Chinese leader.
Yeah, analysts and foreign affairs are saying don't read too much into this, and the market is saying read a lot into this and buy chip stocks, and that's essentially what we're seeing this morning.
We'll come back to that story in just a moment. Here's the scores, the price action for you this morning. Equity futures bouncing back on the S&P. A meeting between Jensen and the president in Alaska, getting on board Air Force One. I know it sounds like a stretch, but I can only tell you what's on the screen, on the chart. The Nasdaq bounces, the S&P bounces, Nvidia starts to rally. Is there scope, is there space for a deal here in Beijing?
Initially, the reason why Jensen Huang reportedly wasn't included because of awkward conversations around the H200 trip and what hasn't been sold yet to China. Evidently, those awkward conversations are now ready to be had. Whether there actually will be anything deliverable, the market is expecting a lot. Again, the strategists that we speak to say don't expect anything, so there clearly is tension there.
I was of the opinion that it was doing him a favor, him not going. We'll see if anything changes in the next 24 hours. Under surveillance this morning, a high-stakes trip to China.
This is going to be a very exciting trip. A lot of good things are going to happen. I have a great relationship with President Xi, and I think it's going to remain that way. We have a lot of things to discuss. I wouldn't say Iran is one of them, to be honest with you, because we have Iran very much under control.
So here's the latest this morning. President Trump set to arrive in China for a summit with President Xi Jinping after the war with Iran delayed the original meeting. Anne-Marie joins us now from Beijing for more. Anne-Marie, just describe the next 10 minutes and the next 24 hours.
What we're going to see is that the president is going to walk off this plane, Air Force One, as we are waiting for its imminent arrival, Jonathan, here in Beijing. And he's going to be greeted by his own U.S. ambassador, of course, to China, David Perdue, as well as China's vice president. We do see Air Force One arriving now. The president arriving in Beijing, of course. He was the last U.S. president to visit in his first term in 2017. Obviously, there's a lot of questions regarding who he's bringing on this trip. A last-minute addition that we've been talking about all morning of Jensen Huang of Nvidia. Does that mean chips might be back on the negotiating table? Elon Musk as well is joining the president. And also, I think really important to remark some of the cabinet members that are joining him. Of course, Secretary of State Marco Rubio, an individual that was sanctioned by China when he was a senator, as well as Secretary Hegseth. And of course, Treasury Secretary Scott Bessent will also be meeting him, not arriving with him on Air Force One. Remember, there was a meeting today in Seoul between the Treasury Secretary and He Fang to set up this summit, something that really would have been done weeks and months ago. They had a meeting just on the eve of this summit.
Maintain stability. Anne-Marie, that's something that's come up repeatedly throughout this morning. We spoke to a range of guests who have set the bar super low for this meeting. At the same time, when you look at these pictures, the amount of effort that the president is going to, the delegation he's taking with them, do you believe this is the kind of meeting where nothing is delivered?
I do think there's going to be deliverables. And I know you and Lisa spoke to Elizabeth Economy earlier in the week, and I think she really talked about the three main buckets we should view in the context of this trip. The first, of course, is going to be the tariffs, the trade, potentially establishing a board of trade. So there's a little bit more of clarity between corporate America and also companies in China on how they do business in these commercial ties. And then, of course, the second is going to be the massive purchasing agreements. Look who the president is going to be flanked with on this trip. I think a key tell, obviously, is the Boeing CEO, who's prepared to have a massive jet order here. And it comes to soybeans as well. The Cargill CEO will be joining the president. And the third, of course, is going to be the more tricky, the conversations that are going to get tense. And of course, that's the national security geopolitical sphere. There's obviously the cloud of the war in Iran that is overtaking this trip. This trip was supposed to be in March, but it was pushed back because of the United States dealing with this conflict in Iran. Of course, this is going to be tense. China is the biggest supporter of the regime, given the fact that it buys the lion's share of its oil. It recently told some firms to ignore U.S. sanctions, and there's been lots of conversation about dual-use components when it comes to weapons. And then the most tense, potentially, and controversial really going into this trip is going to be how the president talks about the delicate issue of Taiwan. You have an $11 billion arms package that was pushed through in December, and now a $14 billion arms package that's on the docket. Jonathan, how he speaks about this is going to be incredibly important.
Anne-Marie, stay close. Live pictures, if you're just joining us, of Air Force One coming into view at Beijing Capital Airport. The president touching down ahead of a bilateral meeting with the Chinese leader, Xi Jinping, alongside a stunning list of corporate executives coming from Team America, as we've often called it, Team Corporate America, including Jensen Huang of NVIDIA and Elon Musk of Tesla.
Giving us a sense that it is technology, it is soybeans, it is the financial sector, and a whole host of other areas that there would like to be some sort of discussion in terms of trade and in terms of restrictions both in China and the United States.
We'll stay with those pictures for you. Eddie Fishman of the Council on Foreign Relations had this to say in anticipation of this meeting, that Trump enters this summit with Xi Jinping on the back foot, trapped in a war in the Middle East. Xi, meanwhile, stands to benefit. Eddie joins us now for more. Eddie, good morning.
Good to see you, John.
Let's set the stage. Why do you believe that Xi stands to benefit from this conflict in the Middle East?
Well, look, if you go back to Trump's first term, Trump was the one who pivoted U.S. relations toward China. We had, for decades, been trying to accommodate China, bring China into the international system. During his first term, he tried to pressure China into making real structural changes in the economy. Well, you just heard Anne-Marie right now. All we're trying to do now is get them to buy soybeans, beef. This doesn't sound like fundamentally changing how China treats intellectual property. And then to the Iran war, I mean, the U.S. is completely bogged down in a war in the Middle East. I mean, I know Trump wants to change the channel, which is a big reason I think he went forward with this summit. But look, China has a huge stockpile of oil, 1.5 billion barrels, and they're the world's leader in clean energy technology. So they're actually coming out of this war looking pretty good.
You've talked about deploying leverage without losing leverage altogether. I found that line really interesting. Can you describe what you meant by that?
Yeah, so look, I mean, there's a clear phenomenon we see when you weaponize these choke points in the global economy, be it a geographic choke point like the Strait of Hormuz or the dollar. When you use them against adversaries, other countries take steps to insulate themselves, right? As the U.S. has been weaponizing the dollar, other countries have been trying to build workarounds. Well, China weaponized one of its most important choke points last year, these rare earth elements, and the U.S. has been pouring tens of billions of dollars now into that sector to try to break China's choke point. I think a key imperative for the United States is to figure out how to use our leverage proactively without destroying American economic power in the process.
What does that look like?
I think we need to set guardrails in terms of how we use economic power. I mean, against China, frankly, I'm not so worried about guardrails because I think Trump has actually been a bit gun-shy, right? The main tool he's used against China in his second term has been tariffs. He peeled back the tariffs in response to China's rare earth restrictions. And to the point about Jensen Huang, we've even now been pulling back our restrictions on semiconductor sales to China. So I think that with China, if we're really going to try to reestablish some level of deterrence in the relationship, we actually have to start thinking about, are there other ways for us to use financial sanctions, for instance?
What's interesting about the coterie of different executives who are joining President Trump on this trip is that we used to talk about the diplomatic approach from U.S. government versus corporate diplomacy. It seems like those two are coming together. What's the significance of that?
Well, look, I mean, in some ways, it's not a terrible thing because we are living in an age of economic warfare. And if you're going to figure out ways of how to use trade as both a carrot and a stick, and finance as well, it's important to have business in the room. At the same time, I don't think Jensen Huang has played a particularly productive role in U.S.-China relations over the last year. I was in Washington on Monday, and I'll say, talking to folks in the national security community, even people in the White House, there was actually a big sense of relief that Jensen was not on the manifest on the trip. And I know there's a collective panic last night when everyone saw that he showed up in Alaska. And I think that's because there's really no good national security reason for us to sell advanced semiconductors to China. That is giving China ammunition for them to catch up to us and maybe surpass us in artificial intelligence. The only reason we're doing that is because Jensen Huang wants to do it for NVIDIA's sake.
Doing that behind closed doors, making that argument behind closed doors is one thing. You expect people to lobby on behalf of their company. I've got all that. From a PR perspective, and we talked about this yesterday, this is a really awkward picture, I think, for the company, for NVIDIA. Now, it's his company, he's the boss. But I do think it gets increasingly awkward as he makes a push for something, to Eddie's point, that is difficult to justify from a national security perspective?
Well, his point is that this is actually a choke point that if the U.S. goes too hard on, to use Eddie's language, then they will just shift to other chips. They will develop their own, or they will become the gold standard around the world. And so that for the U.S. to remain supreme, to keep its supremacy, it needs to have its chips being deployed in the Chinese technology ecosystem. That argument clearly is rejected by diplomats, but there is a sense, at least in the tech world, that that is the case.
Eddie, certain executives seem to have the president's ear at certain times. In the president's first term, we often talked about the diplomat Tim Cook of Apple, who also will be attending this particular summit. What's special about NVIDIA and Jensen Huang? Why is he in a position to have this special relationship with the president in a way that maybe Tim Cook did in years gone by?
I mean, look, I think President Trump clearly respects very successful businessmen, and NVIDIA is the world's most valuable company, right? I mean, it's hard not to respect what Jensen Huang has been able to accomplish. I just think the issue comes down to the fact that the argument that Lisa, you just made, which, I mean, has some intellectual merit, we should take it seriously. If you look at the data, though, NVIDIA is producing or designing 85% of the advanced AI chips in the world. Huawei is about 1%, right? So China's nowhere near to being able to actually have an indigenous alternative to the most advanced AI chips. So the only way for them to catch up to the United States in compute is to buy those chips from NVIDIA. One other interesting data point that caught my eye the other day, China's spy chief, the head of sort of their combination of the CIA and FBI, added a third pillar to his priorities between, it was previously just espionage and counterintelligence. He said, we now have a third priority, and that's our anti-blockade struggle. What that means is, how do we get the technologies we need? How do we circumvent the U.S. choke points despite U.S. sanctions and export controls?
There also has been some discussion about Taiwan and this idea that that could be part of the leverage in all of this. How much is that discussion on the back burner, in part because Taiwan is a semiconductor producer of the world? It produces 90% of the chips that we use in absolutely everything. At the same time that people are speculating that China wants at least less U.S. involvement and protection in turn for some other kind of exceptions.
Well, look, I mean, to your point earlier that, you know, markets may rally on news that Jensen is on the trip, I worry that if Trump actually does start talking about arms sales, you might have the actual opposite reaction, because any sort of sense that Trump is going easy on Taiwan, that there's not going to be deterrence, that's going to be a sort of a blinking green light for Xi that maybe now is the time to act against Taiwan. So I worry about this coming up. I'm not sort of in worst case scenario mode yet, just because we don't know exactly what's going to play out. But it's clear that one of Xi Jinping's major goals this year is to change U.S. policy on Taiwan, which sounds subtle, from we do not support Taiwan independence to we actively oppose Taiwanese independence. But that would be a major shift that, you know, in policy that's prevailed for half a century.
We've heard some conflicting rhetoric from the president on this issue. Do you expect any kind of carrots that the U.S. extends with Taiwan in the focus?
You know, look, if I have to play sort of crystal ball, and look, we have a day to find out, so you can tell me if I'm wrong when we talk next time. I don't think there's going to be major fireworks coming out of the summit. I really think Trump's goal is to change the channel from Iran to this big victory of getting the Chinese to buy our soybeans, buy our beef, buy our Boeings, the 3 Bs, or 4 if you want to add Board of Trade, which whatever that means. But I don't think you're going to see major concessions on NVIDIA or on Taiwan, but you know, I could be wrong.
The market changed the channel a long time ago. So on that front, he's benefited from that. But the Strait of Hormuz is still blocked. There's still a blockade. And it doesn't matter how many officials you go to Beijing with, a delegation like we've never seen before for a meeting with the Chinese leader, that is still the case. And yes, you've got these massive stockpiles in China, but all these stockpiles are being used, and being used pretty quickly and aggressively all around the world. At some point, you've got to address the issue at hand. How difficult is it going to be to address that issue?
Well, John, I think you actually hit the nail on the head of something I've been thinking about. There's this irony right now in that the oil price spike has not been nearly as bad as we thought it would be, largely because of these buffers, right? China has huge stocks. The U.S. has been releasing record amounts from the Strategic Petroleum Reserve, and we also have U.S. private oil companies increasing exports from inventories. We have record U.S. exports. But what that means is, because the oil price has not gone to $150 or $200 a barrel, Trump has less of an incentive to actually take a deal. And so we may get to the point where, because things don't look so bad in the here and now, we get to the point where we actually do hit the bottoms of these inventories, and you have a massive sort of quick oil price spike.
We've delayed the demand destruction, and we've framed it. If you believe it comes down to this. Either you hit tank bottoms in the US or you hit tank tops first in Iran. And that is a very high-stakes blinking contest that I would say this administration is increasingly comfortable playing, at least for now, because this is the one constant over the last 2 weeks. For all of the conversations about opening, reopening the Strait of Hormuz, clearing ships, getting vessels through, the one constant is they've maintained the blockade. And every time you speak to officials about it, they seem comfortable with it.
Typically, nature is healing. When you have high prices, it's the best cure for high prices, right? And you have demand destruction. If you start subsidizing those high prices, if you start removing the taxes, if you start adding to reasons for people to keep consuming at the same levels, take a road trip, then all of a sudden you are kind of going against yourself, at least in the long term.
Eddie, it's good to see you. Thanks for being here. We appreciate it. Eddie Fishman there, the Council on Foreign Relations and the author of Choke Points. What a timely publication in the last year or so. American power in the age of economic warfare. We'll have more to come from Beijing. Anne-Marie's there right now in the Chinese capital. As the president touches down, he'll be greeted by the vice president of China, the ambassador to Beijing, the US ambassador to China as well. AMH, want to bring you back into the conversation just for some brief comments in anticipation of all of this. We spoke to Eddie Fishman just moments ago, and he made several points, but a point stood out for me, and it was on the NVIDIA boss, Jensen Huang. How difficult is it to make the case from a national security perspective that he should be able to sell some of his best goods into this country?
Well, it's incredibly difficult, and we've seen actually the administration waver in terms of how they feel about what level of chips he should be able to sell into China. Remember, this administration made a 180 on the H200s. Those were banned, and then in January they said NVIDIA can go and sell them. They want a 25% kickback, but in terms of what the Commerce Secretary recently told the Senate is that not a single H200 since then has been sold into China because the Chinese government hasn't given the okay to a number of firms, let alone the questions and the consternation if this administration were to allow the Blackwell or maybe the later Vera Rubin to be allowed into China. That is why the second Jensen Huang decided to join this trip, or the president invited him, and he met them at the refueling stop in Alaska. I went back to what one official said to reporters ahead of this trip, which is that they wanted to have companies join, that they want to be selling their stuff to China. So you think Cargill makes sense, Boeing makes sense, does NVIDIA make sense? And that is why a lot of people are questioning whether or not chips are once again back at the table when it comes to this relationship.
Futures positive this morning, up 0.2%. Nasdaq futures bouncing, NVIDIA positive in the pre-market. It's an observation. We've talked about it repeatedly. You saw the headlines cross yesterday evening, and the moments they did, confirming that the NVIDIA boss would be on that plane, stocks started to pick up.
What I love is how Eddie Fishman explained the opposite reaction among advisors, national security advisors, that they were so relieved that Jensen Huang was not on the roster of executives heading to Beijing. And then when he was included at the last minute, it was panic. And his fear is that if there are concessions on Taiwan, suddenly the reverse trade will take hold as people start to think, are the semiconductors potentially at risk?
We've got Eric Johnston of Cantor Fitzgerald with us around the table this morning here in New York. Eric, good morning. Good to see you.
Morning. Good to see you.
Waiting for the president to step off the plane and start this summit with the Chinese leader Xi Jinping. Intriguing that chip stocks started to pick up the moment Jensen boarded Air Force One. What did you make of that, your reaction to it?
You know, I mean, yesterday, obviously, people thought that, that he was not going to join. I think I would just say there are a number of CEOs that are there. Of course, he was added at the last minute. So, was something struck with, Treasury Secretary Bessent that led to him being added. But there are a number of CEOs. So I think I wouldn't necessarily jump the gun to think that there's some big announcement that is coming. And in terms of the impact on semis obviously are incredibly volatile. They're the story of the market. And, they had a sell-off yesterday. So I think part of it's just a bounce, and this is an excuse.
Do you remember DeepSeek? What happened to DeepSeek? Do you remember that? All the worries about DeepSeek and what it would do to U.S. chip stocks?
Yeah, well, that became an issue, and suddenly people realized, well, they got some of U.S. chip stocks. So it wasn't necessarily an issue of them creating their own.
Some blurry images coming from the Beijing Capital Airport, the president just stepping off the plane, stepping off Air Force One to officially start this particular summit, greeted by, I believe, several hundred Chinese youths in a a Chinese military band as well. So we'll do the pomp and circumstance over in Beijing, and then the real meeting starts. We've talked about this a number of times over a number of years across the president's first term and through the second term as well. Typically what happens at a summit like this is diplomats work aggressively for weeks and months on pre-agreed deliverables for their principals to step in front of the camera, shake hand and celebrate. This feels different with this president. Hence, the last-minute arrival of Jensen Huang in Alaska. They're the kind of things that don't just happen. Usually, months in advance, you would get together the delegation of corporate executives that you want to go over to China with. They'd be thoroughly vetted. All the kind of ideas that you'd want to present on the day would be talked about aggressively. This is so different under this president, which is why anything can happen in the next 24 hours.
Which leaves a lot of analysts just completely unclear of whether there could be any deliverables. The one clear thing that has come to the fore is this idea of a board of trade or some sort of governing body over trade disputes and trade discussions between the U.S. and China. It seems like the mechanics are what people are hopeful for, not necessarily some wholesale deal. Although, what are the 5 Bs? Like beans? Beef, thank you.
Where did the 5 Bs come from?
Well, that's what we just heard from. There's a board of trade, there's beef, there are beans, there's building materials.
Beans, chips and Boeing, right?
Yeah, but there's, Boeing. Anyway,
okay,
let's move
whatever.
on.
Who knows where we're going with this? Eric, he's got some things to be comfortable with. Iran's not one of them. Energy is not another. But the economy's doing okay. And the equity market that the president puts a lot of weight on, the equity market's close to all-time highs. When I go through your note, and the note that you published this week, let's hope the president doesn't read it. The risk is higher than it appears. There's a major risk for markets. Some of the words that you used in your note this week. What are we missing right now?
So I think right now, if you look at S&P 500 earnings, everyone is talking about how earnings growth this year is going to be 27%. By the time we get out of this, might be 28%, 29%. Earnings estimates are surging, and everyone is talking about it. What we're saying is, let's go a little bit deeper and really understand what's going on behind the numbers. So CapEx is obviously surging. It's up about $1 trillion. It's double where it was just a few years ago. And what's happening? Semiconductors are selling their goods for $100 to the hyperscalers. The hyperscalers are taking that as an expense of $10, $15, and they're producing the net income. And so as a result, net income is surging. However, cash flow is a very different story. So cash flow relative to net income is only now 65%. It's $1 trillion less than the GAAP reported net income. And so the cash flow growth over the past 2 years is growing at about 8%. Very normal. It's the GAAP earnings that are growing at the 27% level. So to put it in perspective,
sure.
Net income relative to GDP, okay? The peaks in 1998, 2007, 2013, 2019, the peak was 6% of GDP. Net income was 6% of GDP. Right now, it's 9% of GDP. It's 50% higher than the peaks. So our point is, number one, is that sustainable considering the cash flow numbers?
Do you think it is?
And over the long term, no. So over the course of the next 12 months, yes, I think this earnings algorithm continues where the hyperscalers are spending, over $1 trillion next year, and this algorithm is going to continue. The question is, at what point will the market discount this and say, hold on, this is going to have some sort of cliff in the years down the road? And so as we're doing our DCF analysis, can we just say in perpetuity that this earnings growth, this net income growth is going to continue?
Do you have a catalyst in mind for that pivot, what that moment might look like?
That's very difficult to say, to be very honest. I mean, I think when the market is going to discount, when the market sees a flattening on the horizon of CapEx, some period before that, 6 months, 9 months, 12 months ahead of time, that's when I think the market will react. And so if you look at the net cash, for example, for the hyperscalers, 3 years ago, it was positive $200 billion. It's now negative $100 billion, right? And so debt issuance has absolutely surged.
Yep.
So how long is the market going to be tolerable of this kind of CapEx spending. And when the market sees it in, out 6 months to a year, that it could start to flatline, I think that's when the market will care.
Question is which market? You keep saying the market. When we speak to people in the credit market, Lisa often asks the question, how much capacity do these guys have? The response we get from people with fixed income, tons. They can go to Japan, Canada, they can go to Europe, the UK, issue this debt. Demand is absolutely phenomenal. It's interesting that where we're seeing the pushback right now seems to be through the equity channel. The fact that Meta, Oracle and Microsoft, those stocks are down on the year, and they're funding the massive success we're seeing in chip stocks that are up 70% on the year. Is that becoming a point of stress that these executives have to respond to?
So not yet. I think you're seeing it in the underperformance clearly versus the sellers versus the buyers. The sellers crushing it. However, I think that I wouldn't say we're close to a stress level. But if we look out a year and a half, this debt issuance continues, the net cash continues to fall. I think investors will demand, down the road that they pull back to some extent.
It's nice to look at the potential breakpoint that could be a negative, but don't you kind of have to stay in this for now? I mean, how do you deal with the short-term trading range versus the long-term inevitable risk that's building?
Yeah, I think you have to stay in it. And our point is, number one, whenever you're having any sort of investment thesis, let's get the facts on the road, on the board. And it's not just some 28% earnings growth that's going to happen in perpetuity. This is a surge based on this CapEx surge, and it could have there could be a cliff down the road for that E. But to your point, is now the time? I don't think it is. We think stocks are going to continue to go higher, and this sort of earnings algorithm is going to continue. But fast forward 3 to 6 months, the market might start to discount it.
Lisa, just got this message from a Bloomberg subscriber that CapEx was bumped up due to the memory price move and not because of the new data center announcements. It's already flatlining at certain places when you look at CapEx. Meta may be a decent example of that in the last earnings report.
Well, yeah, that they actually increased their CapEx plan simply because of higher memory costs. If you're paying more for less or paying more for the same amount, is that going to be a problem? I keep going back to the point that we were discussing earlier, the idea that Jonathan Golub pointed out, which is that the hyperscalers are not booking the costs that they're paying for these chips, but the chips are booking the profits to those purchases. So something's got to give, at least in the accounting going forward.
Eric, great piece, by the way. Really enjoyed the read. Thank you, sir. Eric Johnson there of Cantor Fitzgerald. If you're just joining us, we've been tracking live pictures coming from China, Beijing, at the Beijing Capital Airport, the president touching down on Air Force One, alongside Elon Musk and Jensen Huang a little bit earlier on, about 10, 15 minutes ago. The president now making his way to the Four Seasons Hotel in Beijing, China, for a conversation in the next 24 hours with the Chinese leader, Xi Jinping.
Yeah, real question of what's going to get delivered. Is it going to be about trade? Is it going to be the Board of Trade? Is it going to be chips? Is it going to be Boeing's beef or beans? I think I've got three of them.
Nice.
I'm crushing it.
3 Bs. Awesome.
No, but there was a fourth. I just don't remember what it was.
Okay. All right. We'll find out.
Please write in.
We'll find out for tomorrow. We'll do better tomorrow. All right. Let's get you an update on news elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Anthropic is in early talks to raise at least $30 billion in fresh funding, potentially valuing the company at more than $900 billion. Sources telling us here at Bloomberg the round is expected to close as soon as the end of this month, though terms are not finalized. JP Morgan is shaking up its investment banking leadership. The bank is expected to announce new heads for its financial institutions group and for its global investment banking unit. JP Morgan's M&A activity will be brought under industry coverage groups, according to people familiar with all of these matters. The U.S. Senate confirming Kevin Warsh to the Federal Reserve Board of Governors with a 51-45 vote, granting him now a 14-year term. Lawmakers also clearing a procedural hurdle for a vote on his nomination as Fed chair, which could come as early as today. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. You got it? You found the fourth?
Yeah. Beans, beef, Boeing's, Board of Trade, and Blackwell's. That's
nice.
5. Just want to say.
Very cool.
I was going to get it.
Great. Up next on the programme, the Morning Calls Plus, Stacey Widlitz of SW Retail Advisors as inflationary pressures build on the consumer. What it means for retail. Next.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Equity futures positive by 0.1%, just about holding on to gains going into the opening bout, 1 hour and 10 minutes away. On the Nasdaq 100, higher by 0.5. That's the price action. Let's get you some morning calls. First up, Bank of America raising its price target on Nvidia, expecting 2026 to be the year of accelerating AI sales. Your second call from Piper Sandler cutting its price target on General Mills, forecasting it to hit the lower end of its full-year guidance. And your third and final call from Baird, cutting its price target on Under Armour, saying tariff refunds will carry its 2027 earnings. The stock looking to bounce back by about 1% in the pre-market. Fresh reads on the consumer just ahead with PPI inflation data following retail sales tomorrow. A growing number of retailers warning of negative impacts from the war with Iran. Stacey Widlitz of SW Retail Advisors writing, there is simply nowhere to hide for the average consumer. Stacey joins us now for more. Stacey, good morning. Is there anywhere to hide for the investor in the average retail stock?
Well, there is, and that is the good news. And certainly we've seen inflation well over 3%, headed to 4% here. And we just got through a period where not only did most brands and retailers decide they want to be full price, so they're doing less discounting in general, but they had to raise prices due to all the tariff chaos. And now we're headed into a period of inflation where every brand, all of their inputs are going up, whether that's gas, whether that's packaging, whether it's fertilizer into food. So they're passing that on to the consumer. But the good news is, from an investing standpoint, you have Walmart, who nobody can compete with. I mean, they have the power to push back on their vendors and get the best pricing. You look at other players like TJX, which is the value hunt that is going to get all the merchandise that is not selling from other retailers and sell it at better prices. So there are definitely places from an investment perspective to hide out there. The consumer, not so lucky to be able to hide from price increases.
Stacey, a number of retailers came out and beat expectations and talked about how they were able to pass along price increases and demand was still fairly robust. What do you make of those kind of reports? How do you square that with caution raised by others?
And that's a great question. And not everybody is treated equally, right? So you look at a company like a Tapestry, Coach, that has been gaining a massive amount of market share from the competitors. They have also repositioned their brand and done an incredible job from moving from a discount brand to a full price brand. So you certainly have instances where that consumer is still interested in the product. And if you get the product right, the consumer is still shopping. But I think even if you look at particularly gas prices, think about the Gen Z customer, who is a Coach customer, and they are really suffering. They were spending 5% of their wallet on gas. Now they're spending close to 10% of their wallet on gas. So that's a real pressure that we have to watch out for.
That's the K we've been talking about. Stacey, it's good to see you. Stacey Widlitz there of SW Retail Advisors. There's a squeeze right now, and the disparity is captured in the corporate earnings. We've gone over this in the last week. It's just not captured really at the average, which is why the overall index, which is supported by these massive contributors in big tech and semis, is doing okay, which is why I know people get frustrated with financial markets. The index is not what you want it to be. People want the index to be something else. You're in the wrong business. That's not what the index is.
Except that the Fed also wants the averages to be something else, because the Fed is being tasked with a more sort of populist message, help out some of the lower income families, the ones that are getting hurt the most from interest rates where they are. Although if they were to lower interest rates, that would create that much more of a boom in some of the financial stocks and as well as, of course, the tech stocks that have been fueling the K and the ongoing strength that you're seeing in certain pockets. So it's a difficult moment because the averages are not giving real sense to exactly how much the Fed is truly conflicted.
The average is a problem for the market, and the disparity is a problem for politicians. They're going to be squeezed by that at the midterms.
Enter Kevin Warsh. Is he more politician or is he more markets?
Best of luck. It's going to be a difficult job, that's for sure, at least in the first few months. Up next on the programme, breaking inflation data, PPI just around the corner. Lindsay Piegza of Stifel joins us next.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
We have been about 60 minutes away. Another read on inflation, seconds away. PPI just around the corner. Equity futures positive by 1/10 or 0.2%. On the Nasdaq, bouncing back by 0.6, thanks to a flight from Alaska to Beijing on Air Force One. We'll see if these gains hold. Elsewhere in the bond market, yields look like this: 2s, 10s, 30s, 2s close to 4%, 10s near the highs of the year, 30s closing above 5% in yesterday's session. Let's get you some economic data. PPI coming in hot. Mike McKee has more. Hey, Mike.
Coming in hot indeed, John. 1.4% for the headline PPI on a month-over-month basis. On a year-over-year basis, that pushes the index to 6%. The core rate comes in up 1%, that is ex-food and energy, which pushes the core rate on a year-over-year basis to 5.2%. And if you exclude trade, basically the margins for retailers and wholesalers, you've got a 0.6 rise and a 4.4% annual rate. Now, in terms of the overall PPI, the index for goods is up by 1.2%. That is for services, rather. Prices for goods moved up 2%. There was a feeling that we might see a little bit of a little softer goods reading because of the tariffs sort of peaking, but it doesn't look like that has happened. We've got a strong read there, and we've got a strong read on services. And to quote Star Wars, these are not the droids that Kevin Warsh is going to be looking for.
That is for sure. And we've got a 4 handle on a 2-year. When these numbers popped up on the Bloomberg terminal, I had to take 1, 2, 3 looks just to make sure that these numbers were right. That is a hot PPI report. Push it through the bond market. 2s, 10s and 30s look like this now. 2s with a 4 handle of 4%, 10s approaching 450, 30s north of 5% and adding some weight to the recent move, up another basis point, 5.04. You take that move, plug it into the equity market, equity futures dipping into negative territory. We're down on the S&P 500, just about holding on to gains on the Nasdaq. The Russell down by 0.25%. That is a hot PPI. Yeah,
just to give some context here, if you take a look at the PPI stripping out food and energy, it was the biggest move, the biggest rise going back to April of 2021, the highest going back to December of 2022. You'd see across the board just incredible size and scope in terms of the increase that far exceeded people's expectations. You're looking right now at PPI final demand, also at the highest since December of 2022. Over to you, retail sales. How much are some of these companies able to pass along the increased in base costs that they're experiencing to consumers that are coming not only from food and energy, but elsewhere as well?
A 1-2 punch for the incoming Fed chair to handle, that's for sure. Yesterday, CPI rising at the fastest pace since 2023. This morning, PPI coming in much higher than expected. Mike, on the second look, you're combing through the details, I'm sure. What jumps out to you right now?
Well, air transportation is one of the things that goes into the PCE, so everybody watches that. And air transportation for passenger services was up 1% during the month, and for freight was up by yeah, I'm doing the same thing you did, John, with a double take here, 3.6%. The Bureau of Labor Statistics also says one of the big increases, and of course, obviously energy driving everything on the good side, was for freight transportation as diesel prices have gone way up, but also margins for retailers and wholesalers, particularly for equipment, were higher. So this shows some underlying price pressure across the board. There are some people who were thinking that the PCE might come in a little lower because some of the categories from CPI that go into that were a little softer, but this may not be the case given what we're seeing here with the PPI.
Working through this in real time, this is a shocker. That's for sure. Mike, stand by and stay close. We'll come back to you in just a moment. I want to bring in Lindsay Piegza. Lindsay joins us now for a conversation about the inflation print from yesterday and this morning from Stifel. Lindsay, welcome to the program. The Chicago Fed President, Austin Goolsbee, had this to say this week: we've got an inflation problem in this country. We've got to get it back down. Lindsay, how serious are things?
I think it's very concerning. When we look at yesterday's numbers coming in hotter than expected, it's very clear that consumers are already facing massive price pressures. But what's more concerning is this morning's report suggests that the brunt of the pain has not yet been felt, that further inflationary pressures are coming down the pipeline and are yet to be passed on to the consumer as we look out to the May and June data. So I would agree, we do have an inflationary problem, but remember, this is a Fed that has been tolerant of above target price pressures for years. So any indication that this is going to be a painful but temporary impact on prices may keep the Fed simply sidelined. Now, I do think the conversation for additional rate, excuse me, not additional, but new rate hikes may be opening. But I think first and foremost, the Fed is going to remove some of that easing bias language from the statement and reaffirm their position on the sideline at the current Fed funds target rate.
Lindsay, if we don't see a further oil price spike higher, do you think that we're peaking out here at these levels?
Well, given the lag between oil prices and gas prices, I do think, again, as I mentioned, for the broader inflationary impact, there's still price pressures coming down the pipeline. So I suspect that the peak in prices is still yet to come, perhaps in the May or June data. So consumers are still going to face several months of intense pain, not just at the pump, but as we see these prices filter out into other segments of the economy via transportation and food. Remember, 80% of the fruit and dairy and vegetables that we consume has to be shipped to groceries and restaurants, now at a higher cost. And as we see in the PPI, this is also filtering into the broader manufacturing chain, as crude is a vital input into many of the things that we consume on a daily basis, everything from tires to crayons. So we've already felt, again, this massive increase in prices, but there's more pain yet to come.
How much, Lindsay, do you see the consumer accepting this? There's a tension right now between companies reporting much better earnings and profits than many people expected, and the ability for consumers to keep shouldering that by the way of passing along some of these higher costs to them. What's your sense of that?
Well, I think we need to compare it to what we saw last year with the onset of the tariffs. Businesses were very cognizant of the fact that consumers were strapped with years of price increases, and they were hesitant to pass on additional cost increases. And so when we look at the pass-through rate of tariffs, early on it was sub 20%. And even as we moved to the end of the year, it rose to only about 40-50%. So businesses were really turning to ramping up inventories and willing to reduce margins in order to protect their consumer. Certainly not out of benevolence, but out of risk of losing market share. But now stockpiles have been drawn down, margins have been compressed, and so there is going to be a lot more pressure on businesses this year to pass on any additional cost increases, be that via tariffs or the international crisis. So the consumer is going to have to foot a lot more of this price increase than they did in 2025.
Let's turn to the bond market. I just want to sit on the front end of the yield curve. If we can bring up 2s, 10s and 30s, look at 2s. There's a 4 handle. You'll hear a lot of people say the following throughout today, that this is the highest yield we've seen at the front end of the curve since the summer of last year, June of last year. June of last year was so different because Fed funds was 75 basis points higher. So the upper end of Fed funds was at 450 when the 2-year last closed at 4%. Why does that matter? Because at the time, the Treasury Secretary was saying the position of the 2-year was evidence that monetary policy was too tight and rates had to come down. And they did. They cut by 75 basis points. So a 2-year now at 4 is not the same as a 2-year at 4 from last summer. It's different because the 2-year yield now trades above the policy rate of the Federal Reserve. Bramo, this isn't a market saying you need to cut. This is a market saying you might have to hike. That's a very different story compared to where we were when we last had 4% at the front end of the curve.
Right now, there's almost a full rate hike being priced in by April of 2027, just to give you a sense of how much we have shifted gears, pricing in about 20 basis points of an increase to Fed funds rates. Going forward, I just wonder how much we're going to end up with a Kevin Warsh-led Fed willing to raise rates. And if they don't, do you start to see more sustained inflation expectations rising, as you have seen over the past couple of weeks?
Lindsay, how comfortable would you be with an argument to reduce interest rates at a policy meeting next month with a new Fed chair?
To reduce interest rates, I think that's going to be very difficult, a difficult argument to make. And we saw that at the latest meeting with a rising number of dissents pushing against not just the decision to hold rates steady, but as I mentioned, maintaining that easing bias. So I think at the very least, this cohort of dissents really sends a signal to the market and maybe more importantly to that incoming leadership that there's a growing faction of the Fed that sees the data, be that stable job creation, positive GDP, and rapidly rising inflation do not support any additional accommodation. And again, I think many would support the notion of increasing the conversation for a near-term change in policy, reversal in course with rate hikes.
Redefining dovishness of the Federal Reserve. It's a conversation we've had on this program over a number of weeks now that the argument used to be to reduce interest rates, the most dovish thing you could do for the year ahead. Based on the data we've got right now in front of us, would just be to hold. If you can make an argument to hold interest rates, maybe the doves have done their job.
Ultimately, there is not a very good argument to cut rates here. Even Treasury Secretary Scott Bessent acknowledged that it might be prudent to keep rates on hold. Question is, how many Wall Street banks expect there to be cuts later this year because of disinflationary effects? How many people on the Federal Reserve still expect the next move to be a cut? How high is that bar to actually shift that to truly think about rate hikes? Because right now, it seems like people are flirting with it. Whether they're actually baking it into their base cases, we're just not seeing that yet.
Lindsay, can we talk about the prospect of hikes? Just finish on this. I've sat in this chair before. You have as well. We've heard these arguments about transitory and why inflation's about to peak in the next couple of months. It'll come down. Don't worry about it. Do you think it is different this time?
Well, I do think that the Fed made a mistake the first time around using transitory. Had they done their job and raised rates to a sufficiently restrictive level, we wouldn't have had this elevated baseline to start addressing this energy price shock. So it's going to be increasingly more dangerous this time around to reintroduce that notion of transitory and allow further price pressures to become ingrained in the economy. Now, again, to Lisa's point, I think the first step is removing that easing bias from the statement, sending the signal to the market that rate cuts are off the table. And should we see sustained elevated price pressures, the next move would be a rate hike.
Lindsay Piesa, thank you. Lindsay of Stifel. Mike McKee still standing by. Mike, we looked at it once, we looked at it twice. I think we both had the same reaction. You've looked at it a third and fourth time. The fastest paced since 2022. It doesn't make for good reading, does it?
It doesn't make for good reading. Now, obviously, energy is a big part of this 7.8% increase in energy overall and a 15% increase in gasoline prices, which I don't think we need to explain to anybody out there. But we're also seeing collateral damage there in that we're seeing higher prices for trade and transportation and warehousing services. We're seeing higher prices for vegetables that are trucked. Food prices overall going up. So this is a broad-based increase in a lot of categories, except for one. Jamie Dimon is not going to be happy. Portfolio management services went down 2.4%. That's the first decline in a while. But other than that, this is not something that is going to play well with the American public, and nobody at the Fed is going to be able to talk about cutting rates at this point, except I would make this one last point, and that is that we're going to get another round of CPI and PPI before the next Fed meeting on June 17th. And so if we start to see a decline, that's not going to cause them to talk about cutting rates, but it may take some of the pressure off and lead the markets to start thinking that by the end of the year, they could cut rates. In July, though, more tariffs coming.
Mike McKee, thank you, sir. Appreciate it. Breaking down the PPI number. At the Fed's next meeting, they need to put out some forecasts. It's going to be tricky. In the bond market right now, we've just had a big upside surprise on PPI. I have to say quite a limited move in fixed income because we were already so close to breaching 4% on 2s anyway. Only up 2 basis points on 10s this morning, Lisa. Only up 1 or 2 on 30s.
Yeah, and there is a technical aspect to this. Stephanie Roth of Wolf Research actually just is noting that the inputs to PCE actually bring down that metric just a touch. So there is a technical aspect that maybe people are looking at. Nonetheless, how do you look at an inflation rate north of 6% for producer prices and say anything other than the best we can do is hold rates where they are? To me, the point also, when you pair this with the incredible earnings from the corporate sector, when you pair those two ideas together, they are able to pass along the price increases, maybe not to everyone, but on the averages. And from that perspective, this leaves us with a sense that this is just a bit stickier and leading to the bond market feeling just a touch more uncomfortable.
Equity futures just turning negative on the S&P 500 with an update on stories worldwide with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thanks. Wholesale inflation then accelerating in April to the fastest pace since 2022. Producer prices coming in hotter than expected, 6% year over year compared to estimates of 4.8%. A core measure that excludes food and energy also saw the biggest advance in more than 3 years as the war continues to weigh on the economy. President Trump touching down in Beijing just minutes ago, this marking the first state visit to China by a U.S. leader in nearly a decade. President Trump and Chinese leader Xi Jinping are set to meet face-to-face around 10:15 p.m. Eastern today. The U.S. and China held trade talks in South Korea ahead of President Trump's arrival. Negotiators led by Treasury Secretary Scott Bessent and China's Vice Premier reportedly held candid, in-depth and constructive exchanges. No readout from those talks has yet been released. That is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. Up next on the programme, we'll catch up with Terry Weissman of Macquarie on the latest inflation data, and we'll speak to Anne-Marie on the ground in Beijing on the pressure building on the president to bring down prices.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This morning's report suggests that the brunt of the pain has not yet been felt, that further inflationary pressures are coming down the pipeline and are yet to be passed on to the consumer as we look out to the May and June data. Any indication that this is going to be a painful but temporary impact on prices may keep the Fed simply sidelined. The Fed is going to remove some of that easing bias language from the statement and reaffirm their position on the sideline.
The pressure building, PPI coming in hot just moments ago, following a hot read on CPI as well, hotter than expected. Lindsay Pienza there of Stifel. Your equity market falling somewhat. The S&P 500 negative by almost 0.1%. Was positive earlier on this morning. In the bond market, 4 on 2s, 4% yield on a 2-year, up a single basis point, up 2 on 10s, approaching 450. Bit of pressure starting to build here.
Right now, you've got two back-to-back reads that are harder than expected. Some people are saying, well, some of the components are softer than expected, particularly tied to Wall Street fees. Nonetheless, the read-through is very clear. Prices are going up. The question now is how much are companies able to pass along to consumers for a stickier inflation read that puts the Fed squarely in focus and, frankly, in a conundrum.
And the president as well, under pressure to get prices down. He's in Beijing, just touching down moments ago to quite a ceremony on the ground at Beijing Capital Airport. Joining us now to discuss, Anne-Marie over in China. Anne-Marie, welcome back. Let's talk about the data. How much pressure is on this administration to do something about these numbers?
Well, I think a lot more. And I'm certainly, if you're the White House or you're the Treasury Secretary who just had a meeting today with the Chinese ahead of the summit tomorrow between President Trump and Xi Jinping, this PPI data certainly is going to catch your eye, especially when it comes to the fact that this administration in some recent polls has really been underwater when it comes to its handling of the economy. And prices are just inching up and becoming almost unaffordable for some Americans. When it comes to oil prices especially, there is something this administration could ask China to do at the table. One, potentially put some pressure on the Iranian regime to open up at the Strait of Hormuz, but also China has 1.4 billion barrels of crude in its stockpiles. For some context, that's more than the United States and 8 of the other major players when it comes to stockpiling of crude combined. They can maybe ask the Chinese to release some of those barrels into the market to ease some of these pressures. But certainly, Jonathan, the domestic pressure just got a whole lot bigger for this president as he steps down in Beijing.
Anne-Marie, looking forward to your coverage. Thank you. AMH over in Beijing, China. Here's the take from Terry Wiseman of Macquarie writing the following. There seems to be a divergence between a high year-end inflation outlook and a Fed that is expected to keep the policy rate on hold through year-end. Terry joins us now for more. Terry, good morning.
Good morning,
How
John.
do we resolve that tension?
Well, it's going to have to be with a policy move, I suspect. The Federal Reserve, unfortunately, is going to meet in June, and that feels like such a long time from now, given how much inflation data, how bad the inflation data has been in the last 2 days. But ultimately, it's going to have to be with some recognition that certainly an easing bias is the wrong thing to do. I'm shocked that they haven't removed that already in the April meeting. Jay Powell hinted that they would, but even that doesn't feel like enough, right, at this point.
What's enough?
Enough is probably moving towards a rate hike and being explicit and even signaling that through a tightening bias at the next meeting. I think that's appropriate. Look, I think at the heart of the matter here is that all wars are inflationary. You can go back to the U.S. Civil War. You can look at World War II. You can look at World War I. You can probably even look at the Spanish-American War. I haven't, but I'm guessing that it was inflationary. The Vietnam War certainly was. Why are we shocked that we have a war and we have inflation?
If this Fed does not move to a tightening bias, what is the market response likely to be?
Well, I think we're already seeing it. It's the long end of the curve. It's the presumption that if they don't do something soon, they're going to have to do a lot more later, that they have to nip it in the bud. The longer they wait, the longer we're going to see the long end of the curve, the yields in the long end of the curve move up, and the curve effectively steepen. That will not be good for housing, let's say. It will not be good for other sectors in the economy that are sensitive to the long end of the curve. But that's exactly why the Fed needs to start moving. I think by signaling that they will hike rates, you will effectively stabilize the long end of the curve, the yields at the long end of the curve, because you'll be signaling to the market that we're dealing with this issue, that we're not going to delay it and ultimately have to raise rates a lot more in the future.
Arguably, some people would say that typically these price increases are transitory. They don't want to curtail the slowdown that you're seeing in certain sectors of the economy. Do you think that it would become more of a liability if they signaled at least staying on hold for a longer period of time? Do you think that you would see a dramatic weakening in the dollar? Do you think that you would see the bond vigilantes come back?
Yes, I do. I mean, it depends on the tone that they use when they submit that they're going to keep it on hold for a very long time. I don't think, but that in itself is a commitment, right? That's the problem. To say that you're going to keep it on hold indefinitely is a commitment to keep it on hold. And if the market continues to show us that inflation is going to be high, that is not going to seem like enough. I'd rather they err on the side of doing a little bit too much at this point. And I'll tell you why. If you look at the inflation swap curve right now, it is not predicting that inflation is going to come back down to even 3% by the end of the year. In fact, I suspect that after the numbers this morning, it's higher than that. It was also predicting that in April, in the May inflation print, we're going to get something on the order of 4.3% for CPI year over year, very high. So the market is already very doubtful that the Fed can get this under control by effectively pricing in a forward curve for inflation that is not converging back down to anything near the target by the end of this year.
Where does that confidence that we do converge to target, where does that confidence come from? After they've missed it for 5 years, where does that confidence come from?
Well, it's going to have to come from a much more explicit commitment on the part of the Fed to tighten if they need to put a priority on price stability. The problem, John, of course, is that we don't have a Fed chair, incoming Fed chair, who has made that sort of commitment in the past. This is part of the problem. And by the way, this is part of the reason why we might not have seen a neutral bias in the April meeting. It might be that too many members of the FOMC were too deferential to the incoming chair, and as opposed to the opposite. That's very possible, and I suspect that Kevin Warsh is going to have a problem, certainly a bigger problem now if he's going to try to convince the rest of the members of the FOMC to keep rates on hold. I think some of them are going to want to move that bias towards tightening.
We'll see what we get in the next month or so. Terry, appreciate your time. Thank you, sir. Thank you. Terry Wiseman there of Macquarie. CPI hot, PPI hot. The move in bonds so far this morning, contained, up just a single basis point across the curve.
People are looking to certain accounting mechanisms to tame it down. I'm looking at 5-year break-even rates, 2.72%. Is this okay? Is the idea that we're tacitly accepting 3% acceptable to the Federal Reserve?
Closer to 4%? I don't know about that.
That's trigger time.
I don't know about that. Coming up tomorrow, Julian Emanuel of Evercore, Paul Quincy of JP Morgan, Mona Mahajan of Edward Jones, and the Fed Governor, Stephen Myron from New York City this morning. Good morning. This was Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market. You can get that from a bank. You can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
The operators.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Inflation is coming in hot. 30 minutes until the start of trading. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, President Trump lands in Beijing for a high-stakes summit accompanied by NVIDIA CEO Jensen Huang.
Meanwhile, as Matt mentioned, producer prices rise the most since 2022, driven by war-fueled energy costs.
6%.
Yeah, painful.
And a leadership shakeup. JP Morgan taps a trio of top bankers to lead as global deal makers.
The story for this market before PPI had been that Jensen Huang is going to China. And apparently that was enough to make us rally because yeah, sure, why not? And so NVIDIA is still higher in the pre-market. Let me show you what it's doing, Matt. It's up 1.5%. So yes, Jensen is going to be among the tech leaders joining President Trump in China as the two countries work to strengthen ties for the AI era. I guess maybe the thesis is like maybe this allows for chip sales to China at some point.
Yeah, I mean, the president has already allowed for certain chips to be sold to China, and we're not sure if the demand is actually there yet. I was talking to Ludlow about this yesterday. We'll talk more about it today. There is demand for memory and chip stocks rebounding after a midday sell-off as traders buy the dip and see more room to run in the record-breaking rally. Danny was looking at Micron's forward PE today and pointed out to us in the editorial meeting that it's only 8. That's insane because the E is expected to be so high, but you can see Micron up 4.5% in the pre-market, SanDisk 2.25%, and Qualcomm up almost 4%.
Let's get back to inflation, Matt, because producer prices in April blew past estimates. Inflation jumped by the fastest pace since the pandemic. Joining us now from Capitol Hill is Michael McKee, Bloomberg's international economics and policy correspondent. Mike, it was certainly a hotter number than what was expected.
It was a much hotter number. And you remember back in 2022, Joe Biden was president, and Donald Trump was heavily criticizing him for inflation and also criticizing Jay Powell. Now, he's got the same problem, and so does the incoming chair, Kevin Warsh. 6% headline inflation on the back of a 1.4% increase on a month-over-month basis. The core number comes in up 1% and 5.2%. These are really terrible numbers. They suggest some price pressure still out there from tariffs, but it's mostly an energy story, which comes out of the war. Energy up by 7.8%, gasoline 15%. I don't have to tell anybody out there that gasoline prices have gone way up. And so this changes the calculation on the monetary policy side for the Fed. You look at what's been going on with the inflation numbers, and not only is CPI hotter than expected, but we're also seeing this big jump in PPI, and they're way ahead of the 2% level. At the same time, unemployment has stayed the same, so there's no reason that you would even think about cutting rates at this point. Maybe raising rates is a way off, but no reason to cut rates. So that's going to be the dilemma that Kevin Warsh faces. And I'm up here on Capitol Hill where they're expected to confirm him as Fed chair later today.
Why is raising rates a ways off, Mike McKee? We're looking at an economy that's adding jobs now, even over a 3-month average. It feels like it's booming because of the AI spend, and inflation is basically twice the Fed's target, and they want to average that target, not just hit it. So why not raise rates?
Well, there are two basic reasons. One is that this was largely and is largely about energy. And while prices won't collapse when the war ends, this puts more pressure on the president to find some way out of it. And so we could see some slight declines. And then a lot depends on what the tariffs are going to be. And the other reason is that the Fed can't produce more oil. Raising interest rates isn't going to open the Strait of Hormuz. So the Fed is kind of stuck here. They can raise rates, but that might just put pressure on the overall economy and lead us closer to a contraction, which nobody wants to see. So they'll sit tight. What they might do, of course, is take that bias out of the statement in June, and that would send a signal to markets, which would probably raise market rates some and do some of the Fed's work for it.
All right, Mike, thanks very much. Bloomberg's Michael McKee there on Capitol Hill. We'll bring you any headlines that cross on Kevin Warsh as well. Now, President Trump has landed in Beijing ahead of his meeting with Chinese President Xi Jinping. The visit marks the first by a U.S. leader to China in 9 years. NVIDIA CEO Jensen Huang joining the trip as a last-minute addition among several U.S. business leaders. President Trump spoke yesterday.
This is going to be a very exciting trip. A lot of good things are going to happen. I have a great relationship with President Xi, and I think it's going to remain that way. We have a lot of things to discuss. I wouldn't say Iran is one of them, to be honest with you, because we have Iran very much under control.
Joining us now from Beijing is Anne-Marie Hordern, Bloomberg's chief political correspondent and co-host of Bloomberg Surveillance. First of all, we miss you here in 731 Lex, Anne-Marie. And secondly, President Trump said we have Iran very much under control. It doesn't appear that way when you look at the inflation numbers. Will he ask President Xi for help?
Well, potentially, and I think what you hear from U.S. officials leading up to this trip is that the continuation of discussions this administration has had in the past when it comes to Iran vis-a-vis with China, that is just a continuation. When it comes to potential help that the Chinese could offer when it comes to Iran, potentially put some pressure on the regime to reopen the Strait of Hormuz, although there's no evidence that the regime would actually listen to Beijing. On top of that, there is something that I guess the administration could ask, which is ask the Chinese to add more barrels of oil into the market. They've already released some from their own version of the Strategic Petroleum Reserve, but they're sitting on 1.4 billion barrels. And just for some context, that's more than the United States and 8 other of the largest stockpilers combined. So those are potentially some asks when you're reading this data from PPI and the surge in energy prices that this administration might want to bring to the table when it comes to China. But they certainly don't want the conflict in Iran to derail more of the bilateral relationship between Washington and Beijing. It's very telling about what the president wants out of this trip when you look at the list of executives he's bringing alongside with him.
Anne-Marie, can we talk about those executives and the one that is now being added to the list, Jensen Huang of NVIDIA? Does it seem like this was a last-minute change or just one that was accidentally left off the list?
I think it was a last-minute change. You know, the president called him personally and said, I do want you to come. Why don't you meet us at the refueling stop in Alaska? You know, get in Air Force One and let's touch down together alongside Elon Musk. Pretty stunning. You know, I went back to something an official told reporters ahead of this trip, which is that weeks ahead of the trip, they went to a number of agencies and said, what kind of companies should we be inviting with us? And obviously, the names that rise to the top are companies that the administration wants selling items into China, China being purchasers of these items. This is why the Boeing CEO is here. This is why the Cargill CEO is here. When it comes to soybeans, beef, Boeing jets. The fact that Jensen Huang is now on this trip adds some tension potentially to what is on the table when it comes to semiconductors. Remember, this administration who banned the H-200s and then had a reversal of the policy in January, opened up the H-200s to be shipped into China. They would get a little bit of a fee in terms of 25%. But the Commerce Secretary, Howard Lutnick, told the Senate in April that not a single H-200 has been shipped into China because China, the government, the CCP, hasn't told any firms that they can actually buy these. So potentially is that an opening for these firms to start buying the H-200, or is it potentially an opening for this administration to go even further and allow even the more advanced chips that NVIDIA sells, like the Blackwell? So I think a lot of those questions are now rising because the fact that Jensen Huang was a late addition on this trip to Beijing.
Anne-Marie, thank you so much for your reporting literally all day there in Beijing. That's Anne-Marie Hordern in China. Now to AI. Bloomberg has learned that Anthropic is in early talks with investors to raise at least $30 billion in fresh financing at a valuation of more than $900 billion. Bloomberg Tech co-host Caroline Hyde is in San Francisco and joins us now. Caroline, I mean, this company's growth is crazy. I mean, faster than Zoom during the pandemic, faster than Google during the run-up to the dot-com bubble. It feels like it is just leaping ahead so quickly at this point.
and love letters being written from venture capitalists saying, we think that you could be worth more than $900 billion, more than your rival OpenAI, and therefore let us help you raise yet more funds because the need is there. Look, we're also desperate to use co-work or use Claude code more broadly, that they need ever more compute. So we've actually seen the likes of Google, Amazon been saying, look, we'll put money into you and we'll ensure that you'll have the access to compute, the TPUs, the chips that you need. And many had wondered whether some of these offerings, look, they just raised $10 billion, let's say, from Alphabet's Google. Now, more broadly, is that coming, initially it was coming at the $350 billion valuation that they were rated at previous funding round. But is there an option that as they scale their funding into these companies, because there's always option to put more money in, would they do it at a higher valuation? And certainly this is what the company needs in terms of the infrastructure pay and the money that they're spending. But also, look, remember their employees, those that they are working with, want to be galvanized. This is a company that is going to extraordinary lengths. So remember, they've been deemed a supply chain risk by the government. They're still fighting that one. We're still in awe of the power of Mythos that only a few are allowed access to because of its power in cybersecurity issues. So this is a company that, in fact, is having to warn retail investors and those on the market, don't buy our stock on secondary market because we haven't endorsed that and we don't know whether they're going to be good for the money. The desire to back these sorts of companies is extraordinary.
I want to just point out that we're going to get an IPO today. Cerebras Systems is or has offered 30 million shares in an IPO for, I think, $160 a piece. What do we know about this company, and what are we going to see in terms of the trade?
Well, we could see it price above the marketed range, even above $160. And if that happens, it would be potentially one of the biggest ever semiconductor listings ever, eclipsing even ARM's more than $5 billion haul if the green shoe allotment is indeed exercised. And this is a Cerebras is kind of caught in the middle of everything everywhere wants to be in. They're part neocloud, they're part semiconductor chip maker. Now, a question mark is where the margins are going to be seen by the market. At the moment, they've got a huge amount of orders. They've got like $24 billion in backlog, but the actual revenues for 2025 are only just in excess of $500 million. So at the moment, the market's saying, we think this company is going to grow. We think that they're going to continue to make good on these contracts they got with OpenAI. Remember, much was made of Sam Altman's own investment in Cerebras and the deal making with OpenAI in court in the recent days. But they're also going to be able to bring the margin to bear, whether it's the semiconductors, that the chips that already some of OpenAI's large language models have been trained upon, or whether it's the really the vertical integration we're going to see, whether they're bringing the servers, bringing the data centers, bringing the software. But actually, those sorts of multiples on neoclouds, like a CoreWeave, are lower than you usually get on a semiconductor company. But it seems, once again, just insatiable demand to be in a pure play AI company.
All right, Caroline, thanks very much for that. Bloomberg Tech co-host Caroline Hyde out in San Francisco. Let's get a check of what's going on in the markets today. S&P futures now back in the green after a brief dip after the PPI number came in at 6% year over year on the headline after the CPI number also came in hot yesterday. We see NASDAQ futures still solidly in the green as the 10-year yield holds at 447.5. We did see it rise to 449 briefly, and 450 seems to be the level at which investors could get a little bit scared. Brent crude right now down just 0.3%, but still holding at 107.44.
And Max Kettner of HSBC says that yields don't matter as long as earnings are good and positioning is low. So maybe that's what we're seeing. But maybe some not good earnings. Alibaba posting its first operating loss since the pandemic. AI spending has overshadowed its e-commerce growth. ADR is down 2 1/3%.
Wolf speed is higher for a 7th straight session. This after a single stock highlight report from Citrini Research. And we see it up in the pre-market, not just higher, but gaining 23%.
I'd love to see James Van Gielen and the team literally moving stocks from just such a tiny research outlet. Walmart, those shares are down 0.5%, dipping after announcing plans to eliminate or relocate 1,000 tech and product roles. I'm surprised shares would be down based on that. You think less jobs means more cost savings? Anyway, I mean, Walmart barely changed this morning.
Yeah, at $130. Coming up, JP Morgan overhauls its investment banking leadership as deals surge, and it is deals day.
It is.
Danny's 1-hour M&A show kicking off at noon. This is Bloomberg Open Interest.
Peace tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Take a look at high interest, what's making headlines around the world. SoftBank reported a surge in quarterly profit thanks to valuation gains on its OpenAI investment that outweighed lackluster gains elsewhere in the company's portfolio, while the war in the Middle East roiled markets. SoftBank has committed to raising its total investment in OpenAI to nearly $65 billion by the end of the year. Blackstone has walked away from its $4 billion deal with New World Development after the company refused to hand over the reins. Sources tell Bloomberg the decision comes after a year-long negotiation between Blackstone and New World stalled in recent months as New World held parallel discussions with other suitors. And JP Morgan announced leadership changes in its global investment banking business, naming the executives Dorothy Blessing, Kevin Foley, and Jared Kay as 3 different co-heads of the division. A memo seen by Bloomberg saying the company's co-head of industrials investment banking will replace Anu Iyengar as the global head of M&A, with Iyengar set to become a global chair of the division. Danny spoke with her at the Milken conference last week.
So everybody is like, let's go big, right? So let's do 10+ billion deals, which is what we call mega deals.
Sure.
And last year we had 71 of them. This year, just in the first 4 months, we've had 30.
Let's discuss with Bloomberg finance reporter Catherine Doherty. Kato, when I first read this, I was like, their investment bank is doing so well. If it ain't broke, don't fix it. I mean, does there seem to be any clear impetus at this point for switching things up?
I think the signal that the bank is giving by making these moves is breaking down some silos that can occur, especially with a big company that is trying to serve clients in many different ways. Think about financing, you have industry coverage, M&A, all of these things, they're meant to work in tandem. But when a bank gets so big and momentum is taking off, sometimes there's a lot of there's red tape that gets in the way. So by having leaders that specialize in all of these things and naming them as co-heads collectively, that is a signal to their clients, to the rest of the street, that they're looking at this as a holistic approach to investment banking, to serving their clients on not just M&A, but also financing needs and industry coverage at large.
I couldn't sleep last night because I was thinking about Jamie Dimon's succession planning, or lack thereof, compared to what we saw James Gorman do at Morgan Stanley. this seems like it makes it even more fuzzy. Like, he definitely doesn't want anyone to know if he has a successor or, you know, when that's going to happen.
Well, I think what's interesting is for investment banking and for these new leaders, this is going to put them in a position where if there is a horse race later down the line, I do agree with you that this doesn't signal this is happening anytime soon. But anytime you have a reshuffling like this, it gives new people the ability to show off their talents, to bring in new deal flow, to basically grow the business and show Dimon or anyone else, if you're working at a different bank, that you are ready to take on a larger role. So
I mean, shouldn't
think
he have that guy picked out or woman picked out already? He's 70 years old.
I think that he definitely has folks in mind, but it's a test. Every day when you're putting people in, giving them more responsibility, it's to basically ask, can you handle this? And can you bring our company at large to the next level?
You know, there's this rumor within JP Morgan. In their new building, they have a pub called Morgan's. And it's the rumor that when Jamie Dimon steps aside, that it gets renamed Jamie's.
I could imagine that. Apparently, if you order like a latte, they can put his face.
The beer, the Guinness, but that no longer happens for his face. I think that he thought it was a signal of vanity, is what I have heard.
Oh, that's
we're
the
breaking
signal
a lot
of vanity,
of these rumors behind the scenes.
not the giant building he put in New York. Hey, Catherine, thank you so much for joining us. That's Bloomberg's Catherine Doherty. And as Matt mentioned, catch Bloomberg Deals today, every Wednesday, 12 p.m. New York time today. I'm going to have an exclusive interview with the Honeywell CEO, Vimal Kapur, as the company looks to break up into three after activist pressure. Coming up, we talk about AI exuberance with Threadneedle's Ann Berry.
Bitcoin में देखो वही पुराना ट्रेड ही चल रहा है. आप ही ने पूछा था कुछ दिनों पहले 1 आवर टाइम फ्रेम के लेवल. मैंने आपको बताया था सपोर्ट तो काफ़ी दूर है. सॉरी, रेजिस्टेंस काफ़ी दूर है, वहाँ तक तो शायद ही जाएगा. बीच में एक छोटा रेजिस्टेंस था, वहाँ से पहले भी एक बार परसों सेलिंग आई थी पहले. यहाँ तक गया, टारगेट हिट नहीं हुआ था, वापस उसी लेवल से वापस सेलिंग चल रही है. मुझे लग रहा है आ जाएगा टारगेट तक. 78,300 400 इज द टारगेट. ये 1 आवर टाइम फ्रेम का चार्ट है. तो पिछले 6 मई से सेम ही ट्रेड है. 6 मई को सेलिंग आई थी, टारगेट नहीं हिट हुआ था, फिर से उसी रेजिस्टेंस पे गया वापस. 11 मई को वहाँ से वही सेम ही सेलिंग चल रही है. सो लेट्स सी टारगेट इस बार देता है या नहीं देता है 78,400 का. और कोई ट्रेड नहीं है इसमें 1 आवर टाइम फ्रेम पे. 1 आवर टाइम फ्रेम पे टाइम लगता है. चार्ट को देख लो एक बार, फिर जरूरत नहीं पड़ेगी बार बार पूछने की. एक छोटा सा रेजिस्टेंस 82,550 के अराउंड है. नीचे सपोर्ट 78,400 टू 300 के बीच में. एक ऊपर मेजर रेजिस्टेंस 87,000 88,000 के आसपास है. 1 आवर टाइम फ्रेम. सेलिंग इज कंटिन्यू राइट नाउ. गैस में भी न्यूज़ का इम्पैक्ट है, कंटिन्यूसली ऊपर ही जा रहा है. अभी सेल नहीं कर सकते, देखते हैं और कितना ऊपर जाता है. थोड़ा सा और ऊपर जाए तो ही सेल करेंगे नेचुरल गैस को. तो पहुंच गया रेजिस्टेंस पे. देखें एसएल कितना बड़ा बन रहा है. नहीं अभी भी दूर ही है. 282. नहीं अभी हिट नहीं किया, शायद कर लिया क्या. किया अभी रेजिस्टेंस को हिट इसने. नेचुरल गैस ने दूर है अभी रेजिस्टेंस से. नीचे आता तो बेटर था, एग्जैक्ट लेवल पे आया नहीं, ये नेचुरल गैस सपोर्ट पे। यूएस मार्केट ओपन होने वाला है, देखते हैं।
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. We saw futures dip after the PPI number came in hotter than expected. We're now back up, although just barely on the S&P. NASDAQ futures up 0.4%. This is interesting because we also saw the 10-year Treasury get near as damn it to 450, right? We were at 449 at one point, but Max Kettner from HSBC says as long as these earnings continue to come in so strong, the market won't care about rates. Global medical response ringing the bell at the New York Stock Exchange. Just one more IPO on a day of IPO news. We're also seeing Fervo Energy ring the bell down at the NASDAQ. Very happy people because energy is in high demand. We all need it to power the compute that we constantly, carelessly, frivolously use.
Speaking for yourself, or?
I mean, how many tokens a day do you use on just needless crap?
I mean, a lot. And there's that great FT story that apparently Amazon workers, like, needing to prove that they were using AI, have just been, like, using as many tokens as humanly possible on, like, super random tasks that were unnecessary.
Yeah, that's expensive, and it uses a lot of energy.
Yes, trees are dying because Amazon employees want to look good to their bosses.
And yet we're worried about my 6.4-liter Hemi V8, you know?
Yes, important to keep things in perspective. I'm looking at NVIDIA here at the open. It's up 2%. The CEO, Jensen Huang, is now among the tech leaders joining President Trump in China. Before, he wasn't on the list of the two countries working to strengthen ties for the AI era. Maybe the thesis here is that, you know, he goes to China, more likelihood maybe China will buy more chips, or it's just the robots buying on the headlines.
Any. Maybe they'll buy any, right? Because the problem is President Trump okayed the sale of the H200 chips. I mean, the U.S. will take a kickback, of course, right. But it doesn't look like they're putting in any orders. So he has to go over there and say, please buy our stuff, you know, and help us out.
Buy our stuff,
in
release your oil reserves, et cetera, et cetera.
Memory chips, though, are massive. Chip stocks rebounding, memory chip makers rebounding after a midday sell-off yesterday. Traders buying the dip. They see more room to run in the record rally. We've been talking about Micron's pitifully low forward PE ratio of 8.1. That's because the E just keeps on rising so much. Micron right now up 4.6% in the cash trade. SanDisk gaining 1.75%. Qualcomm gaining almost 1%. So they continue this record rally, just ripping face. As we've seen, you know, the Kospi almost double this year. It's this year to date, triple in the last 12 months. Let's bring back Threadneedle Ventures founder Ann Berry. We're so focused on the tech and the chip rally. What about the rest of the market? You know, are we really seeing strong earnings outside of the AI plays?
We are seeing pretty strong earnings across the board. There are exceptions, right? We're seeing anyone that's got particularly high exposure to oil prices suffering a little bit. We're seeing some revisions in the earnings. So we're seeing that in consumer. We're seeing that in travel. But even with that sort of added back, as the market says, you know, let's assume that peace eventually comes to the Middle East. I think people have been impressed by the level of earnings so far. I have been. I've been sort of surprised to the upside.
One of the things that has been interesting, so Steve Ho from our Bloomberg Quant team sent me this chart, basically looking at stocks that benefit when inflation is moving higher. So it's not just energy stocks, it's also commodities, materials. So a lot of those types of stocks. So that's the white line. And then charted next to it in blue is CPI. So basically the stocks that do well when inflation is doing well front ran the CPI figure. Yeah. But they've recently been coming down. And I don't know, I wonder if there's something to this and how you're thinking about stocks that do better with inflation. Have we, basically, this is to ask, have we seen the worst of inflation? Have we seen the biggest pressure of it? If it seems like maybe the stock market at least is starting to turn on some of those names.
Well, I think that chart is saying that the belief is that we've seen the worst of it. And I think that, again, to come back to Iran and the situation in the Middle East, I think that chart is also saying the market believes an end is in sight. We can't exactly call it. It's been a very volatile process in terms of negotiations, but the fundamental belief is that this administration will not allow this to continue in a midterms year. I think that's what it's saying, and that inflation will eventually be pared back.
If this administration gets to decide if this continues or not, right? I mean, when you poke a hornet's nest, you don't decide when they stop swarming. They decide when they stop swarming.
Well, the Strait of Hormuz situation, I think, is so profound, and that the global ramifications of it not fully opening up are so profound, it feels as though there has to be an end in sight. And you've got the voices that
they
the
don't look
administration
that profound, I have to say, from just oil prices,
well, just
right?
oil prices now, they have, you know, surpluses have been pulled down. It's sort of surprising that we haven't seen a bigger bump up. We're also very insulated here in the US. This is the other thing. When I'm back in London, the news cycle looks very different there than it does here. Over there, the headlines are all about flights getting cancelled across Asia and across Europe. We're not getting the same narrative here because the US, we're not energy independent, but we've got certainly more energy freedom. So I think the pressures are building up overseas.
I mean, there has been this narrative, at least in the US, be it the economy or what risk markets are doing, is like AI is the new macro.
Yes.
This is the new macro. But is that just the privilege of being energy independent that we can say that? Is AI also the new macro globally too?
I think it has to be the new macro globally, but it'll manifest itself in different ways. So let's go back to chips and memory, to the point, Matt, that you've been raising. If you're in South Korea, AI is absolutely the new macro, right? Because if you think about the amount of memory that's being manufactured in South Korea, or let's look at Taiwan for chips more broadly, you can't help but accept that this is the new macro. Europe too, right? If you look at the level of regulation, which shows that they're focused on adoption, it shows that this is the new macro there. But I think it just looks different. I think the growth impact, the earnings impact looks different by region.
Let's talk about some single stock stories. You were in Miami for this marketing conference, just as we were there for F1.
Yeah, you did the fun stuff. I was watching.
I was going to say, we got the better
we all
end of that.
suffered from the traffic, though.
But I was hanging out with Mark Douglas, who's the CEO of Mountain, and they do this targeted advertising, much like Trade Desk, and these stocks have been hit hard.
Smacked, yeah.
Yeah. So what did you learn there about how AI can either help or hurt those kinds of technologies?
So the conference I was at was Possible Miami, and that's a lot of CMOs, chief marketing officers, and then a lot of marketing tech businesses coming together to try to figure out, frankly, how to allocate their budgets. AI, buzzword du jour everywhere. But the truth is, and I've got to be careful saying this, when I went to a lot of the panels and I met with a lot of people there, the buzzwords, in my opinion, were not met with an equal amount of substance. And so it's really trying to pass through, Matt, with names like MTN that you just mentioned. Trade Desk has been pummeled. Pubmatic, on the other hand, has been doing very well. These are digital ad placement businesses. I think the volatility is going to continue to be very, very high, because I think the market and, in turn, the customers of these businesses are saying, you're talking about AI enablement, you're talking about advancements, but show us the return on our marketing investment by using your product. Someone like Zeta Global is going all in, saying, we'll give you 600% ROI. Others are saying, come to us, we'll build it, the returns will come, but they're not actually showing that in a tangible, measurable way. So I actually worry for this sector. I think there's going to be high upside for those who get it right. I happen to think the Trade Desk is underpriced, but it's going to be very, very volatile. And I think the proof of concept is going to be, the bar is very high for these kinds of companies.
The other sector that you're also looking at is consumer, and maybe more M&A there.
I mean,
it's particularly relevant after Under Armour earnings that were really, really weak. But I mean, I just wonder how M&A works in that regard, because you have this property that's not doing as well. If you think of like Under Armour as IP, so what, do you like go in there for the manufacturing capacity? Do you try to turn around the brand label? What would be the thought in sort of M&A?
So I think M&A has gone through this cycle. Here's one example. Dick's Sporting Goods and Foot Locker. Right? Do you remember this? Yes. And we saw literally the inverse happening on the share prices. Dick's Sporting Goods, when that deal was announced, tanked. Shareholders were saying, we're on a good roll. Why are you going to dilute us with Foot Locker, which was struggling to try and figure out its next chapter? We've now seen this in beauty. We're seeing Estee Lauder talking to Pooch. It used to be beauty companies were saying, let's buy the fast growers. Now it's the mega mergers to say we need to just strip out costs, and it's a survival tactic. I think that something like that has to happen with athletic apparel and athletic footwear. Under Armour, to me, Lululemon needs to do something dramatic, because the new CEO announcement's not cutting it with investors. Go talk to Under Armour, strip out costs, look at portfolio diversification, look at supply chain upside. So I think the merger thesis now, Danny, has become one about moves, not so much to power growth anymore, which is what it has been. It's about scale to get the synergies and to get their global footprint figured out, because I think folks are saying what we've seen with tariffs and supply chain pressures aren't going to go away.
By the way, that might be helpful to Lululemon in terms of sales to men as well.
Yes.
Because I know that people say their products are fantastic, and I don't know if everyone's telling me I should go, and buy some Lululemon gear to work out in, but I can't bring myself to pull the trigger on buying Lulu.
Do you wear Under Armour? Do you wear Under Armour stuff?
No, but I would.
You would.
It just seems more.
Maybe this is like my New York bubble thing, but I see so many men in Lululemon in
That
New
is
York.
a New York bubble thing, yes.
Okay, yeah.
That's not happening in Granville, Ohio, I'll tell you.
Right, but they do make great products. For men, they make basically slacks that feel like sweats, but look appropriate for work.
Right, I know. Guys here drink Perrier, too. I'm just saying, that doesn't happen in the Midwest. So
Okay.
Maybe.
Got it.
It's exactly your point. Brand translation is not necessarily happening organically, right? It's not necessarily, if people are trying to do turnaround stories that are anchored around extensions of their product categories to different demographics, it's not so easy to pull off. It's easy to say on paper, very hard to execute on. So I think M&A is going to be part of that story.
And thank you for bringing it back to reality. Anne Berry of Threadneedle Ventures, really, really wonderful to have you on. Let's get a check on your equity market about 10 minutes into your trading day, and we are moving lower by 0.2%. Basically, the only thing that's stopping things from being much worse is Nvidia. Nvidia is adding 15 points to the S&P 500, all thanks to Jensen Huang now, or 12 points now going to China. Apple, Micron back on a tear. Chip stocks doing well today after taking a dip. Micron up 3.5%. Texas Instruments up 4%. In the down column, you got some really big names that are suffering. Microsoft, Broadcom, Amazon, JP Morgan. You have a lot of financial type companies having a pretty bad day, both the card providers like Visa and the banks like Citi and JP Morgan. So when it comes to the sectors, things look even worse. Again, the only thing that's holding us up is Nvidia, hence why you see Infotech up 0.8%. Actually, I lied. Here's the new updated picture. Infotech, staples, and healthcare. So a very big flight to safety. I mean, notable that Nvidia, I guess, is now lumped into that flight to safety. But utilities, real estate, financials, a lot of the bond proxies having a tough day as yields push higher after that hot PPI data, Matt.
All right. Interesting look at the markets as they develop early on in the session. Speaking of developing, we come back. We're going to talk about the transformation from a Bitcoin miner to an AI compute provider. It seems like a no-brainer. We'll ask Mara's CEO, Fred Thiel, next about that pivot. This is Bloomberg Open Interest.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Let's get you some top calls. What the analysts are watching this morning. First up, Stifel downgrading Under Armour to hold, citing rising costs as the sportswear retailer works on turning around its business. And Barry was just talking about maybe someone like Lululemon needs to buy Under Armour. Shares down 2.5%. Next up, Kenner Fitzgerald boosting its on-semi price target to $100. They point to strength in industrial and data center markets. Shares up 7.9%. It's above $100, so yeah, I don't know about that. Anyway, finally, Bank of America raising its price target on NVIDIA to $320. They expect AI sales to continue to accelerate this year. Matt.
All right. Mara continues to shift its focus from Bitcoin mining to the unprecedented demand for compute needed to fuel AI. On Monday, the company said it sold $1.5 billion of Bitcoin to fund data center deals like the acquisition of Long Ridge Energy and Power in the great state of Ohio. And the CEO of Mara, Fred Thiel, joins us now. Fred, great to have you on the program. I'm really excited to ask you about this transition because if you're mining Bitcoin, you essentially need a ton of compute, a ton of power running rigs that hold microchips. And the same is true for AI. Can you just make a switch one-to-one from mining Bitcoin to providing AI?
Well, it's a little bit different infrastructure, but the key gating item in the AI industry today is availability of power. And this affects NVIDIA, it affects the memory guys. If you don't have power where you can plug compute in, you don't have sales. And so everybody is chasing the limited amount of power that's available. We sit on 1.1 gigawatts of energized capacity. And so for an AI tenant to come in to one of our sites, it's a question of permitting, building the type of building they need, and then they bring in the compute and plug in. What that does is it dramatically shortens the lead time for them to get energized. We have the power available today. We have the land. They can come in, get it permitted, get it built. 18 to 24 months later, they are energized and turned on. And as you know, by what's in the news about Anthropic and some of these other model providers, their ability to grow market share and support their users' need for agents and tokens is totally driven by how much compute they have. And you have an exponential growth in the size of the compute needed to run the basic model, plus the agents are using many-fold more tokens than they used before when people were just chatting with AI. And so you just have an insatiable demand currently, and all this land and power that we sit on is just a very valuable asset. So we looked at this and said there was nothing better for us to do with our assets than do this conversion. It was the best thing for our shareholders.
So, Fred, just in terms of the properties that you already have, you know, leaving aside the acquisition or the further investment, you have essentially data centers that are set up with computers running ASICs, right, to mine Bitcoin, and you've got contracts with power providers that are live. Is the only thing you have to do essentially change out, you know, the chips or the servers in order to make them neo-cloud data centers?
Not quite that simple. What we need to do is, it depends on who the tenant is. If it's somebody who's going to run training, you typically need to build a powered shell, so a building that's enclosed that has cooling and power infrastructure to support whatever compute they're going to put in it. If it's inference as opposed to training, you can do modular, which is faster. And our sites are today set up for a conversion to modular that's very easy. If you're going to build a building, you have a construction time frame that's a little bit longer. But essentially, the key thing for any of our prospective tenants, whether it's a hyperscaler or a neocloud or whoever, is the power is available today, the land is available today. All they have to do is essentially sign a lease and start the process of construction.
Fred, do you have anyone that's actually signed leases? Do you have any binding agreements with any of the hyperscalers?
No, but we have very active engagements across 90% of our portfolio, which is great. We have very competitive process going on at some of the sites where people are looking at capacity, how quickly they can get online.
Right.
And our expectation, as we've said before, is we'll announce 1 or 2 leases by the end of this year.
I guess, Fred, there is this fear, I mean, on this sort of idea specifically, that you build something without a lease. And with every CapEx cycle, we've seen this thing repeated, that it is very clear and real and fundamental that we don't have enough for AI data centers right now. But then a lot of times something happens that changes the scarcity economics. You know, innovation, efficiency gains, the AI race, the CapEx race finally plays out. I wonder what is the risk that happens, that you and some of your peers and, you know, once shoe companies that turn to be AI, well, what is the risk that something changes in this cycle and means that scarcity economics isn't there anymore?
Yeah, great question. A couple of things. For one thing, we don't build in advance of having a tenant signed. So we're not going to go and allocate capital to building infrastructure until we have a tenant signed and on the hook, so to say. And those processes are fairly far advanced. So we're not going to go spend the CapEx like some of our peers have done in advance of having a tenant. Because the key thing is, you know, if Google's a tenant, they have a particular spec of what they want. Microsoft may have a different spec, AWS, Anthropic, whomever. They all have different specs for what they want. So it's kind of crazy for us to build something and then have them have to retrofit. So for us, it's all built to suit. So as soon as a tenant signs, then we go through the design process and then we build. And you know, that's the most capital efficient way of doing it. And then as well, our partnership with Starwood gives us a huge advantage, we believe, over our peers in that we have a partner who has signed multiple leases with all the top tier providers. They have built in EPC and construction. They have built and delivered multiple data centers to these premier partners, and they know how to put them into operation. They know how to meet timelines. They know how to reduce risk. And then also, you know, they share in the equity contributions. And our sites are put into each of these joint ventures, if you would, at kind of predetermined values, which we think is just a very capital efficient way for us to proceed in this business.
All right, Fred, thank you very much for joining us. Appreciate the time. That is the Mara Chairman and CEO, Fred Thiel. Coming up, Bloomberg analysts map out China's missile sector for the first time and found an industry rapidly increasing in revenue. That's today's big take. We'll have it for you next. This is Bloomberg Open Interest.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
China is apparently ramping up its missile production by the most since President Xi took power. That's the focus of today's Big Take. Bloomberg's global defense editor, Jerry Doyle, joins us to discuss. And it's fascinating for many reasons, Jerry, but especially since we seem to be using up a lot of our arsenal while China is building up theirs. Tell us about this story.
Well, we went back to 2013 and looked at all the companies that reported, at least on average, a once-a-year connection to the parts of China's apparatus that make missiles. And then looking at that broad spectrum of companies, it was something like 80, 81, we were able to drill down and see what they were providing, who they were providing it to, and it shows this massive spike in revenue last year that implies that China is making a lot more missiles.
I mean, even Michael Ball from our MLive team points out to me just like the huge economic growth that China has undergone partially because of this. I mean, Jerry, does this all just lead us to, is China getting ready for something, maybe with an eye towards Taiwan?
I mean, it's impossible to say. It's hard to climb inside the head of Xi Jinping, but certainly this sort of an arsenal is geared towards keeping other adversaries like the United States at arm's length. It's designed to hit the bases in Japan. It's designed to hit the bases elsewhere around the region. It's designed to hit Guam, and if needed, even to strike the continental United States. That gives China a little bit of an asymmetric way of fighting back if there were to be a conflict over something like Taiwan.
Jerry, listening to BBC this morning, they cited Bloomberg research in that Xi Jinping has found that some of their missiles weren't even real in the past. That's part of why he's taken the military apart. Does that have anything to do with this?
Not necessarily. I mean, I think, again, China's aim here is to have an overwhelming conventional ballistic missile force that it can use to do many things, to attack Taiwan, to keep the West away. But it also is part of this military buildup in general, where Xi Jinping wants to modernize the military, and this is part of it.
Jerry, thanks so much. Jerry Doyle, Bloomberg Global Defense Editor. Highly recommend you check out the Big Take on the Terminal.
A cidade estava sitiada.
Nisso, ao começo, eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho talya ki kon akhna ta chuara panga ko akhna lepa manchang le ngai kon mananya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
From ABC News, I'm Chuck Severson. Inflation at the wholesale level soared last month by 6% year over year. ABC's Jim Ryan says it's the steepest increase in 3.5 years.
It's the sky-high price of energy that's driving inflation, both at the consumer and the producer level. Gas prices surged over 15% last month as the war with Iran closed down a crucial supply line. Take out food and energy costs, and the producer price index was up only 1% from April of 2025.
President Trump's arrived in Beijing for a summit with China's leader. On the agenda are trade, Taiwan, and Iran. ABC News Chief White House correspondent Mary Bruce says the administration is pushing back against this.
There are new questions about whether the White House is overstating the damage done to Iran's missile capabilities. The New York Times reporting Iran still has retained roughly 70% of its pre-war missile stockpile and has restored operational access to 30 of the 33 missile sites it maintains along the Strait of Hormuz, potentially threatening vessels transiting the waterway.
3 dozen people in the U.S. after being on the cruise ship with the hantavirus outbreak are being monitored. ABC's Victor Akendo.
An Illinois resident is at home awaiting test results from the CDC after experiencing mild symptoms of the hantavirus. It's believed they contracted the North American strain after coming in contact with rodent droppings while cleaning.
In France, a woman is critically ill with hantavirus connected to an artificial lung. Immigrants voluntarily deporting themselves have surged during the Trump administration, says the Vera Institute of Justice. ABC's Dave Packer.
The group says the number jumped from about 800 a month at the end of the Biden administration to nearly 9,000 by February. The researchers say many people accepting those departures may still qualify to remain legally in the United States, but harsh detention conditions and limited access to lawyers are pushing them to leave anyway.
You're listening to ABC News. A licensed drug addiction counselor who delivered Matthew Perry the ketamine that killed him is set to be sentenced today in Los Angeles. Prosecutors are asking for 2.5 years in prison for Eric Fleming. He's one of 5 people who pleaded guilty in connection with the Friends TV star's death in 2023 in the jacuzzi of his Los Angeles home. U.S. hotels say the promised economic boon from the World Cup hasn't materialized yet for them. American Hotel and Lodging Association says room bookings are light in 11 cities surveyed. A California mom is out on bail charged for what her son allegedly did, killing an 81-year-old man while riding an e-motorcycle in Lake Forest. Outside the courthouse, ABC's Bianca Bueno.
Orange County District Attorney Todd Spitzer says the teen was doing wheelies on the e-motorcycle when he hit Ashman and fled the scene.
Whether you like it or not, we're responsible
for the conduct of our children.
Right away, Major was charged, but her charges were upgraded when Ashman later died. Spitzer said the case is especially egregious because last year, Major was warned by the Orange County Sheriff's Department.
The NFL now planning 9 international games in the upcoming season, the most ever, with games in London, Paris, Brazil, Australia, and more. It's Wednesday, May 13th. On this date in 1846, the U.S. Congress formally declared war against Mexico following battles along the disputed U.S.-Mexico border. The war would last nearly 2 years. Chuck Sievertson, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Wednesday morning. Scarlett Fu and Paul Sweeney. We are broadcasting live from the Julia Morgan Ballroom in San Francisco at Eisner Amthor's West Coast Real Estate Summit. We're going to speak with some of the senior real estate executives and investors and explore forces reshaping the commercial real estate industry and find out where the opportunities lie. And Scarlett, coming in from the airport today, yesterday, it was all, the billboards were all AI. This is an AI town.
This is an AI town. Did you understand any of the billboards?
Some of them I did not. It's kind of inside baseball, as you said.
There's a lot of shorthand, a lot of acronyms.
Right, but we're going to learn about the real estate aspect of that. It's been a big boon for the city of San Francisco, this whole AI development. So that's a good thing. We're also going to check in with Tyler Kendall, Bloomberg Washington correspondent, get the latest on the upcoming summit in Beijing with President Trump and Xi. We're also going to check in with Ed Ludlow. We're in his turf right now, San Francisco. He's the B-Tech co-anchor. We'll get his thoughts on some of the big stories. The one that jumps out at me is Anthropic in talk to raise $30 billion at a $900 billion valuation.
At some point, this company is going to go public, right?
I think so, and that'll be a big thing for Wall Street and global Wall Street. Right now, let's start this whole thing off with John Tucker and get a Bloomberg Business Flash.
All right, guys, and this Bloomberg Business Flash this morning is being brought to you by IBKR for the past 3 years. Interactive Brokers individual clients average 24.3% annually, beating the S&P 500. Lower costs and access to 170-plus global markets matter. Visit ibkr.com/performance. Well, some of the executives who are attending the summit in Beijing with President Trump already seeing the share prices of their companies getting a lift. For example, NVIDIA right now, that's up 1.3% after Jensen Huang actually joined the Trump visit at the last minute. Shares of Micron Technology, they're up today, up just over 3%. And this was the eye popper this morning. Wholesale inflation accelerating to the fastest pace in 3 years? The producer price index rising 6% from a year ago. The long bond is above 5%. And then you have the odds of a rate cut from the Fed. That has pretty much evaporated at this point. The odds of a rate hike next year, they're actually increasing. And the Philadelphia Semiconductor Index, we told you, fell 3% yesterday, making up for some of that this morning. Right now, the SOX is up just about 0.7%. On semiconductor, the best performing stock in the S&P 500, that's up close to 7%. The S&P 500 right now is turned lower, down 8 points, down 0.1%. The NASDAQ Composite Index, a little change, down I'm going to call it unchanged because it's bouncing between gains and losses. Dow Jones Industrial Average, that is down 155 points right now. That is down 0.3%. And oil is higher. Brent, the active contract, 13 cents higher, 107.91. WTI up $1.07, 103.25. And we check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker. That's your Bloomberg Business Flash. Now back to Scarlett and Paul, live from the Eisner Amthor West Coast Real Estate Summit in San Francisco.
All right, JT, thank you so much. We appreciate it. We're at the Julia Morgan Ballroom, which is a very, very cool space. So my question was, who's Julia Morgan? So I go to the intraweb. Julia Morgan was an American architect and engineer. She designed more than 700 buildings in California during a long and prolific career. She's best known for her work on Hearst Castle in San Simeon, California. So that's pretty cool.
That is very cool. She sounds like a disruptor in a city of disruptors, which is being disrupted, of course, yet again by the latest wave of technology,
Absolutely, AI. I see it. We see it all over this town, which is very cool. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Matthew Griffin, proud graduate of the Duke University.
Paul, thank you for having me. Always good to talk to a fellow Blue Devil.
Very good. What do you got for us today?
So, Paul, I've got one of the names on my list. You were talking about AI disruption, and this is a name, Wix, ticker WIX, that investors are concerned about AI disruption here. They reported results, soft revenue in the most recent quarter. That was $541 million. Analysts looking for about $543 million. And you think about bright spots and headwinds here. You've got some actual strength in their Base 44 vibe coding product, but struggles in the core web design business. They also had some Middle East headwinds. More than half of their employees are based in Israel, so there was a hit to productivity there. But you look at the share reaction here. Shares down as much as 32%. That's their worst one-day drop ever on a report that doesn't necessarily look catastrophic at first glance. And that may show the way investors are trigger happy with these software names. I'm also looking at another decliner today, Birkenstock, also looking at the Middle East here, the footwear maker. Flagged a $6 million headwind in its Europe and the Middle East region from the war. That's a hit to revenue. They were unable to complete some shipments to the Middle East. And also they said there was muted consumer sentiment in Europe as energy prices rose. They missed on revenue and operating profit, and they held a full year outlook steady. JP Morgan said investors wanted a beat and raise there. And then I think it's also worth coming back to NVIDIA. The stock, of course, getting a pop today, up now just about 1%. It's come in a little after the last minute addition of Jensen Huang to that trip to China. And I think it's worth thinking about what investors might actually get out of this trip. Of course, we talk all the time about the possibility the U.S. will let NVIDIA sell more advanced AI processors to China. That being said, one possible outcome is that China will actually give some concessions on this, that they will allow their companies to take delivery of these H200 chips, the last generation of AI chips. And that's something that might show up in NVIDIA's results over time, maybe not a big headline that moves the stock quickly. Also worth thinking about some of the other names. We could have a sale of Boeing jets. We could have China buying U.S. agriculture products. That would be good for tractor maker Deere, for example.
Yeah, that's something Henrietta Trey's of Veta Partners was flagging to us yesterday. Matthew, thank you so much. Matthew Griffin, our Bloomberg Equities reporter with Stocks on the Move. And for more conversations like this, be sure to subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Matthew mentioned how Air Force One made a last-minute stop, a pit stop in Anchorage, Alaska, to pick up Jensen Huang, the CEO of NVIDIA. It is pretty cool because if you're going to fly from the East Coast to Asia, to China, to Taiwan, you have to go over the North Pole. So Anchorage is a good, midway point. Let's check in with Tyler Kendall, who also flew from the East Coast to China. She joins us now from Beijing. She is our Washington correspondent right now, reporting from Beijing. Tyler, what can you tell us about this last-minute addition of Jensen Huang to the U.S. delegation? Because our reporting was showing, at least initially, he was not scheduled to go.
Right, Scarlett, a White House official had confirmed to Bloomberg News earlier this week that he wasn't originally on that manifest of travelers. Now, the White House is saying officially that Jensen Huang was able to change his schedule in order to make this trip, though we did hear from President Trump in a post on Truth Social earlier, seeming to indicate that he was unhappy with the media coverage around the fact that Jensen would not be on this trip and that he had called him to get him to come over with him and joined this list of CEOs that are going to be accompanying the president here during his travel. We'll have to see what this could potentially yield. Of course, as you were just discussing, perhaps the biggest ticket item would be whether or not President Trump pushes the Chinese government to allow Chinese companies to buy those H200 chips. After in December, we saw the U.S. greenlight those exports. But then the Commerce Secretary, Howard Lutnick, had said in a hearing on Capitol Hill just a few months ago that even as some of these licenses have been granted, they're not seeing Beijing accept the orders or allow the orders to go through. So maybe that's one area that we should be watching pretty closely. But originally, the message out of the White House was that the CEOs that are coming with President Trump represent those sectors that already have significant exposure to China, or they represent those sectors where the administration is hoping to clinch some investment deals, which is why we see the Boeing CEO, for example, on this trip. Also the CEO of Cargill, as we await any sort of information about whether or not there will be movement around some Chinese purchase commitments related to U.S. agricultural products.
Tyler, President Trump has said he wants on this trip to focus on trade with China, not on Iran. That being said, how do you think, do you believe Iran will come up in conversations between the presidents?
At this point, I think it's going to be difficult to avoid, Paul. And in fact, a senior administration official who briefed us reporters before we headed over here to Beijing said that President Trump is expected to push back against China's approach to Iran amid this conflict, considering that China does remain, of course, the largest buyer of Iranian crude. President Trump just yesterday said that the U.S. doesn't need any help in ending the conflict, as the U.S. rejects the latest counter proposal that came through from Iran. But then he also seemed to allude to the fact that he would be looking for whatever, in his words, Chinese President Xi Jinping could do to maybe help get Iran to the negotiating table in perhaps a more meaningful way for the U.S., considering that President Trump says that the ceasefire right now is on life support, though, of course, the White House still wants to maintain that diplomacy is a viable option. Secretary of State Marco Rubio, Secretary of Defense Pete Hegseth are both on this trip and traveled with President Trump on Air Force One, where he told reporters yesterday that they would be discussing on the flight over what those red lines would be in order to end the ceasefire. So it is clearly top of mind and is going to be a big factor in this conversation. But we should add that our own analysts at Bloomberg Economics have said that China right now holds a very unique diplomatic sway, considering that Beijing just hosted Iran's foreign minister last week here to talk about some potential ending or movement towards ending the war. So those are sort of the threads that we're tracking, but it's hard to imagine that it wouldn't come up in those conversations behind closed doors.
Very quickly, Tyler, do we think Taiwan is going to come up? Xi Jinping probably wants to bring it up.
Yeah, and President Trump, Scarlett, said as much, that he would be discussing it when it comes to U.S. Arms sales to Taiwan. After in December we saw the single largest ever arms package approved from the U.S. worth $11 billion. So there's sort of two tracks that this could take: arms sales, and then also if the U.S. has changed its position regarding Taiwan independence. Senior administration official has said on the latter we shouldn't expect that there is any change in the administration's policy, but I think that will also be top of the agenda.
All right, Tyler Kendall, Bloomberg Washington correspondent, traveling with the president right now in Beijing. The language here is important because it's whether the U.S. does not support Taiwan independence or the U.S. opposes Taiwan independence. And Xi Jinping wants the U.S. to commit to the latter. Yeah. And that's a little bit too straightforward. It's not ambiguous enough, at least for the U.S.
Yeah, and the U.S. policy has been pretty consistent over the years, and you wonder if there will be any change in language from President Trump.
All right, and of course we are keeping an eye on all the headlines coming out of China with the president there, traveling with a U.S. delegation and with members of his cabinet. S&P 500 now lower marginally, the NASDAQ higher. From New York, no, from San Francisco.
Yeah.
This is Bloomberg Intelligence on Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom in New York with his Bloomberg Business Flash, brought to you by Eisner Amper. Eisner Amper provides assurance, tax, outsourcing, and advisory services to businesses that need more than a generalist. Whatever the challenge, we have a team for it. EisnerAmper.com. Right now, you have 5 of the 11 major industry groups in the S&P 500 pushing higher. And Communication Services is the group that right now is in the lead. That's home to Google parent Alphabet. After a 3% sell-off yesterday, looking at the Philadelphia Semiconductor Index, making up for some of that loss. Right now, it is up just about 1.2%. And the big story of the morning came on the data front. Wholesale inflation accelerating for the month of April to the fastest pace in 3 years. The PPI data likely reinforces a Federal Reserve official's view that inflation should remain their top concern. This comes in the face of the war-driven surge in oil prices. Brent crude right now, that's up another 0.2%, up 23 cents a barrel at $108. West Texas Intermediate up $1.22. That's $103.40 a barrel. And the long bond, that is above 5%, 5.04%. The 10-year yield, that also creeping up 4.48%, and twos just kissing a 4% right now. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Scarlett.
Thank you so much, JT. And of course, those 10-year yields, 30-year yields, 2-year yields are at multi-month highs right now. Just down the street from us in our San Francisco bureau is Ed Ludlow. He's our B-Tech anchor. We tried to convince him to come out here.
He could have walked over.
I know, but I think he, has to get ready for his own show coming up.
Okay,
so Ed is joining us right now from our San Francisco bureau. And Ed, the big story here in the Bay Area, in Silicon Valley, is Anthropic, the AI startup in talks to raise $30 billion. That would give it a $900 billion valuation. I mean, this company just gets bigger and bigger, more and more valuable every time we talk about it.
It's been a bit of a roller coaster in the sense that the story started with Anthropic basically rebuffing its investors. Its investors were like kicking down the door saying, let us give you some money and here's how we think you should be valued. And they just weren't interested for quite a number of weeks until this week, where this is like a real live situation. They kind of accept that the idea of raising $30 to $35 billion makes sense right now through the private markets. And, the discussions are around a $900 billion valuation, but probably a fair bit higher than that, which if it happens, we're reporting it could close even by the end of May. It would be the world's most valuable AI startup. But if you're keeping track, it would mean it would be more valuable than OpenAI, which is a good bit of rivalry to be covering.
Ed, after the show's over, I'm going to cruise on over to Sand Hill Road, see some of my buddies there.
Nice.
I want to talk to them about IPOs. I mean, talk to us about the IPO pipeline for all you guys out here. This is going to be a big, big year potentially.
Yeah, I so much time spent down Sand Hill Road. It's not just like the VCs and the like mutual funds, late stage private growth equity, but like if you are cruising and you're using your Tesla full self-driving, or you can almost go that far in a Waymo actually, then the people you meet there are really interesting, and they all have skin in the game around the IPO this week, which is Cerebras, right? And, a valuation around $35 billion. It's been a real hot ticket. It will be the biggest IPO of the year so far in terms of dollars raised. But, the problem that Cerebras will have is that we're all waiting on SpaceX, and it's very difficult for the market to look past that one that's likely to be late June or July.
To what extent are these AI companies looking at market conditions when they consider listing? Because for every other company, that would be paramount. But, I mean, it feels like we're talking about a different economy entirely for these AI companies.
Yeah, sometimes it's really important to say, like, we just don't know. It's not in the reporting. But if you take Anthropic as an example, we had reported that they would go public in October of this year. Now they're raising a big chunk of change in the private markets. And the sort of broader story was like, why bother going public, right? If the private markets can supply you the liquidity that you need to fund your operations and invest in the compute that you need, no point, there's also the kind of idea that we're in a three-line race between SpaceX, OpenAI, and Anthropic to all go public in a single calendar year. And like Paul, you'll know, there is not infinite liquidity for people that matter to participate in 3 IPOs at that scale, probably. So the reason I say we don't know is, maybe Anthropic's not going to go in October now. Maybe it's next year. Maybe everyone's waiting on SpaceX to see if at that scale, Anthropic or OpenAI could pull off an IPO at a valuation that's north of $1 trillion or whatever it ends up being. And with those two in particular, Scarlett, really interesting point, there's the public benefit corporation or the charitable arm of each, which complicates the structure of an IPO, which hasn't really been worked out yet, as far as I know.
Ed, for better or worse, you are the Elon Musk whisperer. SpaceX.
Oh, God.
Talk to us about the timing of that potential IPO.
Yeah, I mean, we broke the story first week of May, I believe, that they had filed confidentially, and if we were right about that, which I'm sure we were, then that S1 or that filing will be made public by the SEC very, very soon, like in a matter of days. So they could do it in mid to late June, but again, timing is everything, and as we speak, there will be ongoing conversations with investors. But remember, look past Elon Musk a little bit. SpaceX has got talent beyond him, and the CFO Brent Johnson handles a lot of that. Gwynne Shotwell, the president, handles a lot of that. As does Jared Birchall, who's Elon's sort of private finance guy and straddles all his companies. So it's all in the works.
All right, Ed, thanks so much. Appreciate it. Ed Ludlow does all the big tech stuff for Bloomberg Television. He's out here in San Francisco, out there on Pier 3. Awesome offices there for Bloomberg. We are broadcasting live from the Eisner-Amper West Coast Real Estate Summit in San Francisco. And out here at SF, it is all about AI. Everybody is into it. It has revitalized this city post-pandemic, which is a beautiful thing because I'm a huge fan of San Francisco. Right now, we're going to check in with Tarun Rasoni, CEO at Groove AI. My notes tell me that Groove is an enterprise AI services platform that helps businesses move from AI experimentation, which is where I am, to full-scale deployment. Tarun, thanks so much for joining us here. How do you get your clients, the companies you deal with, from experimenting with AI to really deploying it fully in their business? What do you do there?
Thank you so much for having me here. So we help companies understand how AI adoption can be improved in their environment, thinking about security, data, and the underlying governance and infrastructure that they need to securely adopt AI in their environment. And to adopt AI within the enterprise, security, privacy, trust, and governance are very important parameters before you get into AI adoption.
So at this conference, the Eisner-Amper's West Coast Real Estate Summit, where there's a lot of folks in commercial real estate, they're investors or they're principals, what is your message? What is the message of an AI company to these folks in the real estate industry?
Yeah, as you know, AI requires a lot of infrastructure. The underlying infrastructure is energy, data centers, a lot of compute. And the compute requirements are 10, 100, 1000x bigger. So real estate group is a very important part of this build-out. And the message here is very simple. There is going to be a lot of demand and needs for these AI inference data centers that are going to grow in the next 3 to 5 years. And it is going to require us to build inference clusters at the edge. The last mile and the edge has always been very important. So the real estate group plays a very big role in that last mile and edge.
So when you work with your clients, are you talking to the chief technical officer? Are you talking to the CEO? Are you talking to the board? I mean, my question is, are companies just broadly defined here, how much are they really into AI? At what level are they trying to really grasp it and attack it?
Yeah, this is a great question. So at the board level, every board is talking about AI right now. That's their biggest focus. And AI is compounding. So the sooner you start, the more compounding benefits you derive out of AI. At the C level, every CEO's first concern is this something I can trust? Is this going to help me keep my enterprise secure? Is this going to help me take it forward? At the CTO, CIO, CISO level, the concerns are more around how do we make sure like our business lines, our service groups can adopt this very efficiently.
And it's going to be at varying rates of adoption for different companies, depending on how management feels about it, how committed the staff is as well. But in the physical build out of AI, the data centers, the infrastructure, we're in California right now, but that's not necessarily where the data centers are being built, right? I mean, it's being clustered across the country.
Yeah, so all of the AI data centers that have been built in the last 3 to 5 years were purely focused on energy efficiency. Where could they find the lowest cost of energy, and how could they build a massive training cluster?
So that's not California.
That's not definitely not California, But as we go from training to inferencing, where everybody starts adopting and using more AI, that is going to require us to build these clusters very close to tier 1, tier 2 cities, because that is where the users are. And that is where the consumption of AI is going to occur.
You've mentioned security a couple times here. I can't even imagine the security risk of AI. I mean, it's bad enough to have somebody's account hacked, but if you're going to have some of these AI agents taking over the world here, I'm thinking Arnold Schwarzenegger type stuff here. It could get bad out there. How do you think about, what are the security conversations you're having with your clients?
Well, the first conversation I have with my clients is, are you using AI to make your security better? And that, I think, is the more important part.
Are they?
Majority of them are not, and that's what we do first, is we use AI to actually make your security better. And then we use security in everything you do with AI. So when you start doing that, you automatically improve the trust factor within every enterprise.
If you had to give one piece of advice to the folks attending this conference, investors, developers who are trying to understand how AI fits into what they've built up, what they have been working on, what would it be?
I think the first one would be AI is only going to grow from here, and it is very real. And every enterprise is going to adopt AI at a much more faster pace than they did with the internet, than they did with the mobile, than they did with the cloud. We're at a very starting stage of this. So the infrastructure required to build this AI is going to be a massive investment. Think of it like the electrical infrastructure we built in the last 100+ years in the world, the transport infrastructure we built in the last 100 years in the world. AI should be thought of the same way in terms of the infrastructure build-out.
Tyron, thank you so much for joining us. Appreciate it. Tyron Rassoni, CEO of Groove AI. All you need to know about the world of technology is driving in from the San Francisco airport into downtown. What are the billboards telling you?
Yes.
When I first got here, it was this thing called the internet. And then it became, as Tyron was saying, mobile.
Right.
And then all the billboards were about cloud. You got to do cloud, you got to do cloud this, cloud that. Now it's all AI. And I bet you for the next 10 years,
yeah,
it's going to be.
And at different stages
AI.
of AI, right?
Yes.
We're still, it feels like in the early innings of this AI revolution.
So what does it tell you? The billboard industry is kind of like the indicator of what's
I
going
like
on
that.
in the
I like
world.
that.
Yep. So there you go. So we learned a little bit there. Are you looking at the markets here? We got just kind of mixed out there. We got not a lot of direction here, but red and green. This is Bloomberg.
गाइस क्रूड ऑयल इन्वेंट्री आ गई है, पॉजिटिव जरूर है, स्पाइक मारा ऊपर की ओर, वापस सेलिंग में आ गया। इन्वेंट्री पॉजिटिव है, बट याद रखना प्राइस ऑलरेडी बहुत ऊपर निकल चुका है, देखना पड़ेगा क्या कंटिन्यूएशन में जाता है या फिर नहीं। इन्वेंट्री क्रूड ऑयल इज पॉजिटिव फॉर द प्राइस, 3 में से 2 इन्वेंट्री पॉजिटिव आई हैं एंड 1 इन्वेंट्री बेरिश आई है प्राइस के लिए। टोटल 3 इन्वेंट्री आती हैं, एक क्रूड ऑयल की खुद की इन्वेंट्री आती है, इसके अलावा 2 इन्वेंट्री और EIA का डेटा और गैसोलीन की इन्वेंट्री। तो क्रूड ऑयल की खुद की इन्वेंट्री प्राइस के लिए बुलिस, गैसोलीन की इन्वेंट्री बुलिस, EIA का डेटा बेरिस। 3 में से 2 इन्वेंट्री बुलिस हैं, एक बेरिस है। ओवरऑल हम कहेंगे क्रूड ऑयल इन्वेंट्रीज बुलिस फॉर क्रूड ऑयल प्राइस, बट अगेन ऑलरेडी प्राइस अब काफ़ी कर चुका है मार्केट, देखना पड़ेगा अब और ऊपर जाता है नहीं जाता, रेजिस्टेंस के अराउंड ही रोवर कर रहा है। पॉइंट ऑफ इंटरेस्ट से अच्छा सपोर्ट लिया, अब देखते हैं पॉइंट ऑफ इंटरेस्ट के नीचे जब तक आएगा नहीं, बेरिस तो नहीं कहेंगे इसको, अब ये रेंज मोस्ट प्रॉब्ली बनी रहनी चाहिए मार्केट में आज। पॉइंट ऑफ इंटरेस्ट के नीचे गया तो हो सकता है और गिरे, अदरवाइज बाकी 9,970 के ऊपर अगर क्लोजिंग दे देता है तो फिर हम इसको ब्रेकआउट मानेंगे और फिर प्राइस ऑब्वियसली गोज अप। तो अभी भी रेजिस्टेंस पे रोअर कर रहा है। इन्वेंट्री बुलिश जरूर है प्राइस के लिए, इन्वेंट्री की वजह से प्राइस को ऊपर जरूर जाना चाहिए, बट प्राइस ऑलरेडी काफ़ी ऊपर जा चुका है। स्पाइक जरूर किया था बट अगेन केम डाउन। अब आज और कोई डेटा नहीं है, ट्रम्प पहुंच चुके हैं और देखेंगे कल आई थिंक अर्ली मॉर्निंग 6 PM पे वहाँ मीटिंग होगी, उसमें कुछ निकल के आता है। थोड़ी देर पहले स्टेटमेंट आया था ईरान की ओर से, उनके जो इंटीरियर मिनिस्टर हैं, कि ईरान जितना भी क्रूड ऑयल का सेल करता है अलग अलग मीडियम से, उन सबको बैन करने वाला है। देखना पड़ेगा क्या इम्पैक्ट पड़ता है ओवरऑल प्राइस पे। कल एक्सपायरी भी है क्रूड ऑयल की, वॉलेटिलिटी रहेगी MCX में।
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The Philadelphia Semiconductor Index making up for some of the 3% sell-off that we saw yesterday. The index right now is up close to 2% this morning. Dip buyers seem to be stepping in on that front. On Semiconductor is right now the best performing individual stock in the S&P 500, and those shares are up 9%. Inflation is winding its way through the supply chains. The long bond holding above 5%. The 10-year bond right now is yielding 4.48%. That is up 1 basis point. This comes after the producer price index rose 6% from a year ago, topping all estimates in a Bloomberg survey of economists. The inflation snapshot at the wholesale level. Of course, this follows Tuesday's data for the consumer price index that showed a steep annual increase there. If you're one of the CEOs on the Trump trip to China, there's a good chance your shares are higher. Jensen Huang is on the trip. He made it at the last minute. NVIDIA among the most active. Those shares this morning up 1.7%. Then you have shares of Alibaba. They were down over 2% after the online marketplace's fourth quarter results were weaker than expected on some of the key metrics measured there. And we check the markets for you all day long right here on Bloomberg Radio. S&P 500 up 2 points. The Nasdaq Composite Index up 88. The Dow right now down 192. I'm John Tucker. Now back to Paul and Scarlett.
All right, JT, thank you so much. It is Scarlett Fu, Paul Sweeney. We're live here at the broadcasting live from the Eisner Amper West Coast Real Estate Summit in San Francisco. Scarlett, the last time I was here was it 2019?
Pre-pandemic.
Pre-pandemic. I'm a huge San Francisco fan. As a TMT banker and analyst, I've been coming out here for 35 years. This is one of my favorite towns in the country. Great town. But, man, it got just rocked by the pandemic.
It definitely did.
But I'll tell you what. I mean, it is back in spades, I'll tell you, here today. I mean, we have a new mayor here doing and getting some really good feedback. But I'll tell you, it's really been AI has, I think, been a savior for this city. And it's
you walk
really
around
cool.
the city and it's populated. There are people walking around. They're doing things. They're meeting up. That feels very different from the early days right after the pandemic when it was like a ghost town.
Yeah, so it's just great to see. It's a great U.S. city. Lisa Nee joins us here, managing partner at Eisner Amper. She covers the real estate business for Eisner Amper. Lisa, again, you and I were here in 2019. Talk to us about how you guys at Eisner Amper, as you think about the real estate practice, talk to us about San Francisco. What's your San Francisco call here?
So we were really excited to be able to bring this event back. So happy to have Bloomberg and back to doing it with us. And it was always a great vibe when we were here, whether it was the tech center or the people in that thing. And so we had come back every year since after COVID, waiting for the ability to have San Francisco come back, and we decided it's back.
Yep.
And absolutely for all the reasons that you said, whether it's part of the mayor getting things done or AI and venture capital, this is where things are happening. And so now to all of a sudden see office space being occupied and having people there and having that lifeline, what a great way to have and host an event talking about real estate and AI in the city where all of it happened. And so agree with you more and couldn't be happier to have that vibe back in here in San Francisco. Important, very important for us as a firm.
Yep.
Yeah, it's exciting to be here because you really feel the energy coursing through everyone. When we talk about AI and real estate, for years it's been data centers, AI data centers, real estate. How else is AI affecting the real estate industry right now beyond data centers?
Yeah, well, so let's talk beyond data centers, which is what's fueling everything for AI. But when we look at real estate as a sector, they've always been a little bit lag in adopting technology. And so to have to bring AI into all of your classes of how you're viewing and using it is a little different. So when you talk about office, you're still going to have that hybrid approach and how you bring AI in, whether it's from the workforce or from how you're managing your space. The same thing with residential. That tenant experience is being fueled by AI. How quickly I can speak to my managing agent now through use of AI. When you're looking at deals, how am I looking at it? So it's helpful with the due diligence process, but it's never going to be taking away the actual, does the math still work on a project? And looking at each sector and seeing how am I going to adopt and adapt using AI, keeping that human element still in place, but where am I using it as a tool, whether it's looking at operating expenses, lease abstraction, underwriting models, how do I use that as a tool to elevate and enhance real estate? And so it's time for people to adopt. They can't sit back on the technology the way that it had been historically in the past.
Step back, just look at real estate holistically. I got 30-year mortgage rates back up to 6.5%. What's your real estate call here? What's the message to your clients here at this conference?
So again, it's the same call that it's been for the last 7 years, is that each asset class is going to favor differently and whether these deals are penciling out and where you are in that cycle of where the mortgage rates are, like where you are in terms of needing to refinance out or pay off your loan. And it's always looking at that project and doing the due diligence. So there's some deals that should have never mathed out. They did because of low interest rates. And so it's really having that information to be able to look at the deal, make that smart investor decision, and show the transparency. Those fundamentals haven't switched. And which darlings are you going to find within that asset class? So we always walk when we're in New York. You guys are always pointing out some of the empty retail that's there. Retail is back, and it depends on the type of retail of where you are. We look around San Francisco, retail needs a little bit more of a surge here. That's probably the one sector that's a little bit lacking. Multifamily here is booming, as is office. Retail, needs that little sweetheart of where it is. But when you look at retail across the country, and it's high-end retail, doing great. Same thing with hospitality. The hotel rooms, I don't know if you noticed here, couldn't get a room.
Couldn't get a room, and that kind of is the case across a lot of the big cities now. When you look at the different aspects of real estate and AI, which kinds of cities are also getting a supercharge from AI? San Francisco, obviously, and we're here right now, but where else do you see this really taking shape?
So there's going to be a trickle down from your San Francisco, New York, Boston, Chicago. Those big cities are absolutely going to see it. But now with the invention of this, some of those Midwestern and not just the Sunbelt cities, but Dallas-Fort Worth. It's going to really start seeing a lot of activity happening there. We already have. It's always been something that people can't stop talking about. Maybe we'll do our next conference there. But there's definitely a lot of buzz with Dallas for the right thing. There's land. They've got infrastructure. There's a lot of smart technical people there, and technology companies are moving, and let's not kid ourselves, it's a tax favorable state. So, all of those factors seem to line up for those types of cities.
Residential real estate, people have been telling me for years that that we're underbuilt in residential. I don't know how we got there. I don't know how that happened. Talk to us about residential and building and that type of thing. Where are we?
So it happened in like 2001 when they stopped building all the homes, and looking at the census tracts, we never really caught up to where we were. And so that's where we have that affordable housing crisis, and certainly in the single family homes. And looking at the life cycle, certainly if someone like myself, I'm an empty nester, I should be ready to move on.
Are you an empty nester? Get out of here.
Oh, I like where this is going. Thank you.
I'm an empty nester.
So when we look at that and we look at our mortgage rates and replacement, where are we replacing that house to? And so where are we building those types of opportunities of where we can start moving for that? And the affordability of that single home user just isn't there yet with the housing. And One Big Beautiful Bill did have some provisions in there to help encourage housing, but it's not quick enough for the shortage that we started in 2001.
Did multifamily homes pick up some of that slack then?
So multifamily have, and it depends again in the city. Affordable housing has, but there's that workforce, the in-between what affordable housing and the fair market value housing is really where we need it for those workforce skilled workers. That's where the housing needs to be built more, and we need more excitement around that as well, and more policies for that.
I feel like in places like China, if you need housing, it can get done in like 6 months. How long does it take to get that done here? Like very quickly?
Each city is different. That's why they have NIMBYism.
The longest and the shortest.
Yeah. Every city has its own.
Yep. I know. It's just that's what they say, and that's one of the things that I hear from real estate people. If we make the permitting easier and the process easier, we could deal with this.
We could move it on,
a little bit quicker. Yeah. Lisa, thanks so much for joining us.
Thank you for having me.
Lisa Need, managing partner, head of real estate at Eisner Amper. So I'm an empty nester, but I'm empty nesting in the Jersey Shore.
That was a very deliberate decision there.
I'm not doing a Florida thing. Come on, you got to be kidding me.
I like you being near the center of gravity, New York City.
You got to be near the city. All right, looking at the market here, we got the S&P pretty much unched on the day. The Dow down 240 points. That's 0.5%. But the Nasdaq, yet again, up another 98 points. That's 0.3%. So
but it's the yields that are really capturing the story, with that wholesale inflation coming in much higher than anticipated.
5.05% on the 30-year. How about that? This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Paul Sweeney and Scarlett Fu here, broadcasting live from the Julia Morgan Ballroom in San Francisco at Eisner Amper's West Coast Real Estate Summit. Back for the first time since 2019. We're thrilled to be here. And throughout the show, we are sitting down with senior real estate executives, investors to discuss the forces reshaping the commercial real estate landscape and where they see the biggest opportunities emerging. That includes grooming the talent for these opportunities. Cedric Bobo is here with us. He is co-founder and CEO of Project Destined. And Project Destined is a venture that provides students around the world with training in real estate, entrepreneurship, and financial literacy. It focuses on preparing students for careers in real estate, and we're thrilled that you can join us today. Cedric, thanks for speaking with us. So, I'm guessing that AI changes the landscape of what can be done in real estate in a big way, but just take a step back, first of all, and tell us about how the opportunity in real estate has really changed over the past few years.
Look, I don't think there's been a more exciting time to be in real estate. There's so much innovation happening, and from the very early days of Project Destined, our thought was don't fear change, be a participant in change. And I think AI is changing the landscape. It's giving you more of your time back now. The question is, how are you using that? We're telling our students use it to become owners, to become brokers, to become leaders. Now you have more time to focus on telling your story and selling, not as much required time on administrative repetitive tasks. I think it's exciting.
So, you know, this whole AI thing, for somebody my age, it is completely new.
Yeah.
Your students,
Yeah.
they own this stuff.
Yeah.
They get it.
Yeah.
How do your students
Yeah.
use AI, think about AI? How does it come into their lives?
Well, first they've got to digest the media, right? The media is full of fear around it. So I think that while they are using it, they're nervous about how is it going to impact their careers. Are some of those repetitive tasks going to limit their career opportunity? It's not going to, but there is that fear. What we're trying to say is, like, look at all the things you can do to add value. Those haven't changed. Now you can do them more efficiently. What we were saying to them is that you got to become more comfortable with what are the use cases and what are the tools to achieve those goals. So I think if you focus on use cases and tools, you'll be fine. If you focus on media and fear, you'll be challenged, you'll be nervous. You won't see the opportunity, you only see the challenges. So we've got to help them overcome that. Now, what are we doing? We've got 10,000 students that we're going to train this year, 30,000 alumni. Every single day, we're building new programs, introducing AI and congruency with commercial real estate. So we've got to link those two together to show them, hey, how are you going to use this to drive more value at your firm?
So AI is useful in that it can be an accelerant, it can be helpful as a tool, like you said, but it does not replace understanding or expertise, right? And young people need to develop that. They don't have any domain expertise right now. So talk a little bit about what skill sets these young students still need to learn before they can apply AI to really, you know, kind of take off.
Yeah, I mean, AI still doesn't sell goods. You still got to be able to sell and tell a story and communicate. And so I think the soft skills are going to become that much more important. Look, a lot of the technical tasks, those are going to be given to AI if they're repetitive. What you're going to be able to do as a student today is be able to figure out what is the AI solution or tool telling you now, how are you presenting that to your boss, to your clients, so you can actually add value. So I think the softer skills are going to become increasingly more valuable.
But don't you worry that the softer skills will take priority over understanding the technical stuff underneath? Because AI makes a lot of mistakes. And if you don't know enough about the topic, you're going to repeat the mistake and just focus on selling it to someone.
Well, to me, nothing about AI says you don't have to actually master your craft. You got to master your craft. Before you start having AI do underwriting, you must understand underwriting yourself. So you got to understand those as kind of like the entry point. But the question is, how do you take that further? After the AI produces output, you got to question it and then wrap a story around it and present it to a client, to a customer, to your boss. So I think it just merges those two together, giving you more time back, but it starts with mastering your craft.
So for your students, what are the skills that you think are important for them to learn as they think about maybe real estate as a career?
Yeah, I don't think that has changed. I think underwriting is still fundamental.
Okay.
Learning how to engage and network is still core. Now, the question is, you have more time and more tools to help you. How are you using excess tasks? Look, we're still in the client service business, most of us. Whether you're a private equity firm or a brokerage firm, you've got clients you've got to serve. Now, you've got more time to figure out their needs, their goals, and to try and satisfy those using new tools. It's just like Excel was when I was an analyst. Like, Excel is a great tool, but it doesn't replace me as an analyst. So I think you've got to figure out how do you take these tools and better sell your story and your product.
You mentioned underwriting. You've worked as both an investment banker and an investor. So is that a necessary backdrop in order to be able to be an effective professional in the real estate industry, to have that financial chops behind you?
Look, I think one of the great joys of real estate is there's so many ways to add value. Whether you're in property management or managed services, whether you're a broker, there's so many ways to add value and create wealth for yourself and your firms. I think you got to figure out what you love doing. What you love doing, you will do it more often. You will become better at it. So I don't think it's actually changed the ways in which you can add value. I think what it's doing is giving you back more time. Now, how are you using that time is going to be the differentiator between your success and lack of success.
30 seconds left, Cedric. Just give us a sense of what your students are asking you these days. What's on top of their mind?
Yeah, what is my career going to be, right? Okay. What are the tools that I'm going to be responsible for? Like, how am I going to differentiate myself in a world where there may be fewer jobs that are available? So I think they're asking the same questions you all are. What are the tools? How do I network? How do I achieve my long-term goals?
Yeah.
Cedric, thanks so much for joining us. Really appreciate it. Cedric Bobo, co-founder and CEO of Project Destin here in San Francisco. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just a moment here. We're in San Francisco. This is a great room here, great space to Julia Morgan. We know now about Julia Morgan, famed architect, disruptor. Just driving here, born in the 1870s here in San Francisco, designed 700 buildings. I think that's very cool.
And in 2026, we're talking AI, so the disruption theme continues.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Wednesday morning. Welcome to a special edition of Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. We are broadcasting live from the Eisner Amper West Coast Real Estate Summit here in San Francisco, California. We are speaking with senior real estate executives as well as investors, exploring the forces that are reshaping the commercial real estate industry and finding out where the opportunities lie. We're, of course, streaming live on YouTube as always and at Bloomberg.com/video. A lot coming up in this second hour of Bloomberg Intelligence. We'll be speaking with David Sternberg. He's Executive Vice President and Co-Head of Operations at Brookfield Properties, one of the biggest real estate owners and investors, to discuss San Francisco, the development landscape here. Ned Siegel, you might remember him as the CFO of Twitter long ago. Well, he is now the Chief of Housing and Economic Development for the city and county of San Francisco. Paul has been very impressed by everything he's seen in San Francisco since making your first trip back since 2019.
Yeah, exactly. And, I've been coming here since the early 90s, and it's just a great city, and it's really emblematic of AI and growth of AI and how that's impacting this great city.
We're also going to check in with David Steinbach. He is Global CIO at Hines on the AI impact on Hines, which, of course, is a real assets investment management firm. So a lot coming up in this next hour of Bloomberg Intelligence. First, let's send it back to New York and bring in Charlie Pellet for Bloomberg Business Flash.
Hi, thank you very much, Scarlett and Paul. Here's what's going on. We've got the Dow lower, the S&P, NASDAQ. They are both advancing right now. Stocks, however, are wavering. This as Wall Street assesses another hot inflation report. Right now, though, S&P 500 index best level of the day, higher by 12 points. That is a gain of 0.2%. Dow Industrials, however, in the red, down 267 right now, down 0.5%. The Dow being brought lower by IBM, Home Depot, and Salesforce. NASDAQ, meanwhile, up another 175 points. The NASDAQ Composite Index up by about 0.7%. Tech stocks rebounding. We've got the SOX surging 2.5% today. The Bloomberg Mag 7 index up now by 1.2%. All of this with the VIX just below 18. The 10-year 4.48%, the 2-year 4.00%, and the 30-year 5.04%. Spot gold, $46.85 the ounce, down 0.6%. And West Texas Intermediate crude, 103.04 a barrel, up by about 0.8%. Wholesale inflation, as measured by the Producer Price Index, accelerated in April to the fastest pace since 2022. PPI up 6% from a year ago, topping all estimates in a Bloomberg survey of economists. Reaction from Lindsay Piegza of Stifel Nicolaus.
It's very clear that consumers are already facing massive price pressures, but what's more concerning is this morning's report suggests that the brunt of the pain has not yet been felt, that further inflationary pressures are coming down the pipeline and are yet to be passed on to the consumers. We look out to the May and June data.
Lindsay Piegza of Stifel Nicolaus. Just getting word that crypto wallet provider Ledger has paused its IPO plans, citing market conditions, that according to CoinDesk. Recapping, stocks higher, energy advancing as well. West Texas Intermediate crude up now by 0.9%. Among oil majors, they are lower. ExxonMobil down 0.1%. Chevron lower by 0.6. ConocoPhillips down now by 1.1%. Back we go to the Eisner Amper West Coast Real Estate Summit in San Francisco with Paul Sweeney and Scarlett Fu.
All right, thank you so much, Charlie Pellet, with our Bloomberg Business Flash. Let's stay on the theme of what's happening in the markets and check in with Christina Aquino. She is our managing editor for Markets Live coverage in New York. And Christine, you're looking at some stocks on the move. What's your first one?
Absolutely, Scarlett. Let's start with Micron. Those shares are higher today, so ticker MU. Shares are now up more than 5%, so extending some of those opening gains. We know, of course, that Micron CEO Sanjay Mehrotra is among the executives part of the U.S. delegation to China for President Trump's summit with counterpart Xi Jinping. We did see Micron shares falling yesterday with a broad swath of chip stocks, more than 3%, so nice healthy rebound there today. And of course, we know that they have been roaring this year. Micron stock has been up 177% so far year to date. Reminder, we're only at May, and that follows on from a 239% increase in 2025. So really, the dip yesterday was really just a drop in the bucket there, Scar.
The first time I had Akamai pitched to me back in the late 90s, the analyst said, it's the plumbing of the internet. That's all you need to know. I said, okay, I'll buy it.
That's a good pitch.
Talk to us about Akamai today.
Absolutely, Paul. And yeah, I think it's still selling that itself now, though, as an AI plumber, so to speak. But yeah, Akamai's ticker AKAM, those shares are doing really well as well today, up now nearly 7%, so also extending some of those earlier gains. We've seen some upgrades today from Bank of America. They are now saying the company is a buy from an earlier rating of neutral. They've also raised the price target to $175 from $130 previously, so that implies a 17% increase from Tuesday's close. Analysts at BofA noting that, again, the company has shifted. It has morphed from a legacy delivery network, so a more traditional plumber, to now an AI plumber. They're calling it a credible AI infrastructure platform. And of course, earnings last week, we did know that the company was also announcing that a leading frontier AI model provider apparently had committed to a $1.8 billion deal over 7 years for Akamai's cloud infrastructure services.
All right, everyone's becoming an AI infrastructure company. Yes. I'm going to be an AI infrastructure company. Christine, last stock on your list.
Let's take a look at Trade Desk today, Scarlett. Ticker TTD. That is one stock that is not doing so well today, down 4.5% at the moment. It really has had a rough go since we saw earnings last week, where adjusted first quarter earnings missed expectations, and then second quarter forecasts were weaker than expected. Following on from that, we've seen a number of analysts downgrading the stock, both in terms of price target and its rating. Piper Sandler cutting the target to $24 from $28 previously, and HSBC cutting its rating to reduce from hold as well. So just to note, its current trading price at around $20. So a bunch of downgrades there for Trade Desk, not really helping shares today.
All right, Christine, thanks so much. Appreciate that. Bloomberg's Christine Aquino. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We got a pretty hot PPI data point here today, that's for sure. And that kind of goes on the backs of what we saw yesterday on the consumer level.
Yeah, but this was a lot worse than expected if you were looking for tame inflation.
Yeah, and all I know about PPI is it's kind of the canary in the coal mine. You start seeing some inflation there at the producer level. You're going to see it at the consumer level at some point. So let's check in with Ira Jersey, see what the Treasury market's thinking about this thing. Ira Jersey's a rates strategist for Bloomberg Intelligence back there in Princeton. Ira, what's your market telling you about the inflation picture out there?
Yeah, so near term, the market doesn't like the inflation picture, but interestingly, Paul, from the time that the PPI report came out, and sure, the headline was exceptionally hot, the Treasury market actually rallied a little bit. And I think one of the reasons for that is that when you look at all of the sectors within PPI, the ones that are really being affected are very energy related. And then a lot of the other sectors that are not being affected by higher energy prices quite as much are actually seeing, stable to maybe even a little bit lower prices. So, when you look at the hundreds of different items that are in the PPI and make that up, you can see a little bit of a balance. And then importantly, and this is something that, has gotten a lot more interest lately from investors, is the PCE components that were in PPI, the PPI report that came out today. They weren't much different than last month. So, they haven't really gone up. So the PPI report feed into the Fed's preferred measure of inflation was actually very muted.
Ira, I'm looking at the 30-year yield, and it is high. It's at 5.04%. That is the highest so far this year. And looking at the EcoGo function on the Bloomberg terminal, there's going to be a 30-year bond auction later on today. New issue 30-year bond auction for $25 billion. It's going to cost the government.
Yeah, it is, but this isn't particularly new, quite frankly. We've been hovering near 5% a few times, but this will be the first 5% coupon that we've gotten in quite a while. I know it's always funny when we say, oh, 5% so high in terms of 30-year yields. Paul and I remember when 30-year interest rates were 7-8% back in the 1990s. So it's not exactly like for some of us who have long memories and have a lot more gray hair these days, it's not particularly high. The economy can live with 5% 30-year yields and probably even 5% 10-year yields, quite frankly, as long as nominal growth continues to run so hot. And that's one of the reasons why we have inflation where it is, because the market's expectation is that we'll have somewhere around 2 to 2.5% inflation and then 2 to 2.5% real growth. So that means that you have nominal growth of around 5%, and longer term Treasury securities, 10-year and 30-year, are really driven by the combination of both inflation and growth. So as long as growth remains okay, you'd think that Treasury yields can stay here. Plus, we do have that supply story, and that's exactly what you were talking about, Scarlett. We do have 30-year bond coming today. It'd be the first 5% coupon in ages, and we're going to start to see this deficits continue to weigh a little bit on bond demand, just because we still have 1.5 to 1.8 trillion dollar deficits, as far as the eye can see, and so investors are going to have to take that into account when they think about at what price they want to buy these securities.
Ira, how does today's wholesale inflation report make things more difficult for incoming Fed Chair Kevin Warsh, who is supposed to get a final vote on the chair post pretty soon?
Yeah, so we do suspect that he'll wind up being the chair. I mean, he was passed as governor earlier this week, and we've always been thinking that Kevin Warsh coming in as chair, he's still just the loudest among equals in terms of the FOMC, and a lot of members of the Federal Open Market Committee, which is the policy rate setting body within the Fed. They're kind of neutral. There are a lot of them that are worried about inflation and inflation expectations becoming unanchored. So it's going to be very difficult for Kevin Warsh early on during his tenure to convince his fellow FOMC members to lower interest rates. So I think one of the interesting questions is, will he be the first Fed chair to dissent in many decades and basically vote against the rest of the committee? I suspect he won't, but there is the strongest possibility that he could do that. And if nothing else, maybe he does it once or twice just to make the point that he is a dove and wants to lower interest rates. But I think he'll make the case that, hey, I want to lower interest rates, but only if I could also lower the balance sheet at the same time. So therefore, he does a hawkish action in more quantitative tightening, but then a dovish action in lowering actual interest rates. And that's what he has expressed in the recent past, including in his testimony before the Senate Banking Committee.
That's called threading the needle.
Yes, it is. That is. We'll see if he can get that done. Ira Jersey, thank you so much, Ira Jersey. He's our U.S. interest rate strategist for Bloomberg Intelligence. He's also a resident soccer expert. Somehow he has acquired some World Cup tickets, so we'll
really
touch on that later.
I can't wait to talk to him about New Jersey Transit.
Yeah, I think he's going to do the Philly thing.
Okay,
that's what he's going to do.
Avoiding New Jersey Transit.
Yeah, we'll follow
Smart.
up on that later coming up. The President Trump is in Beijing, as is Tyler Kendall, Bloomberg Washington correspondent. She's in Beijing with the president. Tyler, thanks so much for joining us. I have no idea what time it is in Beijing. I'm saying it's late. I'll go with that. What is really the expectation from the U.S. contingent with this summit in Beijing, Tyler?
Well, Paul, at this point, our own analysts at Bloomberg Economics say that this is much more about stability in the U.S.-China relationship than it is about making substantial progress. Now, the White House has said that we should expect some deliverables, many of those related to trade. Perhaps we could see the announcement of a U.S.-China Board of Trade. That's something that we've heard about at this point for months, but that would essentially kick off a more formalized process to keep the dialogue open to increase trade between the U.S. and China when it comes to those goods not related to national security. Maybe we could get some Chinese purchase agreements and commitments when it comes to the agricultural space. The Cargill CEO is here in Beijing, also energy products. And then importantly, there's a lot of attention on whether or not we get that announcement relating to a Boeing order by China. That would be considered a pretty big deliverable for the Trump administration after what has been years of negotiations. Other than that, though, there's talk maybe we could get cooperation when it comes to artificial intelligence, a commitment to keep the dialogue open there. But it really feels like Iran is going to loom very large over this meeting between President Trump and Chinese President Xi Jinping tomorrow when they do meet face to face. We had a briefing with some senior administration officials ahead of coming over here to Asia, and they did make clear that the president is expected to push back on China's approach to Iran amid this conflict, considering that Beijing is the largest importer of Iranian crude. But at this point, this White House still maintains that it doesn't need help in ending the conflict in Iran, though we just saw the U.S. reject that latest proposal from Iran. So a lot of big questions still remain.
Absolutely. And it's something that President Trump has kind of urged China to step in and play a bigger role in reopening the Strait of Hormuz and pushing on its end when it comes to Iran. In terms of what is on the calendar, Tyler, it is late Wednesday night for you guys there. And there's going to be 2 days of talks. There's a lot to pack in. What's on the agenda on Thursday?
Scarlett, it's going to be a whirlwind 36 hours here for President Trump in Beijing. Perhaps most notably is that we are going to get tomorrow that face-to-face bilateral meeting between President Trump and Chinese President Xi Jinping. That is expected, of course, to happen behind closed doors. We'll have to see how long that lasts. We'll see if any of the events open up ultimately to the press, and President Trump takes questions about what sort of deliverables were discussed when the two meet. Then later tomorrow night, we will get that state banquet. Perhaps that is where we will start to see a little bit more of the CEOs that are here. Apple's Tim Cook, Elon Musk, of course, it's our understanding, are expected to attend that dinner. So there's still a lot to watch out for before President Trump ultimately departs on Friday. But really, we're going to have to see if whether or not any of these purchase agreements come forward, whether or not we get any sort of movement when it comes to tariffs. Keep in mind that the effective U.S. tariff rate on Chinese goods right now is still at 20.9%. There had been some reporting earlier by Reuters that maybe there could be some sort of agreement on exempting some $30 billion worth of products from tariffs between the two sides. We're still waiting on any details around an agreement there, but it's going to be a jam-packed visit for President Trump after we quite literally saw the red carpet rolled out when he touched down here in Beijing earlier today.
All right, Tyler Kendall, thank you so much. We appreciate that. Tyler Kendall, Bloomberg Washington correspondent. She is in Beijing, China, with President Trump. And I did see that President Trump getting off Air Force One and the red carpet, and that was pretty, with the children there and everything waving the flags.
Yeah, the
Pretty
synchronized greeting and everything. Tomorrow's going to be the big test to see if they actually do come out with any kind of public announcement on what they discussed.
I'm thinking soybeans. I mean, I'm thinking about the U.S. farmer could see, they would really like to see some longer-term concrete purchase commitments by the Chinese for soybeans and corn and wheat and all that kind of stuff.
And also purchases of Boeing jets, too.
Yes, yeah, and I think that's going to happen because from what I understand, they need the planes. You can't just rely upon Airbus. They're not going to get it done for you. All right, we got a lot more coming up here from the Eisner Amper Conference in San Francisco.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index trading at a record. This Bloomberg Business Flash is brought to you by Gold and Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k, tax and penalty free, Go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. S&P 500 index just about the high of the day right now, a record at 74.14 on the S&P, up by about 0.2%. Equities, though, under pressure as Wall Street assesses another hot inflation print against strong corporate profits from tech firms. The Dow down 265 right now, down 0.5%, but NASDAQ is advancing higher by another 0.7%. The NASDAQ 100 index up 0.5%, and the Bloomberg Mag 7 index up 1.4%. The SOX, the Philadelphia Stock Exchange's semiconductor index, up now by 2.2%. All of this with a VIX right around 18, a 10-year at 4.49%, the 2-year 4.00%, on the 4-year, the 30-year 5.04%. West Texas Intermediate Crude 102.90 a barrel, up 0.7. Barrel of Brent trading lower, down 0.3%, 107.41 for a barrel of Brent crude. Former high flyer GoPro says it has retained investment bank Houlihan Lokey to pursue strategic alternatives. Those alternatives include a possible sale or merger. GoPro shares trading lower now by 5.3%. And Mike Schumacher, global head of macro strategy at Wells Fargo Securities, is retiring following a 4-decade career of covering markets and the Federal Reserve. Recapping, S&P up 0.2%, trading right now at a record. Back we go to the Eisner-Amper West Coast Real Estate Summit in San Francisco. And once again, your hosts, Paul Sweeney and Scarlett Fu.
All right, good stuff. Thank you so much, Charlie Pellet in New York with our Bloomberg Business Flash. We are on the West Coast in San Francisco, and that means we're also keeping an eye on tech earnings because it's not over yet.
Nope.
You would have thought with the big tech names, NVIDIA has not yet reported. Cisco, which is a name from prior boom cycles in San Francisco, is also reporting today after the close. So I want to bring in Woo-Jin Ho. He is, of course, our senior hardware and networking analyst in Princeton to kind of talk us through what we can expect. And Woo-Jin, Cisco definitely a beneficiary from AI data center spending, isn't it?
Oh, yeah. Thanks, Scarlett. Look, where you're going to see the upside here is going to be AI. When they printed last quarter, I thought their guidance for the third quarter as well as for the year was somewhat conservative. And you're going to see modest upside for the quarter, and I think they're going to raise for the fourth quarter as well. So, they are in the middle of this AI boom, as you said.
Boy, how about this red headline, Scarlet crossing the Bloomberg terminal. ARM and SoftBank said to have tried to buy Cerberus, but were rebuffed.
Wait, this is the company that's going to go public?
Pricing today.
And they were just going to swoop in and try to take it out?
That's what you do sometimes. You let the market set a value, and then you come in if you think you can buy it and say, I'll take you out at that valuation.
Some people might say this is a sign of a frothy market.
That's a great point. That's a great
Some
point.
people.
Yeah. As a former banker, I just thought it was a great opportunity. All right, Cisco here. $400 billion market cap. Stock's up 30% year to date. That's a 52-week high, and I'm going to say that's an all-time high. So, Wooj, what's the call here? What's the bull case here longer term for Cisco?
Yeah. So, what I think investors are coming around to is that Cisco's AI presence is a lot stronger than people have anticipated. One of the areas of networking that has benefited from the AI spending has been optics, and Cisco is a number 1 or 2 player in optical transceivers. And even though it's small relative to Cisco's overall sales, we've seen that revenue from AI grow from like 1%, and they're probably going to be about 5% of total sales this year and be a bigger proportion of sales for fiscal 2027.
One thing that we've seen this earnings season is a lot of tech companies, especially hardware companies, are facing the costs of higher component parts like memory chips. What does that mean for Cisco's expense line, Woo-Jin?
Yeah, look, and that's a very good point, Scarlett. They have a server business, and they did start seeing the gross margin erosion into the third quarter guidance. They did start to raise prices, but it might take a couple of quarters for the pricing actions to help offset the component costs. Now, the question, and I've actually been beaten up by a lot of investors over the last couple of days, is is this going to be an elongated cost pressure for Cisco as well as other hardware makers, and I don't think so. I do think that the Cisco has a lot of wiggle room to at least limit the downside on the gross margin and then manage it going forward.
Wooj, what is Splunk and why is it important to the Cisco call here?
Splunk is Cisco's biggest software acquisition to date, and they have it's a software company that provides observability into the network and how network is trafficked inside and outside of the data center. This is actually a key piece to not only Cisco's growth story, but also to the margin story. Now, what we're starting to better understand, and investors are starting to better understand, is that it offers security as well as a better understanding how network is trafficked in the AI era. So, it has underperformed over the past couple of quarters, but I do think that Cisco, the Splunk deal is going to be a key part of the growth story in 27 and 28. It is a mid-teens grower over the long term, but we haven't seen that happen yet.
All right, Woojin, thank you so much. Woojin Ho giving us a preview of Cisco, which will be reporting earnings after the close today. He is our senior hardware and networking analyst in Princeton. And of course, Paul and I are not in New York today. We are in San Francisco. We're broadcasting live from the Julia Morgan Ballroom here at Eisner Amper's West Coast Real Estate Summit, where we are talking with investors and senior real estate executives on the opportunities in commercial real estate and the forces, namely AI, that's reshaping this sector. So I'm really thrilled to bring in right now David Sternberg. He is the head of asset management for the West. He is based in San Francisco. He covers the office sector, and Paul and I are staying downtown here in San Francisco, and there's a lot more foot traffic around here than I remember in the past.
Yeah, it's great. I'm staying at the Four Seasons Embarcadero. That used to be I haven't stayed in that thing in 20 years because it was never on our approved list. But now it's back, so I'm digging that.
Yeah, the approved list has to go up too because the prices here are just going sky high as well. David joins us right now. Great to see you, David.
Good to see you too.
So let's just start off with big picture because it really feels like San Francisco is revitalized. You take care of the office sector. People are back at work in the city, aren't they?
People are back, and a lot of it has been driven, as you've been talking about, by AI. Just since 2023, they've taken about 6 million, just under 6 million square feet in the Bay Area. So that's brought people. The other thing that the AI sector has done is they are in the office, and they are in the office minimum 3-5 days a week, and so that has inspired others to say, okay, we need to be back in the office. This is the sector that's hiring. This is the sector that's growing. And they've said, we need the collaboration. We want you in. And they're in. I mean, I run into these people all the time, and there isn't this pushback. So that has really been a big stimulus to what you're seeing on the street.
David, just give some perspective to our listeners and viewers. What was like the vacancy rate in San Francisco office pre-pandemic, then maybe at the low, and then where we are today?
Well, pre-pandemic, we were, you would say, someone would say on respectable space, we were like 5%.
Okay.
Post-pandemic, we were mid to high 30s.
Wow.
Yeah. It was significant, and we are just kind of at the place we're beginning to recover. No doubt, we have bottom where some markets maybe can't really say that time, as I cover all the Western markets for office for Brookfield. But I definitely would say San Francisco and the Bay Area is definitely, that situation is coming back, and we're seeing vacancies drop again. AI is the big story, but others are ancillary businesses are growing as well.
Talk about the ancillary businesses. I mean, aside from AI, where else are you seeing signs of life emerging?
Not directly AI, but they'll say they're AI for fundraising.
Sure.
Software groups that aren't technically AI, but are supporting. And then some of the financial services groups that need them, that have been kind of like stabilized and so forth, mostly in the legal. You're seeing them beginning to grow and taking a bit more space as well.
Again, Bloomberg's offices are here down in the Embarcadero. That's kind of where I kind of hang mostly. Talk to us about other parts of the city, because there's so many other areas of the city. It's such a diverse city. Talk to us about this place.
Oh, Mission Bay has become really a dynamic neighborhood that just post-pandemic has grown. For one of the developments, I personally can't take credit for that, but my hat's off and salute to Tishman and the San Francisco Giants organization for what they built around Oracle Park. Now, we have a really exciting development that's down at Pier 70. We just leased up one of our buildings there that opened. It has just such a creative name, Building 12. Yeah. but is now fully leased, and it's a large acreage site along the water, and we're now at the point where we think we may be able to break ground in a few of the buildings on that site and for the Dog Patch neighborhood. So that part, that's what it's called.
I love it.
But that part of the city along the water is really growing. There's a lot of residential and so forth.
David, what about cities outside of San Francisco, in LA, for instance, or in Seattle? Are they also seeing a similar upswing?
I'd rather not talk about our downtown LA, some of the challenges there. No, not directly there. We personally, and myself, and I'll be there tomorrow, will be in the Seattle Bellevue area. We have office investments in Bellevue.
But Bellevue is not downtown Seattle.
It is not, so that's why I said Bellevue. That's why I said our investments are in Bellevue. And we're feeling very good about that. It's not the same place that San Francisco is right now, but it's stabilizing, and we're seeing demand brewing there.
All right, as a former banker, I have to ask this question. You've got 30 seconds.
Okay.
Can you raise capital? Talk to us about the capital markets for your properties.
San Francisco Bay Area, yes.
Okay.
You asked for a short answer. Yes, we ourselves are bullish. We're seeing it from investments in here.
The banks are lending, the private credit markets?
The properties here we still believe are not, were significantly discounted from where they were. Now we have ways to go, but we're finding the values attractive where they're at, and things are very competitive. It's hard to find good office to acquire right now. It's challenging here in San Francisco. It's back, and I don't know if you're speaking later, but it's a meeting of things. The business community is back, and we're also, which is really nice and encouraging, we're supported by the political city government support.
David, awesome stuff. Appreciate it. David Sternberg, he's Executive Vice President, Co-Head of Operations at Brookfield Properties. They got a nice place out there. The Bloomberg head offices in L.A., right by the Brookfield place there. And they took over the World Financial Center. It's now Brookfield place down when I used to work at the World Financial Center. I get corrected all the time. It's not World Financial Center. It's Brookfield Place or whatever. So they're everywhere, these guys. So we appreciate getting a few minutes there. We're going to have more coming up from San Francisco. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 index at a record. This Bloomberg Business Flash is brought to you by Chapter. The average couple spends over $300,000 on healthcare in retirement. Want to know how much of that you could keep? Find out today in under 20 minutes with one free call to Chapter. Go to askchapter.org to get started. A research